See, I would keep the two separate. I think for the larger banks, it would be HDFC, Axis, and then ICICI. We strongly prefer the private sector over the public sector banks. We believe that the earnings growth for the private sector banks will once again come out to be superior to the public sector banks after a 2.5 years gap. So that's our preference. On the payment side, Paytm I think is still cheap. If the regulatory uncertainty lifts, I think what we need to see is the regulatory action seems to be done. We need to wait and see where the full impact of all these actions, the loss of wallet, the shift to the third party, the other banks for payments, the entire net impact of that is still uncertain. So I think once there is clarity there, we could see some upside. But remember, it's not the same type of risk or returns as you would see with banks. So I would almost classify it in a very different bucket altogether.
Okay. Pranav, you track banks closely. Do you also cover non-lending financials by any chance?
Yes, I do look at them. I don't track them, cover them officially.
Okay. But okay, if you just have a broad view, and if you do, again, it's okay if you don't, please tell us so. But if you broadly do, the capital market plays in the non-lending pocket, is that something that is looking attractive from, let's say, a longer term perspective? There has been a sharp rally out there. People are penciling in multiple years of growth. Do you second that?
See, I think, so there are two parts to it. So the longer term, I think there is clearly the space is attractive and could have multiple winners, and therefore there is this optimism which is set in. That is one on the longer term. I think the shorter term, from my conversations, a bit more interesting because there is an expectations of an earnings reset for the banking space because the NIMs are higher, so everybody expects a rate cut, some repricing. So if you look at the consensus estimates for next year, the EPS growth is quite moderate across banks, whereas for some of these capital market players and the non-lenders, those expectations are a lot healthier. So even from a short-term perspective, there is therefore some interest to look at non-banks. So that's something we hear across conversations, but don't look at the individuals' names to make a strong comment there.
Right. Thanks, Pranav. It's always good having you on the show. Your perspective is much appreciated and valued for us and our viewers. In the meantime, the markets are trading largely flat. It is Kotak that's taking the cake this morning, down 10%. HUL reported numbers, LTI reported numbers. Those stocks are also seeing a little bit of movement, but nothing as compared to the cuts that we're seeing on Kotak. LTI is down marginally, down about 2%. You've also got a little bit of a cut coming in on, if we can get HUL up, that should be helpful. Along with that, Vodafone Idea has also reversed some of its morning losses. The stock had opened down at the 2% cut, now trading fairly flat. We'll take a break. We'll come back following a successful 18,000 crore rupees FPO listing. What is the road ahead for Vodafone Idea? Here's what Kumar Mangalam Balla had to say.
I think the big one now is to, spend the money on capex. The three big parts of that is to increase the size of the network. The second is to, densify the network in areas that we are present. And third, of course, is implementing 5G selectively across the network. So that's a task cut out for us. I think that we're very happy. This is a new life for Vodafone Idea. And we look forward to being an outstanding service provider to our customers.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God.
The power of India lies in the strength of its people. Our forefathers fought for every individual to have a voice and to use that voice to shape the future of our country. So voting day is not a holiday from work. It is a day we must answer our call to duty as citizens of India. I, Ajay Bijli, pledge to encourage my entire team at PVR Inox, their families and friends, and the larger business community to vote, because this is the true power of Indian democracy.
Right, pleasure is mine to bring on board Mr. P.N. Vasudevan to, for a conversation around the Q4 numbers of Equitas Small Finance Bank. Good morning, Mr. Vasudevan. Welcome to NDTV Profit.
Good morning.
So, sir, just want to try and understand with regard to what's happening on the margin front. Your yields, when I'm looking at it, not going up significantly, in fact, staying pretty much flat. Cost of funds continues to rise. Margins, would you say, have now bottomed?
Yeah. So if you see our disbursement yield, it's actually gone up by almost 1% in FY24 compared to FY23. And if you see the disbursement yield between the third and the fourth quarter, it's remaining steady at about 18.75%. The disbursement yield is steady between the third and the fourth quarter. Now, if you come down to the yield on gross advances, when I say gross advance, I'm kind of taking in the securitized book also. When you look at the gross advances book, the yield for the fourth quarter compared to the third quarter has come down by about nearly 9 to 10 basis points. And if you look at my interest cost, that's actually gone up by a similar 8 to 9% basis points between the third and the fourth quarter. So that's the reason why you see the NIM also dropping between the third and the fourth quarter. The fourth quarter NIM was about 8.16%. That's the exit NIM that we had for the fourth quarter. The other impact on the NIM, of course, we all know is the CD ratio. And, we had a 100% CD ratio in the beginning of FY24. And by end of FY24, we actually managed to bring it down all the way to about 87%. So there's a lot of work that we did on the CD ratio, which is basically that we raised extra deposits and put it into investments to help improve the CD ratio. But of course, that has a collateral impact on the NIMs. So going forward, the question you asked in terms of whether the NIM has got bottomed out, I would say that the CD ratio, we still want to bring it down to about 85% by March 25, which is another 2% that we want to reduce over the next 12 months. So it may not have a dramatic impact on NIM any longer. And in terms of our interest cost of funds, we know it's at 7.44 as of March 24. And we expect that most of our old deposits have got matured and repriced at the new rates. We still have a little bit of old deposits which are left to be maturing and repricing. So we expect another about 10 basis points increase in our cost of funds over the next 1 to 2 quarters. That should play out. But in terms of our yield on advances, because we have been improving our yield on the disbursement, and there is a lag time before it gets reflected on the advances. So we expect a little bit of the advance yield to start moving up because of the lag impact of our disbursement on yield, yield on disbursement. So a combination of all three put together, CD ratio, not much of change required any longer, interest cost going up marginally by 10 basis over the next 2 quarters, and the fact that our yield on advances will have a lag effect, positive lag effect. I think on a combination basis, we expect that our NIM should remain reasonably steady. We are at 8.16, so I think it'll be between 8.1 to 8.15 for the rest of the year.
Excellent. That's extremely comprehensive. Thank you so much. I want to try and understand a sustainability of the deposit growth, because a 43% is extremely strong. You've obviously showed up on that deposit base in FY24. How does it go in FY25 on a higher base?
So last year, we had to raise a higher level of deposit because that's the way we could decrease our CD ratio. But that is not a major requirement going forward. We should be looking at about a 25% growth in advances for FY25. And to support a 25% growth, we need a deposit growth of anywhere in the range of 32 to 34%, which will help take care of the SLR CRR requirements and keep the CD ratio steady. So somewhere around 32, 33% deposit growth is what we would be looking for in FY25.
Sure. Thank you for that. I want to try and understand what is happening on the loan mix front. 25% growth that you are guiding for in FY24. Does the mix change in any way, and what part of your book is unsecured? If you can just give us that metric.
So currently, microfinance is our only unsecured book, and that contributes about 18% of the assets, advances, and balance 82% are secured loans. We have a board-approved long-term strategy, as part of which we have pegged or capped the unsecured portion of the bank's portfolio at about 20%. So we don't expect at any point in time the unsecured book to go beyond 20%. We are introducing personal loans in this quarter, and credit card should come up in the third quarter of this financial year. So when these two come in and they start contributing over a period of time, microfinance portfolio will be adjusted to ensure that all three put together do not exceed 20%. In terms of portfolio mix, there will be a shift between microfinance, personal loan, credit card, as I said, over the next 2 to 3 years. But minus that, more or less, we are fairly where we want to be in terms of our product mix. So I don't think that there will be too dramatic a shift outside of this over the next 2-3 years.
Sure, sir. So I want to circle back to margins, and I'll ask you why. There's likely been a topping of rates. Once the rate cut starts, does the margin change in any way? I just want to throw perspective on that, because may not be likely in FY25. People are now putting that at FY26, analysts, I believe. But nonetheless, what is your fixed rated book versus floating? Just give us perspective on whether margins have an upside potential or not, just from a rate change perspective.
Yeah, actually, we are almost 85% fixed rate loan book bank. So that's a very high level of fixed rate loans for a bank. And that's largely because we deal with a very low income profile of borrowers, and where it's very difficult to explain to them the floating rate concept. So mostly 85% is a fixed rate loan. Because of that, we actually had a very strong negative impact on our yield and NIMs over the last 12 months when the interest rates were going up. This year, assuming that interest rates will remain steady, the market interest rates will remain steady, we should see our NIM also stabilizing. And at some point in time in the future, if the interest rates in the market actually start dropping, that's the time when we should actually see a positive impact on our NIM, because as I mentioned, 85% being fixed, we'll have the reverse impact of what we had last year.
Sure, sir. And okay, so that's with regard to top line. I want to quickly switch over to asset quality. GNPAs have crept up a wee bit when I'm looking at it sequentially. What explains that, and where should it be at steady state? Of course, benign asset quality environment at the moment.
Yeah, see, our pre-COVID GNPA used to be 2.5 to 2.6%, and we are practically back to that level. So I believe that our portfolio has matured since the pandemic, and we are now practically at what is a sustainable steady state basis. And if you look at our GNPA between the third and the fourth quarter, the third quarter GNPA was 2.39%, and it was moved to 2.52%. That's almost 13 basis points increase. But we also did a securitization in the fourth quarter. If you kind of adjust for that securitization, then our, the GNPA would come down to 2.39%. So practically where it used to be in the third quarter. So the securitized impact was that 13 basis points in terms of GNPA.
Understood. So very quickly, with regard to OPEX to assets remains quite elevated, 6%. Do you expect that to continue going forward? That's one. And ROAs have slipped below 2%. Is that at all a concern, or is that just possibly a quarterly problem and will repair itself in FY25?
Yeah. So the
OPEX to assets and ROA.
Yeah. OPEX to assets, see, we will continue to have some level of expenses being incurred by the bank. We are not really looking to cut cost and save on expenses at this point in time, because we still have a lot of building of the bank to be done for the next 3-4 years. As we have mentioned in our presentation, also investor presentation also, we are looking to invest in people, product and technology. In terms of personal loans, credit cards, AD1 business, and the customer loan app that we have just launched in April, right? So we are looking to invest about 520 crores over a 3-year period on these 4 initiatives, which will keep our cost at the current level. So I don't think our cost as a percentage will really go down in the short term. But in terms of ROA, we are at 1.99% for the full year FY24. And yes, I think we should be able to hold our ROA very close to the 2% level, because we see that the NIM should become steady. As I mentioned earlier, we should see a steady state NIM for the rest of the year, and that should really help us maintaining the bottom line ratios also.
Understood. Thank you so much, Mr. Vasudevan, for all of that perspective. ROAs, mind you, slipping below 2, something to look out for. But thank you so much, Mr. Vasudevan. It's been a pleasure speaking with you.
Thank you.
Well, with that, it's back to you in the studio.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively.
to NDTV Profit. We have with us a very special guest, Sunil D'Souza, CEO of Tata Consumers, now joining in. Mr. D'Souza, thank you very much. Thanks a ton for joining us today on the show. Firstly, congratulations. FY25 is behind us. You've managed to pull out quite a good quarter. A couple of areas that we'd like you to start with. Firstly, of course, comment on the quarter behind us. Revenue was largely in line with street expectations. Margins have seen an uptick. International business is finally picking up. And you've got those substantial acquisitions as well now behind you.
Yeah, so thanks for having me on the show. And yes, we had a pretty decent quarter and a good end to the year. 9% top line, 22% EBITDA, profit before tax, before exceptionals, plus 46. I think what the reported numbers would be net of we had a stamp duty on account of the merger with Tata Coffee and some prudent provisions that we took for underutilized assets as well as a financial instrument. Other than that, like you said, I mean, all businesses on growth. That's pleasing to see. We've had 2 months of Capital Foods. With that, the foods business is powering ahead with a 20% top line growth. International, we've always said it should be margin should be accretive to the India business, and they've come to the party now. Very strong numbers. Canada was always strong. UK very strong numbers. US is also turning around the corner. Strong growth in our growth businesses in India. Most importantly, our EBITDA margins for the quarter came in at 16.1%, which was pleasing. We've always, last quarter we said our new benchmark is 15 plus, and this quarter we delivered more than that. The good part was we've reduced working capital. Cash has grown at 27% versus last year. Cash as a percentage of EBITDA is 101%. So we reduced working capital substantially. ROC 280 bips ahead of last year. Strategically, shares more or less on track. Outlets now 4 million. Innovation firing well, 5% plus. Costs well within control. Distribution expansion on track. So all in all, a pretty decent quarter.
It's pretty holistic in that sense. I want to start with one area that we were trying to understand. And, when you talk consumption, we're all asking the big question, is there a concern or is there worry when you talk about rural consumption picking up? Now, while the numbers for you look in line with what you'd set out for yourself at the start of FY24, like-for-like volume growth is not firing up. And this is not, of course, only for you, but as a market leader, give me a sense of when we can see that. What's happening on the beverages piece? What's happening on rural volume growth? Are you feeling there's a little bit of pressure, or getting into FY25, we should see a substantial pickup?
So let me separate it out into two pieces, right? One is a specific category point and one is the whole rural point. And the reason I'm separating it out is because for salt, for example, we've always guided for a short to medium term growth of 5% in terms of volume and a couple of bips on top of that in value. And this quarter we came in at 4. So salt broadly back on track. Beverages under a little bit of pressure on the volume, but there's also a base effect and multiple other factors playing in. We've seen value growth come in. So I'm sure with the actions that we put in, beverages will come into growth. We were at a 3%. So it's not that this quarter is a continuing string. We were seeing a 3% volume growth. It's only this quarter that it's coming at a flat. On rural per se, I hear the general chatter about FMCGs, rural, etc. But just like to point out that Tata Consumer is in a different place. We were always under-indexed on rural. And one of the things we've gone about is expanding distribution in rural. We've just appointed 1,000 plus distributors in the last 1 year. So effectively 3 distributors per working day, if I may, and 1,800 salespeople. This is to expand distribution down the pop strata as well as expanding bandwidth at the front end in metros. Now, when I break down our numbers, for us, rural growth is 8 and urban growth is 8 in India. In fact, in metros, we've grown at 6 and 50,000 to 1 lakh population towns where we've appointed distributors has grown as 9. So for us, it's a different story. Overall, I do think rural is coming back. I would think another quarter or so, you'll see it coming back strongly. But for overall Tata Consumer, my opportunity is in expanding my distribution and share in rural. That's where we stand.
That's interesting. Well, looking ahead, what is the sort of guidance you're setting out for yourself and for the company for FY25, especially given that there would be complete integration of the recent acquisitions made and revenue accretive 100%, I'd imagine.
Yeah, so effectively, I think we've always said we'll target double-digit growth and EBITDA ahead of our top line. I would say first starting with EBITDA margins, I think we said 15% is now the base and we'll grow above that. That's number one. Number two, on the top lines, obviously now with Organic India being completed just recently, Capital Foods, about 2 months of integration and more or less integration almost complete. Now it boils down to value creation and growth. Earlier, we used to have a growth business classified as ready to drink, Sampann and Soulful, and we had guided for a 20%, contributing to 20% of my portfolio growing at 30. With Organic India Capital Foods coming in, we are now guiding for 30% of the portfolio, which is growth businesses growing at 30. On beverages and salt, which is the core business, I would say broadly, we're saying mid-single digit volume and a couple of bips on that on value. On salt, we've already delivered that similar number this quarter. Beverages, we're confident that we will come to that in FY25. And international, we've always said mid-single digit top line and EBITDA margins ahead of India.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. It's a bit of a truncated edition, but we'll try and get the best out of somebody who's a markets veteran, runs the equity portfolio at Bandhan AMC. Manish Gunwani needs no introduction. Manish, great having you. Thanks for taking the time out. Manish, at the outset, just trying to understand, is this market surprising you as well? Because it seems to be climbing every single wall of worry, be it local or be it global. I can count 7 instances in the last 9 months wherein everybody's called that this is a top, the markets correct a little bit and then tend to bounce back very, very smoothly.
Yeah, I think last 1 month in particular has been surprising given that we had a correction in March based on regulator statement, and globally also, if you see the whole thesis of interest rates coming down globally, that has broadly gone for a toss. So the US 10-year yields are back to where they were probably 3-4 months back. See, we felt that the Indian macro, obviously, both on a relative sense versus other emerging markets, and in absolute terms, in terms of what has been happening to India's current account, which we felt was leading to Indian currency outperforming massively versus other currencies, this would lead to a liquidity flow, and which is why we've been relatively more constructive on small caps with a medium to long term view. But yes, the pace of the last 1 month has been quite strong. And clearly, in terms of pockets of value, you're running out of ideas you can buy comfortably, right? So the other thing about this market is also that whatever's performing continues to perform, and whatever's not performing doesn't turn around, right? So whether it is power, real estate, capital markets, autos, that has continued to perform month after month, and IT, private banks, that is still struggling month after month. So the polarization in valuation is obviously increasing. Now you can obviously say that this is a cycle, and a lot of these segments had done badly for many years before this bull run. So yeah, it is a bit of a challenge now how to get ideas to put fresh money in. There's no doubt about that. But at the same time, we are seeing a lot of change across the world in terms of technology, in terms of policy. And I think you have to work hard to get those niches where you think India is heading, where the world is heading. Find those niches. They're not very big sectors which will grow very fast to my mind, which is why I think selectively small caps with a medium to long term view is still where I think the alpha will be there. But yeah, the number of stocks that look attractive obviously going down as the market heats up.
Yeah, can imagine. I'm going to ask you where is India heading, as you said, but just before that, actually, let me start with that and then move on to the hot topic, which is telecom as well. But you mentioned that the idea to build a portfolio is to try and figure out where is the world heading and where is India heading. Where is India heading?
So India, I think, is obviously relatively very strong in terms of growth. I think, as I said, one of the key reasons for us to be positive relatively on the small cap space is the fact that India, after 30-40 years of running current account virtually to our mind, on a structural basis is zero current account, or may turn positive also in 3-4 years, hopefully. And that obviously will draw in a lot of capital from, it need not be only FI equity. So FI equity probably is one part. But you have debt, you have FDI, you have NRIs buying real estate, you have NRIs putting in fixed deposit or whatever. So there are various ways foreign capital will come in, which is clear. If you see RBI's forex reserves also have been very strong, given that dollars appreciated and US yields have gone up. So on a mark-to-market basis, the forex reserve should have not done well, but they've done well, which means their flows are quite strong. So my point is this, that one is India, I think, will get a lot of liquidity in medium to long term from the global capital pool. Second is that given our base, given whatever policies are there, we should continue to grow anywhere between 5.5 to 7.5. I don't think when global growth is going to be tepid, we can grow much beyond that. And our view is also that global growth is going to be tepid for the next 5-10 years, purely because of demographics and debt. Now, in that scenario, India, because it is domestic driven, not very dependent on commodities, relatively will stand out. The other thing is, and again, this is specific to India in intensity, but I also think that it's probably happening globally, is that there is a reshoring that is happening in a lot of industries where countries in terms of strategic industries like semiconductors or defense or various other manufacturing segments. It could be steel, it could be a lot of other things. Countries are trying to reduce their dependence on external supply chains. This is a kind of reversal again after 25, 30 years. So that is why I say that there is so much change, whether it's technology, whether these shifts in reshoring, shift away from China sourcing. So unlikely that a lot of these changes will be captured in very large companies.
Okay. And Manish, the other aspect is, from things that are becoming really hot, I want to also talk about something newsy, right? And telecom is firmly in the thick of things. I'm just trying to think of whether you believe, I mean, it's maybe not a very large sector, but large enough representation nevertheless. Do you think that the next 3, 4, 5 years will be different from what the preceding 5 years have been for telecom, which has largely been a two-player market with a third player struggling, to maybe now, because of this Vodafone NFO, or rather the Vodafone FPO rather, and success might make it a strong 2.5 player market, if you will?
Yeah, I think one is the number of players, and second is the pricing level, or let's say the profitability of the industry. What is the return on equity or operating margin it stabilizes at? I think the recent run-up in valuations is predicting that if the third player gets capitalized, it will not be just enough the external capital, but there needs to be a step shift in profitability of the industry, where there will be a lot of tariff hikes, and the third player also may reach a point where it is stable. For that, I think you need significant pricing improvement in that industry. So I think investors are taking a bet that their pricing action will come through. I'm not neither very underweight nor overweight, because these are very, very difficult decisions to predict. Good part is in the current market context where valuations are high, it is a good defensive sector, that it is an essential item. No one's going to decrease its usage if economy turns down or if interest rates go up. So it is a defensive sector. Free cash flow yields if you assume these tariff hikes come through, are reasonably good. But again, it's not a high growth sector. I mean, every citizen in the country broadly has a phone in his or her hands, and therefore the penetration levels are high. So to me, it's not a very high conviction bet either way. I would hesitate to be very bullish or very bearish the sector at this point.
Got it. Okay. Manish, just one final question really before we take the break, and that is on this near consensus view around financials and growth and how economy grows. And then there are people who give me these opposing forces that bank credit growth or other capex need not be a correct determinant of bank credit growth, because a lot of companies which are doing capex are not necessarily going for that whole amount to banks the way they did in 2003-04. I'm just trying to understand, are you constructive financials, not just relative to the index weightage, but in general? I mean, if you had a choice, would you be grossly underweight financials?
Yeah, most of the banks I am not so excited, or rather I would say that need to see how this CASA thing plays out. See, one is the bank credit growth, and I'm also of the view that banking system is not a great play on capex, because if you see most of the banks today, especially the private banks, which are the big weights in the index, 60 to 65% book is retail, right? And even the other part, there's a lot of agri and SME and all that. So you're not going to play power or other kinds of capex through banks. And best part of credit cost is already priced in. So you can't take the view that, look, oh, I think the economy is going to do great. In a great economy, credit cost fall a lot because most of the companies or individuals are doing well. But the thing is that is already priced in because the credit cost is at multi-decade low. So incrementally, you can't play banks for improvement in credit cost or as capex plays. What you need to see is, first of all, if you believe credit growth will accelerate up from 13-14%, which I don't see any reason why it will. And more importantly, I think you need to see CASA growth, because ultimately the reason you own a bank versus an NBFC is purely because of the deposit franchise. And right now, the jury is out whether you're seeing a cyclical slowdown in CASA because interest rates are high, so people are moving to term deposit rates, or stock markets are healthy, so people are putting money in SIPs and all that. But it could be structural as well, because at one level, CASA is inefficient money, right? I mean, you're basically putting money in an account for transactions, which doesn't earn you much. Now, because of technology, because of financial literacy, if you believe that there is more efficiency in the system, because of which CASA is not going well, then I think there is no hurry to buy a lot of banks.
Got it. Okay. Manish, thanks for that update and really appreciate you giving us a sense of the market. Viewers, stay back. We'll be right back with Talking Point. Don't go anywhere.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies.
Welcome back to Talking Point. Focus now on Indian hotels. Their numbers are out for Q4 and looks good, in line on the face of it. Slightly lower than Bloomberg's estimates, but revenues up 17% to 1,905 crores. EBITDA up 23%. Margins have grown at 167 basis points, and net profit looks quite healthy at 29%. Puneet Chhatwal, Managing Director and CEO, Alpha IHCL, is with us now on the show. Mr. Chhatwal, thank you for speaking with us here at NDTV Profit. Let me understand what has worked this quarter and what perhaps has not, because ARRs have grown well at 4%, but slightly below the levels that we've been seeing so far.
Not really. Ours is, firstly, thank you for having me and good morning. Ours is a bit of a seasonal business. So Q3 is always the best quarter and will remain in the foreseeable future. Q4 is the second best quarter. And as the base keeps increasing, the percentage rise will start declining, because just imagine coming out of COVID, where we had almost nothing. We started showing growth in like triple digits, and then it went to high double digits, and at some point of time it has to come back to single digit. Important is to look at the CAGR of last 5-6 years. And if we looked at that, then we are showing and demonstrating both as a sector as well as our company a very high and a very healthy growth.
What is the sort of outlook you see or a sustainable growth trajectory for ARRs? I know that there's no guidance that has come in for Q1 FY25. I'm wondering why, and overall what the outlook is, any kind of perspective that you can provide?
We have kind of held back a guidance just on ARR. So we have given in our press release a guidance and also to the investor community of a double-digit growth in the top line for the next financial year. And that is very good because, as I said, the base is large. And why not just on ARR? Because only 50% of our total reported revenue comes from rooms business. We are still, enjoying very healthy growth on the food and beverage side, on the wedding business, with the Prime Minister's appeal of Wed in India and spiritual tourism. So there is a lot of that kind of impact that is important in the top line growth. On top of that, we have a very strong not like-for-like growth. So last financial year, we opened 20 hotels. This year, we have guided to open 25. And all these new hotels that come in, they start at a lower average rate or occupancy because it just takes 2, 3, 4 years to ramp up any business. So giving a guidance on a high growth company on just ARR or occupancy is not, in our opinion, a very intelligent way of providing such inputs.
Okay, so ARR has been held off because you have a lot of new properties which need to ramp up. Understood. Let's just talk a bit about capex. And when we spoke last quarter, Mr. Chatwal, the focus was a lot on saving costs, cutting costs, operational costs, and that had worked. Is that leg going to continue in conjunction? Can you give us your outlook on the kind of capex that you will see in the next financial year?
The channel is not that old, but it seems like long time ago that I said on cost optimization. We all did that during COVID. So maybe that was a conversation you and I had. But on this channel, I would say that it's very good that all of us have learned to be more diligent with the costs. And that opportunity COVID gave us once in 100 years to relook at every cost. And it would be prudent to maintain that kind of cost base and take out the unnecessary costs that nobody wanted. Neither the customers wanted nor other stakeholders wanted. Our focus has been definitely growing new businesses, which we have grown at 35% last financial. Going forward, we have given a CAGR of 30% and keep also the growth at a very healthy level in our traditional business, especially our backbone with the Taj portfolio. And we are investing heavily in CapEx. Our guidance is around 3,500 crore in a 5-year period, of which 2 years have gone by with already more than 1,000 spent, another 2,500 to go, both in selective greenfield as well as upgradation of our iconic assets and building some of the competitive advantages on the digital front, on our private membership club like Chambers, etc. So all that guidance we've given, we are very much in line with it. And we will continue to pursue this aggressively unless another event happens that we are not aware of at this point of time.
Let's talk a bit about Ginger. A lot of focus there. It's been relaunched in a new avatar. It's an upscale offering. What is the focus and outlook for Ginger and the kind of contributions it will have to your revenues?
Well, Ginger, we are very proud of the launch of the Ginger Mumbai Airport, which is the flagship Ginger. That's number one. Number two, 75% of the Ginger portfolio now is in the lean luxury category. Number three, that lean luxury category is driving a margin north of 50%, to be precise, 53% in last fiscal, but we expect this to grow further. And our growth in Ginger brand will be going forward at least 10 hotels a year. And we are very pleased with that. Also, we have changed the model for Ginger. It's not really a capital light model. but it could come under capital light because operating leases do not require any capital investment from us on an upfront basis. So we think the operating leases that we have started with Ginger will give us the required absolute return, but also on the margin side, much more than a typical management contract of 6 to 7% or 6 to 8% of the top line that is customary in the hospitality sector. So if you're doing 50% plus margin and you gave 25 or even 30 to the owner as a revenue share, you still have 20 or 23% versus a traditional management contract that would give you a maximum of 8%.
And what will be the mix in terms of owned and leased for Ginger?
We would invest in Ginger in order to monetize some of our land banks that we have. And Ginger Santa Cruz or Mumbai Airport is a good example. We had that land for almost 30 years doing nothing. And once we got the permission, we went ahead and built the flagship. And, these kind of assets, if your land is already there, it helps you in doing two things at the same time. One is demonstrating effective asset management and utilizing your assets which are not at all utilized. It's not a question of underutilized, but it was not utilized at all. So that's one, and land in India is very expensive. And the second is deploying your capital in building which is going to give you exponential returns, so which has a very positive impact on both your return on equity as well as return on capital employed.
Just to take that to the 25 new hotels that are in the pipeline for this year, Mr. Chhatwal, what is the mix there? Are these asset-light largely, or any kind of demarcation that you can share with us?
So 25 that will open this year, most of them, I would say almost all of them we started using the terminology capital light, with the exception of Cochin International Airport as a Taj. That is a long-term lease with the airport, and we are doing the building and the improvements on it, but that's a limited investment. The other is really, one or the other selective operating lease in Ginger. The rest is all driven by management contract business.
Okay. Give us a sense of what's happening with the international business that was in a blip. Is that improving as economies seem to be turning, at least in the US, Europe, etc.? What is the sense you have over there?
Actually, that's a very good question. Europe we are very pleased with. Dubai has done well. There are two areas of opportunity which, if they start doing well again, then that will really present a hidden upside for us. One is Maldives has seen a blip because of all the news that we have read, and our business in Maldives was a majority share was coming out of India. So there is a short-term decline in Maldives, and US has not yet come back to the pre-COVID levels, especially San Francisco as a city has seen a very bad phase in the last 2-3 years, but we expect that to go back to normal post-elections, and that's our hidden upside, as well as we are making some changes in New York, which should help us to recover also in New York.
Tell me a bit more about Maldives, Mr. Chhatwal. How much of a blip there have you seen, since, of course, Indian tourists have been avoiding going since all of the geopolitical sort of crisis and feathers being ruffled there? What is the impact that you've seen?
Yeah, we have seen in the last quarter, I would say the last 4 to 5 months, a drop of 15%. I would say partially it is because of the news you heard, partially also Maldives was the favorite destination during and a little bit post-COVID for everyone. So I think the general traffic has not declined just because of the negative news that you have read, but it's a very normal thing. Everybody went to destinations like Maldives, like Goa, like, mountain sector, or which was a bit more exclusive. And that's what Maldives offers with all the villas that it has, that you have your kind of privacy and you are on a small island away from everyone. So I think a part is a normal adjustment and a part is a decline, but at some point this should go back to what it used to be.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Benchmarks come off lows to trade flat. Nifty trades at 22,400 while the Sensex crosses 73,900. PSU Bank and Pharma gain most across sectors. On the other hand, realty and consumer durables along with FMCG drag. And Kotak Bank falls over 10% as RBI finds serious lapses and halts new online customer acquisition and credit card issuance. Meanwhile, Axis Bank soars over 4% on the back of stellar Q4 numbers, whereas Hindustan Unilever falls nearly 2%. Its profit and revenue take a hit. And more earnings to watch out. Nestle India, Kotak Mahindra and Bajaj Finance are set to report their March quarter numbers. Hello and welcome. I am Agam Vakil and you're watching the FNO Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. A quick look at how things are faring as far as your, benchmarks are concerned. Now, as far as the Nifty goes, we are looking at about a 0.2% up move here coming through. Some strength that has come back, in fact, in the last 1 hour of trade, despite opening very weakly. We've started to see a lot more traction towards the positive end. And as far as the Sensex is concerned, it's largely the same, what we can see with respect to that particular index, as you can see there. Moving on, as far as the benchmark Bank Nifty is concerned, let's pull that up as well and see how things are fanning out there. So the Bank Nifty is also up around 0.7%. That's also advanced and now turned into the green. So it's turning out to be a positive day of trade. Of course, the weekly options expiry will have a certain bearing on how these indices pan out in today's day of trade. That said, let's take a look at the constituents of the Nifty and see where there's a pull and push there. Of course, Axis Bank, I'm expecting, should be one of those which are in fact giving the support, and there you have it. Axis Bank is in fact the top contributor to the up move in the Nifty 50 at the moment. We have ICICI Bank, which is up as well and contributing along with Reliance Industries and SBI. The Bank Nifty overall is advancing, but that's not to speak for, and let's not forget the Kotak Mahindra Bank is also weighing down on the index, both on the Nifty as well as the Bank Nifty at the moment. In fact, a third of the declines contribution on the Nifty is coming from Kotak Mahindra Bank. HUL, Bajaj Finance and Maruti are among others which are also weighing down on the index. Kotak Mahindra Bank is right now down by as much as 10%. This is, of course, after curbs set in from RBI on this particular bank. Well, it does seem like at the moment the bank needs to pull up its socks in a lot of operational areas when it comes to online as well as credit cards. But that said, to take a quick look at the broader markets as well. Let's pull that up and take a look at what's happening in the the mid cap index. That's flat right now. The small cap index is also looking at a 0.5% up move out there. So on the whole, broader markets doing reasonably well at the moment. To speak for what's happening in the broader markets too, I want to very quickly take a look at some of your key gainers there. And we do have something like a Bharat Forge, which is up as much as 7%. We do have a broken note this morning, Bank of America Merrill Lynch, which suggests that it could potentially do better and that the market at the moment is underestimating its performances going forward. Mazagon Dock is up 5%, as is AB Capital. So we have gains there, and of course on the losing end we have Dalmia Bharat, which is under pressure, down around 5%. We have Indian Hotels, which is down 4%, I reckon reacting to earnings, and Macrotech Developers down around 2.5%. Again, earnings have been fairly steady, but I reckon that there possibly could be some profit taking coming through. Speaking of the indices, let's take a look at how the futures are panning out and what's really happening there as well. So there you have it. So that's as far as your overall picture is concerned. Now, of course, the rollover number doesn't look correct as far as the Nifty goes. We're going to have to make a correction there because though we are in the expiry week, so I reckon that we'll start getting the rollovers there. Of course, we'll have an unwinding in the April futures and naturally an increase in open interest towards May futures. And moving on, the Bank Nifty as well, let's take a look at that as well to see whether or not there is, in fact, a lot of traction with. So the May futures, of course, looking at around 12% increase. Let's pull up the April futures as well and see how things are panning out as far as the Bank Nifty futures is concerned there. And the April series is what I was looking forward to, and to see whether or not, okay, we'll bring that for you in just a bit. So that's as far as your futures pictures panning out. Let's take a look at the options market as well. Of course, today is the Nifty weekly options expiry. We do have a lot of traction around the 22,500 call. That's where we have seen a lot of writing coming through. And on the lower end, we do have max open interest in the 22,000 put. We have a standardized open interest distribution across 22,000 all the way through 22,400 strikes. So I reckon that we will see some amount of resistance around 22,500 on the higher end, and on the lower end, well, it's a nuanced call, I guess, at the moment. Do remember that we did start off on a weak note today in the markets, and we have seen a lot of covering since then. But on that note, let's bring in our experts for today. We have Brijesh L of IDBI Capital and Nilesh Jain of Central Broking, who's joining us on the show. Good morning to both of you. Thanks so much for joining in. Nilesh, I start with you. Your view on the Nifty at the moment. How are you trading this one?
Very good morning to you, Agam. Yes, so certainly we have seen a good, in fact, I would say smart recovery from the lower levels on the back of monthly F&O expiry today for the Nifty. Now, if you look at the derivative data, that shows that 20,300, 22,400, these were the strikes where we have witnessed huge amount of put writing. And looking at the overall setup, I think Nifty is likely to expire in the range of 20,400 to 22,500. It seems a little difficult to cross 22,500 as of now. But if at all we see any decisive breakout above the same, then there will be a huge amount of short covering that will again open up for 100 to 150 point upside towards 22,500 to 2600 to 22,650. But as of now, looking at the overall setup, I think Nifty should expire in the range of 22,400 to 22,500.
Okay, that's a view on the Nifty. Brijesh, good morning to you as well. Your view on this particular index?
Hi, good morning. So even my view goes positive for the market. The way the market has recovered in the last half an hour, if you see the data, there's continuously buying is been seen in the Nifty index. So I believe this momentum is going to continue. And I do agree that at current price, there are 22,500, there is a call writers are extremely active. But somewhere looking at the bank Nifty, which is already taken which is already showing a good amount of long built up, I believe even the Nifty should also follow the same thing. I would be taking a long trade. The stop loss would be 22,400 mark. So and now in the last couple of minutes, the market is slightly correcting down. So I believe this can be one of the opportunity with the stop of 22,400. I think one should take the long trades.
Okay, there you have it. That's the view on the Nifty. Now let's talk about the Bank Nifty. Moving on, Brijesh, I'll come back to you on this one. How are you trading this index?
Yeah, so I think Bank Nifty, if you see today, most of the banking stocks, like not exactly the Bank Nifty, but if you stock the mid-cap space also, like Federal Bank, SBI is something which is looking very positive. ICICI Bank has started to move. I think Bank Nifty is now at the verge of giving this breakout. 48,500 is the trigger. I have a sense that this will be taken out. And once we see a breakout, we should be talking of another 1,000 points rally in the Bank Nifty. View is positive. On the way down, 48,000, there is a put writer. So I think that is going to act as support, at least for the day. By any chance, if this 48,000 is broken, then we review the position. But right now, at this moment, if I need to take a view, I would say that 48,500 will be taken out.
Okay, well, 48,500 is the expectation to be taken out. Nilesh, do you concur? How are you trading this one?
So Agam, surprisingly, in spite of Kotak Bank down 10%, we are witnessing a positive action in the Bank Nifty. So somewhere index management is going on. And looking at the counters like Axis Bank, ICICI Bank, where we are witnessing a positive action. So a good breakout can be seen in Axis Bank as well. So I think even if we see a small pullback in Kotak Bank, then Bank Nifty is likely to move towards 48,500 to 48,800. So structure-wise, it is still looking positive. Today's low could be a sort of a panic low that we have seen somewhere around 47,000, 48,000 in the future. So that will be the immediate support, and that should be the stop loss, I would say, for the long position. And looking at the overall setup, I think it is likely to inch towards 49,000 mark from next weekly expiry point of view. So structure looks positive. With a buy and decline approach, the target would be 49,000.
It's 39 million shares which have already been traded on Kotak Mahindra Bank at the moment. It's down by as much as 10%. This is a huge knock for any bank in terms of any standard. And at the moment, if you look at how things are panning out, just look at the intraday low for Kotak Mahindra Bank. Its intraday low is all the way down to 1,602 rupees per share. And of course, it's still down by nearly 10%, but its intraday high is at around 1697, around 1700 rupees, if you can call it that. Now, as our experts are mentioning, should we in fact see Kotak Mahindra Bank, well, perhaps move higher by around 40 points from current market levels and make a new, intraday high? You never know what kind of an impact it can in fact have on the bank nifty. And of course, we do know the strength that Axis Bank is currently providing. ICICI Bank is also up and about, as is SBI. That could perhaps change things for the bank nifty as a whole, as pointed out by both our experts. So that's something to keep an eye on. Let's pull up that list of the constituents of the bank nifty and see where there is in fact traction, because that'll give us an idea about where things are in fact going on. So there you have it. HDFC Bank is flat right now. We're not seeing too much change in open interest there either. But ICICI Bank is up for 1%. There's an increase of 9% in open interest there. Axis Bank, again, a near 4% increase there. SBI is looking at an around 8.5% increase in open interest as well. So that's something to keep an eye on. What really stands out for me is that, the open interest, as far as Kotak Mahindra Bank is concerned, that is not really looking at too much change. That begs the question of whether or not there are a lot of traders who are trapped in their long positions. And if that is the case, will they be forced out? Because we are in fact moving towards the monthly expiry as well, and that certainly could have a bearing on how things could in fact pan out for this one. So, well, that's something to keep an eye on, and you never know, you never quite know how things can in fact move for Kotak Mahindra Bank. But it's going to be it's a very tough position to be in if you were in a long position in Kotak Mahindra Bank at the moment, and of course you're laughing away to the bank if you were short on this one. But that said, let's move on and talk about stocks then. Let's pull up the list of all the stocks which are seeing an increase in OI at the moment. And, that list should be up for you on your screen. So you do have Vodafone. Now, that one is seeing a nearly 22% increase in open interest. There's been all sorts of chatter about a short squeeze in Vodafone Idea. The thing is that it's still at around 13.5 rupees per share, and for a short squeeze, you also need a very sharp surge. That's a wait and watch on that one. For now, what we can make out is that there are longs building into the system at the moment. Cummins India is the other one. It's actually flat, but there is a 13% increase in open interest. That said, where we don't have too much traction in terms of the underlying, so I wouldn't really necessarily put Cipla, Bajaj Finserv, and Shriram Finance in either a fresh short or a fresh long bracket. Let's move on and talk about unwinding, and I reckon that this is where we will see a little more in terms of decline in open interest, considering we are looking at the expiry coming through. So Bata, MRF, Dalmia Bharat, Dixon Technologies, nothing really stands out except for Dalmia Bharat because that's down around 5%. But that said, let's get in our experts to talk about stocks which are there on their radar. So Nilesh, I'm coming back to you on what you are recommending.
All right, Agam, so I have two buy recommendations. First of all, BHEL. This particular counter is breaking out, and a good build-up, good rollover data we have seen till yesterday. So a triangle formation breakout can be seen on the daily time frame chart for BHEL. One can go long for the upside target of 275 to 280. So these are the two targets on the upside. Stop loss can be placed somewhere near about today's low, that is 264. That should be the stop loss. So BHEL is one stock that is looking positive on the chart. Apart from that, from PSE banking space, we are liking State Bank of India. Again, a symmetrical triangle formation breakout this particular counter has given. So on the upside, 795 to 800, these are the target on the upside, and stop loss can be placed somewhere around today's low at 770. So SBI and BHEL, these are the two buy recommendations from my side.
Okay, that's the view coming in from Nilesh. And Brijesh, what about you?
Yeah, so I do, as I said before, I think Federal Bank is one which is positively placed. And I think before the results, the bank is poised for some breakout. At current level 156, it looks like it has taken support and it can easily go back to 165 levels. So there is a trading bit of another 10 points in Federal Bank. So I think with today's or maybe like yesterday's low, which is 152, With a stop loss of 152, I think one should go long in in Federal Bank at current price for the target of another 10 points on the higher side. So that would be one pick. And next one is the Axis Bank. Post result, there has been a gap up opening. There's a good amount of built up seen at the level of 1150 mark. So I believe for the May series, any correction close to 1100 in the Axis Bank can be viewed as a buying opportunity for that 50-60 points more on the higher side. So I was also liking SBI, but then I think SBI is already taken. So I will go with Axis and Federal Bank.
So a lot of banks coming in on the radar of our experts, but let's move on and talk about a handful of other stocks which are also buzzing in trade. Now, of course, in the futures and options space, well, we do have plenty of counters which are in fact up and about, some of them which are also under pressure. But among a handful of them, let me take up something like a Sun Pharma. Let's see how things are panning out there. That's up around 1.3%. And what are its futures doing? I also want to take a look at the chart out there because well, this one, of course, has been a focus because of change in fundamentals. A lot of analysts of late have turned positive on the entire pharma sector. Sun Pharma, of course, being one of the larger companies out there in the space, well, tends to benefit from the change in sentiment in the entire sector at the moment. And of course, the May futures are looking at about a 3% increase in open interest. Brijesh, any trade in Sun Pharma do you notice out here?
Actually, I'm slightly cautious on Sun Pharma. The only reason, because we saw a too big bearish candle in Sun Pharma. There was a distribution, and this selling candle has been followed by the volumes. So I'm not pretty confident. 1530, 1540 is a resistance zone. Only in the near term, if I would take a long trades, only if 1550 level is taken out. So as long at current price, I believe Sun Pharma is seeing some pullback. And if market settles and there is some sell-off in the market terms, then Sun Pharma would be the first trade on the sell side, because I have a sense that Sun Pharma can fall by another 50-60 points on the downside. 1450 is quite possible in Sun Pharma. Directionally, the trend is weak. Distribution is what I can see. Bounce back should be viewed to exit the position like FNO trades is what I sense.
Okay, all right, we'll leave it at that. Well, taking a moment to thank both our experts, Nilesh and Brijesh, for joining us and taking us through their views on the markets and, of course, also giving us a handful of trading ideas. We wrap this particular segment on the FNO show, but on the other side, we get you all the action from the commodity space. Don't go anywhere. Back in just a bit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in
Welcome back. This is the F&O show, and we take stock of the commodities market now. Well, we have Vandana Bharti, Head of Commodity Research at SMC Group, who's joining us on the show. Vandana, good morning. Thank you so much for joining in. We've been talking about gold quite a bit of late, Vandana, and the question really is across a lot of traders, who is that whether or not there is more steam left up ahead. What is your assessment here?
Hi, Agam. Yes, we have seen a $400 rally in gold, and now it is the turn of profit booking. And we can't say that the glitter is over in this counter because Middle East tension is already there. Inflation is on higher side. So post-COVID, we have seen inflation and Middle East tension and geopolitical tensions. They have cushioned up the gold prices. So the problem is still there. The thing is that trader is moving out from this counter because of profit booking, and fund is moving out. And it is only a healthy profit booking in the market, and yes, occasionally we can see a buy in gold. So yes, it's the buying is not completely out from this counter, but in short term we are expecting further correction in the prices, and for 15 to 20 days trading session we may see a dull trading in this counter. And in international market we can expect a correction towards the level of $22 to $22.80 to $22.70 in this counter. But yes, at that level buyers, they are ready to again accumulate long position there, because when physical buying, people, they are waiting for correction and they will buy at any correction, whether it is 4% or 5% in gold.
All right, that's a view on gold, but let's talk about crude as well, Vandana, and for the same reasons, at least fundamentally, your view here?
Yeah, because of geopolitical tension and Middle East, we don't see any kind of supply side risk in crude oil. Because of that, it didn't give any reaction despite the attack of Israel and Iran. And it was in a range. But yes, now it is coming towards is traditional triggers, and that is inventory. And US crude oil inventory is giving a message that this is the time for build-up in strategic reserve ahead of that peak summer demand. And yesterday we have seen there was larger drop down in inventories, US crude inventories, than expectation, and market crude oil prices has cushioned up there, and we have seen a jump in the prices. So yes, it can oscillate between $87 on higher side, $82 on lower side. On MCX, we can expect that this commodity can touch the level of 7,000 to 7,020. So yes, for a couple of trading session, we can recommend a buy in crude oil, and we can expect a moderate buying of around 2 to 3% in this counter.
All right, and Vandana, coming down to other commodities, perhaps if we can talk about metals, ferrous or non-metals, how are you going about them? Anything that stands out for you in terms of trade?
Yeah, of course. Copper is stealing the shine of entire base metal counter, and in fact of steel as well. And we have got this fact that, okay, because of AI, there will be a huge demand of copper in coming future. And because of that, and there is still a supply side tightness in this market. So yes, we have seen buying in copper on every dip. And now we are expecting that on MCX, it can break the record level of 886. But for today trading session, I'm expecting a fall because on in US, the GDP data is scheduled and it is expected to come weaker than expected and previously. So yes, because of that, we can see a correction in copper and zinc prices, and we can go for sell in this counter. And on MCX, we can recommend a selling position near 842 for the target of 837 with the stop loss of 847. So yes, a brief correction can come in copper, but overall it is a very bullish metal.
All right, Vandana, we'll leave it at that. Thank you so much for joining us and taking us through your views on the commodity space. Of course, plenty to keep an eye on out there as explained by Vandana out there. But, I'm going to go back to the markets at the moment, and I want to pull out the intraday chart of the Nifty futures specifically, because there was a sharp spike decline there. And I believe that a lot of stop losses have been taken out of the picture at the moment. In fact, while this is just a bar chart, while this is just a line graph, if you actually consider the bar chart, it's hit an intraday low of around 22,314. which means that in just a matter of 3 or 4 seconds, it's sharply gone down and will recover from there. But, this is no market for anyone who's a newbie, because it's turning out to be increasingly hard for you to be an option seller at the moment, and in fact even hard for anyone who's dealing in derivatives. At the moment, there's been a sharp spike downwards. There's been a little bit of recovery from day's low, but it's a market where you can't really make out as to what's been happening right now. If you consider just where this potentially could have gone wrong, I want to once again pull up counters like Kotak Mahindra Bank and see where there is in fact some sort of an issue here. Well, not really, because that continues to be on a decline around 10%. Maybe if we could have pull up the list of all the banks once again and see if there has been a change in in the price there. So we now do see, in fact, a little bit of a coming off in terms of price for ICICI Bank. Now, that's up only around 0.7% as against earlier. Look at IndusInd Bank, that's also under a tad bit of pressure. And HDFC Bank has now moved into the red. So that's where a little bit of pressure is coming as well. We've seen a little bit of loss in strength in terms of SBI as well. And of course, I've already mentioned ICICI Bank. So we're looking at some amount of volatility return to the banks, and that's likely seen volatility will come and result in the Nifty as well. Well, we'll continue to give you all the traction as well as action that comes through on a very crucial day today. And on that note, it's a wrap on the FNO show, but lots more lined up on the other side. Stay tuned. You're watching NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages.
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, before we speak to our management for today, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmark indices currently are trading flat. Nifty is being traded in a range of around 170 points, recovering from its day's lows, but currently it is down around 0.13%. Something that's pulling up the Nifty include Axis, Sun Pharma and SBI. In terms of Sensex has been trading in a wide range of around 570 points today, currently trading flat again. In terms of, it's down around 0.07%. In terms of Nifty point contributions, something that's pulling up the Nifty today are all banks. There is Axis, there is ICICI, there is SBI. We also have ITC that's pulling up the Nifty, but something that's weighing down the Nifty is Kotak Bank, of course, HUL posted its result, Bajaj Finance and Maruti. But in terms of broader markets, the broader markets are doing a bit better than the benchmark indices. Mid-cap 150 is down around, in fact, the broader markets have gone down right now. They're down around 0.2%. So they're doing worse than the benchmarks. In terms of small cap 250, it's up around 0.3%. But Harsh, what are the sectors doing? PSU is stealing the show, but some booking in profit booking in Nifty Realty today.
Well, yes, can see that Nifty Realty down around 1.4% after what's been a good week for it overall. Outside of that, metals down 0.5%. Nifty metal was up roughly 2% odd yesterday in trade. So therefore, that one being a laggard as well. Nifty PSU Bank doing very, very well. In fact, banking in general outside Kotak Bank, if we can pull up the Nifty Bank, seems to be doing fairly okay. Outside of Kotak Bank, I did mention that. So Axis Bank really very strong showing. And Kotak is actually dragging on the Nifty 50 as well. If we can pull up the contributories there, 60 points on the negative side contributed by Kotak. Of course, 30 contributed by Axis, 13 by ICICI and 10 by SBI as well. But you look at Kotak 61, if I just reduce that, make that 0, you typically had a day where the Nifty was likely up 50 odd points. So honestly, outside of Kotak, the universe seems to be doing quite well. If we can have the advanced decline very quickly before I move on to our first guest. There you go, a sharp reversal. That's signaling a reversal largely seen in the broader markets. And that's reflecting in the advanced decline. Now, standing at 1:1, so no complaints per se, but nonetheless that sharp reversal might be a concern. Will be interesting to see where we close the day. But I want to quickly bring on board Jay Malpani, who is the Managing Director at Imagica World Entertainment, to talk to us about the company, what one can expect, how synergies are building up with regard to acquisitions. So Jay, let me start off with that. How are synergies building up when it comes to your recent acquisitions, 600 crore plus of acquisitions, nearly 20% of your market cap?
Thank you for having me on show. The acquisitions, the synergies are playing out well. So we have recently finished and executed all the documents with regards to our transfer. So from 1st of April, all the revenues and EBITDAs and all the operations of the 4 parks which were operational are in the books of Imagica. And this will considerably make our P&L and balance sheet much stronger. We will double our footfalls. It will increase our revenue by 1.5x and EBITDA by 1.7x based on the FY23 numbers. And on the combined level, our profitability of the company will increase as well because of these additions of these high margin properties. And we expect that we will increase the market penetration, enhance the marketing effectiveness, and even from pricing point of view, we will have a better pricing in this region. And we'll have multiple synergies because of the consolidation with regards to purchasing power, marketing, retail, F&B, and cross-selling opportunities like combos across all our parks. And we have always wanted Imagica to grow across India. So this deal facilitates that and accelerates our geographical expansion as well.
I take your point, Jay. Well, Mahima, this side, can you quantify as to how much will this impact your margins and your bottom line? How much will your margins and bottom line increase by then?
Sure. So currently we are at around 38% of EBITDA margins, and the new parks which we are adding are about 57% margins at EBITDA level. We expect our combined margins to go in the range of between 45 to 49% in this next 2-3 years at a consolidated basis.
Sure. And just with regard to what the expectations or what the type of synergies are that you are likely to see from some of these acquisitions, as well as more importantly, let me actually switch it over to funding. I want to try and understand from a funding perspective, how have these parks been funded, and what's the plan like with regard to cash flows and where you will utilize them?
Sure. So the way this deal is structured is that Malpani Group has given Imagica a timeline of 30 months to pay the whole consideration. So Imagica has it's a deferred payment. So because of that, since the cash flows are in the books of Imagica from 1st of April, 60% of the cash flows will be funded through internal accruals itself. And then the balance 40% will be a mix of debt and equity, through which we will fund these acquisitions. And at the portfolio level at Imagica, we have a threshold of 2.5x of debt to EBITDA is the maximum we'll raise, the amount of debt we'll raise. So this is how the acquisition will be funded.
Okay, understood, Jay. So also, you've been taking a lot of cost control measure when it comes to Imagica. Now, getting these acquisitions into place, where do you think your cost will go to, and will you be applying the same cost measures to these acquisitions as well?
So we'll be putting the same cost measures to the acquisitions as well. When we are acquiring those 4 parks, they're already at 57-58% EBITDA margin, which is one of the highest in the country. And even with regards to Imagica, since our parks will merge, a lot of our common teams will be set up to manage the back of the house, even our operations. Even at the senior level, a lot of the teams will get merged because when we were operating these parks separately, the teams were double. But since we are all in the same entity now, we will see that these teams will be similar and we will see a good cost reduction on that part. Even with regards to purchasing power and marketing efforts, we'll see a good amount of synergies. And since we are in the same region, even with regards to pricing, we will see a good amount of pricing levers which will improve. And Imagica has a very strong non-ticketing business, which is F&B and merchandise. And we expect that both these things will be replicated across all our 4 parks. And we expect to see good margin improvement coming from there as well.
Understood. And where should the borrowing number be at in terms of your cumulative borrowing for FY25?
So cumulatively, we are still open to a mix of debt and equity. And with a threshold of 2.5x of that number is something which we will have. On a consolidated basis, on the FY23 number, our EBITDA is around 170 odd crores. So we have a good cushion to borrow, but we'll have a good mix of debt and equity to fund these acquisitions.
Okay, understood. Jay, I also want to understand, with respect to your other income, from what I've seen is that, in March 23, it was negative 490 crores and then it went to positive 570 crores. Then in September, it was around negative 50 crores and now it's, in December, it was around 0.5 crores only. So what is happening exactly there with respect to your other income, because it's pretty volatile there?
So actually the other income are mainly accounting entries which have been there because of the resolution plan which the group had concluded in 2022. So there are multiple legs to the resolution plan, and one leg was with regards to land and the other leg was with regards to the promoter OCRPS conversion which we just finished in April. So these are those entries which are more accounting entries which have been part of the resolution plan. So going ahead, you won't see any big fluctuation in that number, and the number will be pretty stable going ahead.
What does this other income comprise of currently, Jay?
So currently, I think one of the thing was with regards to OCRPS conversion, which was there. So part of it is converted and other is written off. So So I think that was the number which was there in the other income this time.
All right, and with regard to just return on capital, large amount of capital which is expected to be deployed. What's the ROC that you're really expecting on some of these numbers, ROEs, ROCs? What's the kind of return ratio that one can expect?
So so the parks are of different size and scales. Even going ahead, we are planning on putting up different parks in various different tier 1 and tier 2 towns across India. So based on the demographic and location we choose, these ratios are expected to vary between 15 to 18%. And in some cases, if the park is a mid-size with a very good location like Sabarmati, which we were just awarded, so the ROCs are expected to be in the range of 18 to 20% as well. But the range is 15 to 18% is what we are considering for these parks.
Okay, Jay. And going forward, let's say in the next 4 to 5 years, how many parks do you wish to, build, acquire, organic, inorganic expansion? What are the plans?
So we have a good pipeline in place right now. We have 2 projects on the way. A water park in Indore, which should start this year, and a Sabarmati Riverfront Entertainment Hub, which is a downtown project, which will start next year. So our plan is to have 1 park at least every year, which will get added to Imagica, and so that's the plan going ahead. So 2 parks in pipeline, and our plan is to add 1 park every year going ahead.
Okay, and just with regard to as you scale, what's the kind of revenue potential? So you spoke about 1.5x revenue FY25. That would be compared to FY24. Is that the correct number to take? And therefore, when I'm looking at your overall numbers, broadly trailing 12 months at 250 crore, so you'll roughly be doing around maybe 400 crore in FY25. Is that the correct way to look at it?
Yeah, so we have just combined the FY23 numbers for all our parks together, and that number comes out to around 400 odd crores. So that's the number we are hoping to do this year, and some growth with regards to that as well.
Okay, and Jay, what are the capex plans going ahead for FY25?
So from capex point of view, Malpani Group had invested almost 25 odd crores in the existing 4 parks which were transferred. So there's no new capex which will be done on those 4 parks. And even Imagica just added 6 new water slides, a beautiful water fountain show last year. So for 25, in the current parks, we don't expect major capex to happen. It's already been incurred last year. The only capex which will happen is for the Indore park, which is already accounted for. So other than that, no major capex as such for the existing parks.
Got it. And equity dilution, Jay, what's the sense?
So to raise the money, we are looking at a mix of debt and equity. So some bit of, we are still exploring multiple options with regards to how to raise the equity as well. So as and when the plans get consolidated, we'll get back and update to you on the same.
The promoter will continue to hold 74%? Sorry, very, very quickly.
We want to hold 74% and if we raise some bit of preferential allotment or we do some QIP, then there might be some dilution with regards to that, but our aim is to hold as much as possible.
Sure, understood. Okay, thank you so much for that perspective, Jay. Of course, we'll wait Q4 numbers and FY24 numbers and we'll call you back and get some more perspective. Very, very interesting with regard to the growth plans of Imagica World. Thanks, Jay.
Thank you so much.
Right, so time to slip into a very short break. We'll continue post the break with a very special conversation we've had with Tata Consumers to try and break down some of their numbers. Mind you, top loser on the Nifty 50 yesterday. So stay tuned to NDTV Profit. We'll give you that perspective on the other side of this very, very short break.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times
Hello and welcome to NDTV Profit. We have with us a very special guest, Sunil D'Souza, CEO of Tata Consumers, now joining in. Mr. D'Souza, thank you very much. Thanks a ton for joining us today on the show. Firstly, congratulations. FY25 is behind us. You've managed to pull out quite a good quarter. A couple of areas that we'd like you to start with. Firstly, of course, comment on the quarter behind us. Revenue was largely in line with street expectations. Margins have seen an uptick. International business is finally picking up. And you've got those substantial acquisitions as well now behind you.
Yeah, so thanks for having me on the show. And yes, we had a pretty decent quarter and a good end to the year. 9% top line, 22% EBITDA, profit before tax, before exceptionals, plus 46. I think what the reported numbers would be net of we had a stamp duty on account of the merger with Tata Coffee and some prudent provisions that we took for underutilized assets as well as a financial instrument. Other than that, like you said, I mean, all businesses on growth. That's pleasing to see. We've had 2 months of Capital Foods. With that, the foods business is powering ahead with a 20% top line growth. International, we've always said it should be margin should be accretive to the India business, and they've come to the party now. Very strong numbers. Canada was always strong. UK very strong numbers. US is also turning around the corner. Strong growth in our growth businesses in India. Most importantly, our EBITDA margins for the quarter came in at 16.1%, which was pleasing. We've always, last quarter we said our new benchmark is 15 plus, and this quarter we delivered more than that. The good part was we've reduced working capital. Cash has grown at 27% versus last year. Cash as a percentage of EBITDA is 101%. So we reduced working capital substantially. ROC 280 bips ahead of last year. Strategically, shares more or less on track. Outlets now 4 million. Innovation firing well, 5% plus. Costs well within control. Distribution expansion on track. So all in all, a pretty decent quarter.
Do you think, do you expect an upside risk to margins in the next few quarters or the next financial year?
Upside, I wouldn't call it a risk. I said upside is
it's a pleasure.
Happy surprise. Correct.
Yeah,
happy
it's
surprise.
A happy surprise.
Yeah, while we've delivered 16.1% this quarter, but if you look at the full year gone by, we're at a 15.3. So that's why we said 15 is the base, and we'll continue to, we will deliver above 15%. That's for sure. But we're setting the base at 15%, and we feel quite confident that as we go through the year, we drive top line and scale, keep costs within control, take out synergies. We're sure we can beat our numbers.
And you've also improved enormously on operational efficiency. Let's talk about Capital Foods and organic. Going into the next couple of quarters, because I'm assuming by then you'll be completely integrated and available at all sort of through your distribution chain. What is the revenue target that you're expecting or working with in terms of contribution from organic and Capital Foods?
So like I said, I mean, Capital Foods was distributed in about 250,000 outlets. I am directly distributed in 1.6 million. So that's a huge headroom. We said we will complete the integration in 100 days. We are on track. We did the acquisition early February, and by end of this month, we should be done and dusted with the entire integration piece. Organic India, we've just started. It was middle of April by the time we finished. So that will take 3 months from there. And for both these businesses, like I said, I mean, now they're part of our growth portfolio. So the growth portfolio itself, 20% of the portfolio was growing 30. Now we're adding this 10% and say we'll grow at 30. So broadly, both Capital Foods and Organic will continue to grow at a 30% plus, at least for this year.
I want to talk about NourishCo because that's what you also referred to in the con call earlier. The guidance set out for that was close to about 1,000. You've closed in at about 825 crores. Seasonal issues, I believe. When do you see that shortfall getting filled in? Do you think by next quarter we will see a sharper uptick on NourishCo?
Yeah, so NourishCo
target for FY25. What are you working with internally?
So NourishCo actually has been firing on strong cylinders with a combination of distribution expansion, powering up the portfolio, and innovation to sales in NourishCo is close to 20%. In NourishCo, from 650,000 outlets, we've gone to 950. We've already built the supply chain and the distribution to take advantage of this season. And I said last quarter, actually, right up to January, we were quite confident of hitting the 900 to 1,000 crore number. Middle of February onward, we started seeing unseasonal weather patterns. And more importantly, I think Holi this year was shifted by 20 days. And I still remember from my old beverage days that Holi is the onset, it doesn't matter what the outside room temperature is. Holi is the onset of summer for most parts of India. So I think that's what has happened. Summer has come in very, very strongly. So we feel quite confident that we will come back to the same, I would say 25 to 35% growth rate for NourishCo in this quarter itself.
I want to talk to you about Tata Sampann. Great growth there as well. And interestingly, there's so much happening in that part of the industry with everything we're hearing about the regulator, with the Singaporean authorities, Hong Kong authorities cracking on your competition. Now, if I call it a risk, you might question me again, but have you seen that impacting your business? I mean, Tata as a brand is associated with quality. And imagine in the Everest of the world, other masala companies are losing market share. This could be a big gain for you, and we might potentially see an impact of that in the next quarter.
See, I wouldn't comment about the other companies, but I would say as an economy develops, as products proliferate, as consumers become more aware, I would start to expect that regulations, the standards will be continue to go up. And I think the FSSAI is doing a fantastic job in bringing up the standards overall in the country. That said, I think for us specifically as a Tata Group, we are very, very mindful of the value that the Indian consumer places, the trust that the Indian consumer places in the Tata brand name. And therefore, I mean, irrespective of what it is, we will be following regulations very closely. We will make sure our products are of the highest standard. So Sampann, for example, right? Very simply put, I'll give you a very, very simple example. Just by going to the border on moisture content, I could improve my profitability. But no, I want to make sure that I'm well within the range of the moisture content. We've got internal standards on brokens, type of grains, etc. I know that by moving a little bit, there's a little bit of money to be made, but as a Tata Group company, we value the consumer trust in our product and our quality more than anything else, and we are here for the long term, right? So therefore, I wouldn't be too worried about what's happening. The good part is we just need to double down and make sure we execute properly.
Double down and execute properly. So while, of course, top line will be focused, quality, I think, is what the Tata brand is synopsis with. I want to ask you about Starbucks. Growth was slightly tepid for Starbucks. But of course, I mean, in the bigger picture, it's very clear that Tata is serious about this. Starbucks has become a name, a household name for most. How is that sort of doing? What is the sort of expectations you're setting out for yourself there? FY25 target on Starbucks. Do you think the pickup will be more front-loaded over the next few quarters?
So Starbucks, yes. I mean, we are playing the long game. Number one, so we made a commitment saying that we'll have 1,000 stores by FY28. Now, just to put that in perspective, I think for the first 8 years of the business, from FY12 when we started to about FY20, we added about 200 stores. And last year we added 95. So in 1 year, we added almost half of what we did in the previous 8 years, and we'll continue at that rate for a long time to come. Now, last quarter itself, I think Q3 and Q4 overall were a bit stressed for the QSR industry itself, primarily driven by lack of traffic. I mean, in Q3, a lot of people talked about the World Cup and that happening, but that continued a bit into Q4. The good news is that March came in at better than February, and April right now is trending better than March. So we remain quite confident of the traffic coming up. But apart from that, right now we are at 421 stores, 60 cities, and as we expand, as we populate the bigger cities with more Starbucks, and as we go down, we are making sure that we are tweaking the business models to make sure that it is stronger and better even in face of slightly lower traffic itself. Average ticket per store has not been the issue, it's only traffic. Like I said, it's improving, and at the same time, we are making sure we're making the right tweaks to the business to drive traffic.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about your stock-related queries. So write to us any of your short-term questions or the long-term investment strategy, and we'll get them answered by our guests. But before we do that, let me quickly take you through the markets and see what's happening there. You look at the Nifty 50 index, it's pretty much flattish right now, not too much happening there, but with a positive bias nonetheless. You have among the sectors, you have the sectors that are doing well include pharma. However, PSU Bank is on a trot today, up about 1.7%. Again, that was the case yesterday as well. However, on the other end, you have realty that's not doing too well. It's down about 1%. Consumption not doing well. Metals, FMCG, all in the red today. But let's also look at the broader markets and see what's happening there. Definitely, okay, mid-cap has turned to, it's flat, but with a negative bias previous there. So a bit of a change there that has happened in the last couple of minutes. You have the Nifty small cap index up about 0.6%. So nothing to complain there. Let's look at some of the stock specific action as well. You have Axis Bank doing quite well in trade today. It's up about 5%, and you look at the Nifty Bank index also. It's not as bad as you'd expect considering what's happening with Kotak, and we'll come to that in just a minute. So it seems like there's a balancing act that's happening on the Nifty Bank index with Axis gaining and Kotak falling. So not too bad there. You look at some of the names that are moving on the back of results. There you have HUL that's down 1.7%. There's LTIMindtree down 2.7%. Oracle also down about 2.5%. All on the back of not as good of results as you'd expect. Your Vodafone that's turned a little positive now, up about 2%. Started off on a negative note, but after the FPO listing, we're seeing some gains there. However, the focus for today, Alex, is Kotak Mahindra Bank can't be ignored. Too big of an action by the RBI.
Yeah, certainly. And if anything, the move on the Nifty Bank, you can, not Nifty Bank actually, the move on the Nifty 50, you can look at it in terms of a tale of two banks, because if you look at the contribution for the Nifty 50, you will see that the biggest contributor on the upside is Axis Bank. But single-handedly, Kotak Mahindra Bank is causing the Nifty 50 to be flat at this juncture and is contributing about 60 points to the downside right now. In fact, let's talk about the reason for this. And Kotak Mahindra Bank down about 10% even as we speak. Harsh is joining in to talk about why this regulatory action by the Reserve Bank of India is significant and why there is such a big move in the stock price. Harsh, what can you tell us?
Well, thank you for that, Alex. When I'm looking at just the ballpark numbers and the impact, around 3.7% of the portfolio is credit cards. That will definitely struggle to grow because you won't be, or rather Kotak won't be issuing any new credit cards, at least for the 9th to 15th month kind of period for sure. This portfolio has grown at 52% year over year, at least ended Q3 FY24. Q4 numbers yet to come out. So it's low base but very, very high growth. Outside of that, you have their BNPL products, which they sell through Kotak 811 and through online channels predominantly. 90 to 95% of them are sold through online channels. And that too has grown significantly quickly, roughly 33% on a year-on-year basis, 8% sequential is how that portfolio is growing. And that will also likely see a bit of a tempering or a slowing down. But I think the largest impact will be on new customers. New customers added over the last 1 year till Q3 FY24 was roughly a crore, which is a 25% growth from 3.9 to 4.9. So that growth might just taper, and that number one would have to wait and watch out for as to where that number is. Because if new customers continue to get added, then likely some of the other products they can continue to do should not be a problem. So some commentary around that will help. But currently we have most brokerages maintaining or just about reducing the target price, not the rating on the stock. So that's the first piece. Now, stock down 10%, 3.3 lakh crore in terms of market cap, 90,000 odd crore in terms of standalone book value, cumulative, and therefore the stock on a consol basis is trading at roughly 2.6 times price to book. Well below its long term as well as short term as well as medium term averages, right. Well below it. Yeah. So definitely something to look out for, because the stock has taken a bit of a beating, yeah, in comparative terms to itself, trading at quite a low in terms of book value.
Absolutely. In fact, that is the story that we're focusing on. Thanks, Harsh, for summing that up. In fact, it's a great time to get on our experts. We've got Shaina Mukaddam as well as Ajit Mishra joining in. Shaina, the first question to you. Kotak Mahindra Bank, a disappointment, not just today, but if I look back from COVID lows, it's not done very much either. Even over the last 5 years, at this juncture, if you're talking about 18% gains, then a shareholder might just have received more if they'd put it in a 5-year fixed deposit. And that's saying something for one of the largest private sector banks in India. What is your understanding of what will happen from this point? Because some are talking about the potential for a buying opportunity with a stock like this down about 10%. Is it that?
Well, actually, if you see even valuations at, despite the fall and underperformance over the last so many quarters in terms of stock price, still valuations are not expensive, especially if you compare it with the correction that we've seen in HDFC Bank, and even the other large banks have actually consolidated. So in terms of valuation, Kotak Mahindra Bank still remains expensive. Having said that, you also have these additional restrictions by RBI, which over the next couple of quarters is likely to see the bank trying to put its act in place and continue to see slow growth. So to that extent, I think it is better to avoid, don't catch a falling knife. Kotak Mahindra Bank, even as of now, it would be better not to get into that stock. The other stocks in the banking space, you can even look at Axis Bank now, which is more or less the size of Kotak in terms of market cap. There, the numbers were great. Of course, you have HDFC, ICICI Bank, and SBI that remain other top picks.
All right. And I'm glad that you already spoke about Axis Bank, because that was going to be one of the follow-ups. Let's start with the queries then. And we've got the first one coming in from Mohit. He's writing in from Ludhiana. He's asking about IOC, Indian Oil Corporation of India, which is bought at levels of 77. Let's pull up the stock and see what it's trading. It's 170, so he's gaining quite a bit of ground. He's looking at the next 2 years. Shaina, should he hold on to this investment?
Yeah, I think he can hold on to the investment. We have a capacity expansion that will actually support, any shortfall that we see in terms of the crude oil prices going up and some bit of impact on margins. But still, it looks like a decent bet in terms of valuation, so you can hold.
The next counter we're talking about is Canara Bank. Now, this is from Sheila from Bangalore. They say they bought the shares at an average price of 292 rupees. Considerable upside from there. It's trading at around 611 rupees. Ajit, I'm going to come to you on this. This has given stellar returns in the last 1 year. Would you suggest booking some profits at this juncture, or would you continue holding on to a stock like that?
So my suggestion is that we have already seen the worst, especially when it comes to the PSU pack, and now, like within the PSU basket, some of the stock like the top performers, SBI, Canara Bank, Bank of Baroda, they are the one which reclaiming their multi-year highs. So just to share the perspective about Canara Bank, that in 2010. We were at the level of around 610, and today means we are trading closer to that mark. So I feel that we have more legs to this up move, and if your time permits, if your investment horizon is, let's say, for more than a year, then definitely you should hold. Upside, maybe considering the kind of quantum that we have already seen, it might take a breather for a month or two. But positionally, 650 to 670 zone is something that it can test in next 3 to 6 months. So definitely you should hold.
Okay, hold. Jupiter Wagons is the next one I'm coming to you on, Ajit. And this is a question coming in from Rakesh. And he's asking what should be done for the short term. Should it be picked up? It's currently up as much as 10% in trade today.
Yes, Alex. So in fact, we have seen a fresh breakout today. The stock has been hovering in a band for almost 6 months now, that 420 to 340. And finally, we have seen the breakout with strong volumes, almost 5 times of the average volume. And the stock is trading at record highs. So everything looks positive. You should definitely hold. You should, one can look for fresh longs also. 410 is now the area where one should maintain the stop, and based on the consolidation range closer to around 465 to 470, that should be our immediate target.
All right. The next counter we're talking about is Polycab. This one's from Sri Kishore Sharma from Bihar. They say they bought the shares at around 4,700 rupees. Shahina, I'm going to come to you on this one. Hopefully the regulatory action on this counter is behind us now, and considerable upside also here from the buy price. But from a fundamental point of view, how do you see this counter performing in the longer term?
Well, I think, after the income tax department raid, the stock had seen a substantial correction. But from there on, again, is bounced back. I think the fundamentals are in place. And I think the revenue growth also is likely to be strong. And we are likely to see margins also improving. So it's a hold from here on. Definitely, you can keep a stop loss. You keep a stop loss of close to about 5,000 rupees.
Fair point. BF Investments, wondering if you have a view, Shahina. We've got Satya who's asking about this particular counter. He's looking for a fundamental view. It's currently trading at 582 or thereabouts and up about 1% in trade.
Yeah, you can continue to hold BF Investments from current levels also. It's looking good both in terms of fundamentals as well as technicals. So you can hold it, and you can keep a stop loss of close to about, you can keep stop loss at about 500 rupees, which is a deep stop loss.
All right. Okay, now this question is picking two stocks from a medium-term perspective. This one's from Jay Krishnan from Kozhikode, and the couple of stocks that they've named are Bajaj Auto, Tata Power, Tejas, and Balaji Amines. Ajit, if you have to pick two out of these four stocks, which one would it be?
So all these stocks, they have already done pretty well. In fact, now we are seeing a bit of a breather in Bajaj Auto. So comparatively, Tata Motors look, better among these names, wherein we may see fresh traction coming in days to come. So definitely, you can hold your longs. You can buy fresh also with 975 being the stop and 1,050, 1,060 being the target area. Tejas Network, we have already seen a very sharp surge in the this week so far. It's up nearly 34%, despite the 2 days of pause or consolidation. If you have an existing position, you may continue to hold with the trailing stop at 950. But for fresh buying, I feel that one should wait and let the stock consolidate or witness a dip around 980 to 1,000 zone. Then one should look for fresh longs. Otherwise, one can refrain from accumulating at current levels.
Okay, fair point. That's a point. That's a view on Tejas. And by the way, the stock has been on a bit of a tear in the recent past. It is losing a little bit of steam right now. But we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in
Welcome back. You're watching Ask Profit, and this next question is an interesting one. It's coming in from Multan, and in fact, it is from Chandigarh. Shahina, it's interesting because he's talking about which stock he can buy from a 5-year perspective that is currently priced between 10 rupees and 50 rupees. And I think a lot of investors tend to look at the ticket price of a particular stock to make their decision about whether to buy or not. And we've stressed often that this is not necessarily the best way to look at it. Having said that, would you be able to explain why, one, this is not the best approach, and two, if incidentally there are a few stocks in that range that you like, what would they be?
See, one can buy such stocks, but provided it forms a very small percentage of your portfolio, especially if you're looking at it from a, trading perspective, it's fine. You can look at some stocks which are actually belonging to some sector as well as where there is momentum. I personally have got investments in Jaiprakash Power, which falls into this category. And, one can look at such stocks, but only if it's a small percentage of your portfolio. Do not go in a whole hog and put a large chunk of your money in these smaller, I would say, trading type of stocks, because if one is they don't have liquidity. If the market corrects substantially, you would be stuck. That is why create a portfolio whereas you can invest, because some of these smaller stocks give you the kicker over the longer term.
Well, thanks for that advice. And the next counter we're talking about is Salazar Techno Engineering. This one's from Shiv Kumar from Dubai. They say they bought the counter at 21 rupees. Now, Ajit, we've seen an all-time high of this counter a couple of months ago, but it seems like it's been on a downtrend since then. Would you suggest sticking on to it for a little bit more? Do you see some kind of upside and any specific targets you have on the counter?
Yeah, so the move was almost vertical from 8 to 32, and then we've seen this retracement in the last 2 months, almost 50% of the retracement of the entire move. The good part is that still trading around his buying price, and we have multiple supports also around 19 marks. So in case it seems like that it might spend few more sessions around the current level. So if the view is very short term, you may exit and switch to the counters which are anyways participating in the move. So stocks from the metal space like NMDC, SAIL, Tata Steel, these are the candidates if the view is short term. And if you wish to stay put, then you should maintain a stop at 19. And upside, I feel that a break above 23, 23.5 may result in further momentum towards 27, 28 mark. Around that levels, you may close this position.
Okay, I'm coming back to you, Ajit, on a pretty general question, and this is coming from Ashwini. It hasn't specified a time frame, but looking for which stock to buy at this juncture for gains, not specified a timeline either. So not necessarily a buy now, sell tomorrow kind of a trade, but maybe a short-term view on a stock that you like.
So certainly, as Alex, we have been seeing certain sectors like auto, metal, where we are seeing consistent outperformers. NMDC is one such name which we just mentioned, and as a disclosure, we have recommended to our clients also. 274, 275 is something that we are eyeing in the near future. The stock is quoting at 250, so one can buy NMDC at the current levels, stop at 240. Alongside with the NMDC SCI, wherein we are seeing fresh traction after almost 1.5 months of consolidation. Here also one can look for buying for short to medium term. The stock is quoting at 235, so your stop should be at 215, and positionally 270 to 75 is something that one can maintain as a target.
All right. The next counter we're talking about is 5-star, which is an NBFC. Now, this is from Amit Rastogi, who's written to us on YouTube. They're looking to invest into this counter from from 3 years perspective. Shahina, could you tell us the long-term prospects and the buying range as well?
I don't track the stock.
Okay. Ajit, I'll take it to you then. Any sort of buying range you have on this counter from a longer-term perspective?
It's been almost 1 year now that the stock has been trading in this band 780 to 640, 660. So we are currently in the middle of the band, and if somebody is planning, let's say for investment, then the lower band closer to around 660, 640 is the zone basically where one can look at accumulating the stock. And if you're planning anything for the momentum, means for the shorter duration, then one should wait and let the stock surpass 730 hurdle. And then 760 to 775 will be the target area for the stock. But as of now, it's a no.
Okay. The next question I will take is from Rahul. He's writing from IP Extension, he points out, and he's bought PI Industries at levels of 3475. He's looking at a relatively shorter term view, but I'll still come across to you, Shahina. He's looking at the next 6 months. The stock is trading at above his buy price at 3745. What should he watch out for?
Well, I think chemical sector is still got some more, way to actually start giving returns. So I would actually not be invested in this sector, and I would avoid PI industries. I would exit and probably look at metals or power.
All right. Next counter we're talking about is Star Health. Star Health, and this one's from Satya. They say they bought the counter at 774 a piece. The counter is below that, somewhere around 565 rupees. Shahina, do you have coverage on this particular counter? And if you do, what are the long-term prospects for this?
Yeah, Star Health actually looks decent at current levels. I think going forward, there was some bit of consolidation based on numbers actually being pretty weak. But I think going forward, things are looking better. So one can continue to hold for the medium to longer term.
Okay, Suresh from Chalakudi in Kerala is asking about Raj Oil Mills. I must confess that I'm not really familiar with the counter. Ajit, have you come across this, and would you suggest that it's something that you can get into at this juncture? It's up at upper circuit, if I'm not mistaken, right now.
In fact, Alex, I also cannot find this stock.
No, that's fine. That's understandable. Let me go to the next one then. We've got Kusum, and she's bought HAL at 3,800 levels, and she's wondering whether to exit at this point. On the charts, is that a good idea?
See, the defense-related counters like HAL, BEL, BHEL, they all are doing well. And as long as we are seeing this momentum continuing, one can stay put. And now, since she had bought it at 3,800 and the stock is already reached 4,000 mark, she may trail the stock to 3,940 just to avoid any notional loss, and wait for 4,100, 4,150 zone as a target area.
All right. The next counter we're talking about is Irida. Now, a recent listing, but this question is from Mr. Reddy. He's bought the shares at a price of 116, currently trading at 167. Shahina, long-term view on this one. We've seen the stock correct a little bit after the rally post-listing.
Well, it's given a fantastic performance, and valuations are stretched, I must admit, at current levels. But given the potential for renewable energy and the trading that is happening there, I think one can continue to hold. He can keep a stop loss of close to about 150, but it's a hold as of now.
Okay. All right. It's an interesting question actually from a viewer, Nagaraju, who's writing in from Hyderabad, and it's a space that I don't think has been explored too much here in India, perhaps because it's nascent. Shahina, he's looking at the semiconductor space. We've heard a few, rumors. We've heard some news items, but is there anything that you see existing right now that is listed that you can use to play that semiconductor theme?
I think it's too early. But one can look at some of the auto companies if you're looking at, auto power. But I think it's too early to specifically invest in semiconductors as of now.
All right. The next counter we're talking about is 361, and this one's from Rahul. Okay, we have already taken a question from Rahul. Let's move on to another one.
I've got the next question. Geo Financial Services, and is it the right price to get into this counter? And I think a lot of people are asking this question. Just take a look at the year-to-date performance of this particular stock, and you will see that it's had an incredible run. So I will come across to you, Ajit, on this one. What would you suggest somebody should do right now? Because if you look at the fundamentals, there are some people that are pointing out that there's a lot that is yet to play out for this counter, though we haven't really seen these businesses move yet. What is the view on the technicals, though?
So exactly, Alex. Though the stock prices have been inching gradually northward, and the stock is currently trading to its record highs, I feel that one should be selective, especially when the stock, let's say, corrects 5 to 10%, then only one should look for fresh buying. If planning for the short term. and do maintain a stop also. So let's say we are putting at 384. So any dip towards, let's say 370, 75 zone is the area basically where one can look for fresh longs. And a close below 360 might derail the entire momentum that we are seeing in the stock. So one should maintain a strict stop at 360 for any long position in Jio Financial.
All right. Next counter we're talking about is Z. This is from Amarnath Reddy. They bought the shares at a price of 140, so close to the current market price. Shahina, we've seen regulatory action. We just saw news about the personal, an insolvency plea that has been admitted against the founder of the company. But considering all of that, what's the long-term view on Z?
See, I personally have been holding it for a long time and extremely disappointed with the way the stock has performed. And I think, the issues regarding the promoter don't seem to come to an end. So if you're not really losing money on the stock, I think there are better opportunities available in the media space. You have TV18. So I think one can switch. I personally am holding, but, I don't see where this whole issue is going to end.
That's a fair point. All right, that brings us unfortunately to the end of this particular edition of Ask Profit. Shahina as well as Ajit, thank you so much as always for taking the time and for answering all the questions that you did. And viewers, it's practically impossible for us to take all of your questions over the course of just half an hour, but still hopefully the answers that we've got today have benefited you, even if we couldn't take your question. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and have been the flavor of the season. But before that, a quick look at the markets, and we are looking at gains coming through, even though it's been an extremely volatile day of trade, and of course perhaps on expected lines because it is a day of the monthly expiry. And while the Nifty remains flat at the moment, we have seen plenty of volatility in the respective futures. Now let's pull up all the companies which are in fact leading to the pull and push in today's day of trade as far as the Nifty is concerned. So we do have names such as Kotak Mahindra Bank, which is weighing down on the index. On the other hand, names like Axis Bank and ICICI Bank, well, providing some sort of, I would say, support to the index at the moment, along with SBI, of course, and ITC. But it is largely something like Kotak Mahindra Bank, which is weighing down and, in fact, providing for more than half of the decline in terms of points as far as the Nifty is concerned. But to counter that, we do have several other banks which are, in fact, up and about in trade. Well, but to talk about the broader markets, and at the moment there is a little bit of a mixed trade going on. They're also flat right now. Mid-cap index moving largely in tandem with the benchmark, and the small-cap index, of course, is up by around 0.6%. So we do have plenty of traction there. And the small cap index continues to move upwards, defying gravity, and this is irrespective of whether or not the other broader markets are doing well or no. I want to very quickly take a look at what's really happening in buzzing as far as the broader markets go, and see where there is trade which stands out. So I'll take a look at something like a Bharat Forge, because that's up around 6%. We have gains in AB for Capital, that's up around 5%. Mazagon Dock is doing well in today's day of trade, that's up around 4% as well. We also have something like a Delivery up around 3.4%. On the losing end, of course, we have Dalmia Bharat, which is down around 7%, followed by Indian Hotels reacting to earnings, down around 5.5%. And then we have Macrotech Developers, that's down around 4.4% as well. In terms of Macrotech, we are awaiting the conference call details coming through, and this should be at 1 o'clock today. That's where it's slated to be. We'll have a lot more clarity on the quarter gone by, which has been a strong quarter, there's no doubt about that, with the kind of bookings that the company has seen, as well as the entire realty pack. But what lies in store going ahead in terms of inventory, in terms of demand, we'll have a lot more clarity in terms of Macrotech Developers going in. And of course, we have Max Financial and L&T Tech as well, declining by around 2 to 2.25%. That said, let's talk about all the counters that we're going to be addressing in the show today. So, naturally, we're going to talk about Kotak Mahindra Bank, Axis Bank, two sides of perhaps a coin, if you can put it that way, because one is doing very well in trade, the other one is in fact under pressure. We're going to talk about Hindustan Unilever, that large FMCG behemoth, which is in fact under pressure today as well on account of earnings. It seems like growth is becoming a challenge for this particular company. Dalmia Bharat, Indian Hotels, as well as Bharat Forge on the back of a broken note. And to take us through, the views on several of these stocks, we are in conversation with Mohit Nigam of AIM Securities. Mohit, good afternoon. Thank you so much for joining in. Mohit, before I come to you, let me take up the first topic of the day, and that is Kotak Mahindra Bank, down by nearly 10% in today's day of trade. In fact, over 10% at the moment right now. I'm going to get in my colleague Harsh to tell us more about this one. Harsh.
Looking at just the ballpark numbers and the impact, around 3.7% of the portfolio is credit cards. That will definitely struggle to grow because you won't be, or rather Kotak won't be issuing any new credit cards at least for the 9th to 15th month kind of period for sure. This portfolio has grown at 52% year over year, at least ended Q3 FY24. Q4 numbers yet to come out. So it's low base but very, very high growth. Outside of that, you have their BNPL products, which they sell through Kotak 811 and through online channels predominantly. 90 to 95% of them are sold through online channels. And that too has grown significantly quickly, roughly 33% on a year-on-year basis, 8% sequential is how that portfolio is growing. And that will also likely see a bit of a tempering or a slowing down. But I think the largest impact will be on new customers. New customers added over the last 1 year till Q3 FY24 was roughly a crore, which is a 25% growth from 3.9 to 4.9. So that growth might just taper, and that number one would have to wait and watch out for as to where that number is, because if new customers continue to get added, then likely some of the other products they can continue to do should not be a problem. So some commentary around that will help, but currently we have most brokerages maintaining or just about reducing the target price, not the rating on the stock. So that's the first piece. Now stock down 10%. 3.3 lakh crore in terms of market cap, 90,000 odd crore in terms of standalone book value cumulative, and therefore the stock on a consol basis is trading at roughly 2.6 times price to book, well below its long term as well as short term as well as medium term averages, well below it. So definitely something to look out for, because the stock has taken a bit of a beating in comparative terms to itself, trading at quite a low in terms of book value.
Absolutely, Harsh, point taken for considering the valuations, and especially for a stock which really hasn't done too much in the last 5 years. In fact, the returns are zero at the moment, and it's been a clear underperformer with respect to the entire sector as a whole. But perhaps for a good reason, at least according to RBI. Mohit, welcome to the show. Let's take your view on how you would go about Kotak Mahindra Bank. How are you assessing the current scenario around this bank?
Thank you for having me here. So regarding Kotak Bank, as Harsh rightly pointed out, that it is trading around 2.6 price to book, and which is quite low from what it used to trade maybe 1 year, a couple of years down the line, because of the high quality the bank got associated with. I think it's a good opportunity to accumulate this stock for a longer term, but I would rather wait to go gung-ho about the stock's correction right now and wait for some more clarity about the implications of this action by RBI. At the same time, these levels, as far as valuation is concerned, is good, and maybe one or two good solid triggers on the positive side might initiate some rally in Kotak and HDFC Bank, which are long time due. At the same time, there is a plenty of action in other banking stocks on the PSU side or maybe on the Axis Bank side. So clearly market is rewarding the good numbers and good commentaries, and market is punishing it hard, the steep valuations and any negative news in the steep valuation counters.
Well, just a follow-up question there. You mentioned, one or two solid positive triggers. For Kotak Bank, what could they possibly be?
So yesterday, Axis Bank released its number, and the numbers came out, more than what the market was expecting. Market was expecting maybe 6,300 CR of PAT, and whereas Axis Bank crossed 7,000 CR, and it also gave a positive guidance that they are going to outgrow the industry by 300 to 400 basis points for the next 3 to 5 years. So already we are having a very dream run as far as growth is concerned in India, and where we are seeing around 15-16% of rate growth for the last couple of years, which is very healthy. And it looks that a bank which will beat the industrial growth, which will keep the NIM and NPA in check, and which are valued.
Mohit, pardon me, I do want to talk about Axis Bank, but my question, I'm really sorry if I had, misunderstood, but my question was to do with Kotak Bank, and, I was a follow-up question on that as to what are the possible, 2 or 3 solid triggers for Kotak Bank going forward.
Maybe more clarity on this part, bank acting on the statements issued by RBI, because they have been avoiding this for the past couple of years, as in when these things become clearer, and maybe banks going forward does more on the numbers side, outperforms the industrial numbers, then only we will be seeing a good run up in Kotak Bank. Otherwise, it's lagging since a couple of years, and the guidance on the credit numbers or a very good result can be only savior right now. But these levels are good to accumulate it gradually, and because overall in the longer term, Kotak Bank will prove its name again.
Okay. All right, Mohit, stay with us. Before I come back to you, let me get in my colleague Mimamsa to tell us about the Axis Bank numbers. Mimamsa.
Axis Bank reported a rise in net profit in Q4, primarily due to a 12% rise in other income on sequential basis to around 6,700 crores. The management also talked about the strong fee performance driven by retail fee growth and significant gains in trading income. Now, this is the rise that has led to return on assets rising to nearly 2% mark, and strong traction in the fee income is expected, and as well as the trading income is expected to keep return on assets around 1.8% in the coming quarters as well. The key positive is the marginal NIM gains despite increased cost of funds, while higher OPEX growth continues to remain a key concern. The year-on-year figures for Axis Bank are not comparable because of the Citibank's consumer business acquisition that happened in March last year. If we talk about deposits, the management expects deposit growth to remain constrained in the current liquidity conditions, and the loan growth is also going to reflect the same. Building strength and quality of deposit franchise, which is what the conversation has been in the banking system over the past few months, that has been a key focus for the bank, and the bank has continued to build that quality of deposit franchise over the past 2 years, and the trend is likely to continue in FY25 as well. On advances front, the demand from corporates is broad-based across sectors, and incremental demand from corporates is expected to continue, but the management expects the income on the wholesale bank side to come through fee income, like I mentioned earlier, as corporates are borrowing more from the debt market instead of going to banks. Asset quality remains stable. One very important point that I would want to highlight here, Alex, is in the light of what happened yesterday with Kotak Mahindra Bank. Axis Bank in its call has pointed out that on tech infrastructure, the management of the bank is splitting some of its core banking systems to manage high velocity and low value transactions, so that they can manage those kind of transactions separately, and they're continuously building resilient IT infrastructure. But this is an area that can come as a surprise as any day, so the bank is being very, very careful about it, so as to quote them verbatim.
Right, thanks so much, Mimamsa, for that update on Axis Bank. Mohan, let's talk about Axis Bank now. You were mentioning about all the takeaways from the conference call. Can you take us through your view on Axis Bank?
So as a disclaimer to begin with, we have it in our PMS fund, and we have been holding it since quite some time now. We are positive on Axis Bank, and we saw some valuation gap initially, and we saw a really turnaround in the bank in the last 3 to 4 years when the top management got changed. Recent results are substantially reflect the kind of hard work the top management has been putting in. The valuations still have some room to grow. It's trading around 2.6, 2.7 price to book, and surprisingly, it's almost in line or even better. Or in line with HDFC Bank and Kotak Bank. So that is the kind of run-up the bank has given, and it has been an outperformer. Most importantly, it has given a positive guidance for future. That is what the street is looking at, because it's rewarding, as I mentioned earlier, it is rewarding the uptick in guidances in future. Now, on the counter side, the YOY numbers, as your colleague has mentioned, are not comparable because it had a Citibank impact also in the past financial year. Overall, positive guidance, moderate valuations. We feel that Axis Bank is a good stock for longer term, and you should have it in a portfolio. You can accumulate on any downside.
Okay, Mohit, stay with us. We'll slip into a short break, and on the other side, we get you the balance of the list that we intend to discuss on the show. Back in just a bit.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent.
Welcome back to Hot Money. We take stock of HUL and what brokerages are making of the earnings. We do know that it's not exactly been a very satisfactory quarter, which has in fact not seen any growth coming through either. But I'm going to get in my colleague Mahima to tell us more about what the street makes of the earnings. Mahima.
Right, Agam, so as you rightly mentioned, the earnings were not up to the mark, and this has been the trend over the past quarters. But however, the brokerages are still bullish on HUL. I'll start with MS on HUL. They're saying that it rates equal weight with the target price of 2350, which is around 4% upside from its closing price yesterday. The numbers were below their estimates, and weaker top line growth is expected in near term. And this is on the back of lower volume growth. However, they are expecting that gradual demand improvement will continue over a period of time. Then we have Citi, which is maintained by with a target price of 2755, which is a 22% upside from its yesterday's closing price. They've said that the Q4 results for them were in line with the expectations. They believe that their initial signs of they're seeing some kind of initial signs of eventual performance which will accelerate in the coming quarters. They're expecting growth in terms of negative pricing, and this could reverse in the H2 FY25, and they believe that companies' self-help initiatives could drive the turnaround. And lastly, there's MK on HUL. They've rated it ad with a target price of 2,500, which is an upside of around 10%. They're saying that HUL struggled to revive growth and recoup margins is reflected in their stock at present. The stock is trading 22% almost lower than its 52-week high, and they're concerned about the demand. However, Q4 results were in line with a flat top line and 3% earnings dip. They're saying that the management commentary suggests that actions are in place but with a lag, and concerns on demand slump and inability to drive in time innovation is something that is pulling down HUL. And overall, they've given a CAGR for FY24 to 26 of 5 to 6%, which is below the consensus. So this is the overall street view for HUL.
Okay, well, that's the view on HUL. It's down around 1.5%, but it still remains an expensive stock. Let's not forget that, but that's also largely on account of old holdings from institutions and old hands or old ultra high net worth individuals who perhaps would want not part with a traditional conventionally held stock like this one. But Mohit, coming on HUL, what's your view or what's your opinion on this one?
Okay, so mostly I think we can avoid this stock because the stock performance will reflect two variables. One will be the price action of its products, and second will be demand. And company has clearly stated and indicated that on the price front they will not be able to do much, and on the volume part also they are not expecting a major jump in volume, maybe 2 to 3%, 4% YOY. That is what the consensus is building on. So there is no positive upside as far as or any positive trigger as far as why one should enter in the stock at the current prices, which is still trading around 51, 52 of PE, when you have better opportunities growing at a faster pace. So HUL for now may be avoid.
Okay, so it's an avoid for HUL, and from there on, let's talk about Dalmia Bharat. This one is also in focus, buzzing, under pressure right now. Going to get in my colleague, Mika, to tell us why this one is down 7.5% at day's lows. Mika.
Yes, so it's on the back of their quarter four earnings. While revenue was up 10% year-on-year and did beat estimates, their EBITDA and net profit was down on a year-on-year basis. EBITDA was down 7.9% and margins contracted 295 basis points and missed estimates at 15.18%. Now, what was mainly causing the EBITDA to be under pressure were the cement prices. Now, all India average cement prices were down 6% on a quarter-on-quarter basis, and what this does does is it lowers the realizations for the companies and in the end also impacts the EBITDA per ton. Additionally, total expenses were up 13%. Now, cost of raw materials consumed was up 4% year on year, and logistic costs were up 2% on a year-on-year basis too. But when you look at conversely on the volume picture, they did have industry-leading volume growth at 18.5% on a year-on-year basis at 8.8 million tons for Q4. And lastly, their FY24 volumes were up almost 12% on a year-on-year basis at 28.8 million tons.
Okay. Mohit, I understand that Dalmia Bharat is not under your coverage, but in the cement sector, any stocks that stand out for you which have potential or an opportunity at the moment?
So we are holding Ultratech since a long time. It's the #1 name in this space, and the kind of capacity expansion they are doing, the kind of inorganic and organic growth they are targeting, that stock is something which is in our holding since a long time, and we are still bullish on it. Cement, as your colleague mentioned, cement prices are reflecting a lot of volatility on the realizations and EBITDA per ton of cement prices. Let's see how quickly they pass on, and not to forget the next couple of months can be a slightly less. There can be slightly lesser order inflow as far as new projects are concerned for the cement company. So overall, Ultratech Cements, based on the kind of future outlook we have, we are quite solidly bullish on it.
Fair enough. And of course, as we all know, that Ultratech is one of the larger companies in the sector with a steady, geographic footprint in India. But from there on, we talk about Indian Hotels. Now, before I go back to Mohit on this one, we spoke to the management of Indian Hotels earlier on the quarter gone by and what worked for the company. Listen in.
Ours is a bit of a seasonal business. So Q3 is always the best quarter and will remain in the foreseeable future. Q4 is the second best quarter. And as the base keeps increasing, the percentage rise will start declining, because just imagine coming out of COVID, where we had almost nothing. We started showing growth in like triple digits. And then it went to high double digits. And at some point of time, it has to come back to single digit. Important is to look at the CAGR of last 5-6 years. And if we looked at that, then we are showing and demonstrating, both as a sector as well as our company, a very high and a very healthy growth.
All right. Mohit, that was the management of Indian Hotels telling us about what we can expect going forward. But Mohit, how are you viewing this one? We've seen quite a bit of traction in the hospitality space. What is your view on Indian Hotels?
So overall, we are positive on hospitality sector. At the same time, we need to keep in mind that this sector has given a very good run-up, a solid run-up in the last 1.5 years due to the increased trend of travel and leisure stays. On Indian Hotels, we have a positive view. At the same time, the valuations are quite rich now. So wouldn't recommend a fresh entry unless there is a significant correction from these points. Most of the positive factors are factored in. At the same time, the management, as you mentioned, has given a positive guidance about their future, their expansion plans, and the number of hotels they're going to add. At the same time, I think that the valuations are reflecting most of the positives.
Okay, well, that's Indian Hotels, and that's what Mohit makes of this particular company. Of course, plenty of traction there, and it's something to keep an eye on as well. I also want to talk about Bharat Forge, but before that, very quickly, I also want to address what's happening in the markets right now. And we are looking at a flattish move out there, and it's not we're not seeing too much movement now. It does seem like volatility has abated for now in the last 15-20 odd minutes. It is flat at the moment, and it's a wait and watch, because it may just turn out to be a volatile last couple of hours because of simply a lot of traders being thrown out of the positions in the first 1 hour of trade. And especially when it comes to option traders, it's going to be a challenging one to speak for. But, the final stock that we want to address in the show today is Bharat Forge. I'm going to get in my colleague Puneet to tell us more about why this one is advancing by 7%. Puneet.
Yeah, thanks for that, Agam. So there's a big brokerage call coming in from Bank of America on Bharat Forge with a target price of 1,450 rupees, which is an upside of, which is a potential upgrade of 45% from the previous target of 1,000. This is back on a widely expected downturn, which was expected in the US truck market to not be so severe as expected. They are seeing that the market is remaining elusive to such downturns going forward, while the truck down cycle, if any, would be in the second half, would be quite shorter than expected. They see that the large global truck OEMs are pointing to a steady demand revival going forward, while the two key metrics such as spot truck rentals as well as used truck vehicle prices have started to inch up as well. Finally, the company's underperformance versus other truck makers since the start of the year offers good risk reward, while the new emission norms in the US, which are expected to start from 2027, offer a key trigger for pre-buying in the 2024 to 2026, which will be a key trigger for Bharat Forge going forward. They see that the other defense as well as the industrial verticals are offering good positive upside from here as well, and they have upped their earnings estimate by 7 to 15%, raising the EV by EBITDA metric to 18 times for a target price and a potential upside of roughly 19% from the current market levels. Back to you.
Right, Puneet, thank you so much for joining us and taking us through the latest broking note on Bharat Forge. Also taking a moment to thank Mohit for joining us and for taking us through his views on the several stocks and themes that we've addressed on the show. And with that, it's also a wrap on this edition of Hot Money. Lots more lined up on the other side. You're watching NDTV Profit.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Vocard will exercise their voting franchise.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma,
Welcome. We're talking about Kotak Mahindra Bank today. The big story all through the day and yesterday, especially when the RBI has taken some very stringent action against one of India's largest private banks. The action will have impact, of course, on its revenues, etc. But the big question really is, what does this tell us about the preparedness of Kotak Mahindra Bank and of our banking system to onboard customers digitally? Remember, that's where the issue seems to be. So what has the RBI done? Let's begin with that. The RBI issued cease and desist orders for Kotak Mahindra Bank to onboard new credit card customers. That means no more fresh credit cards will be issued by Kotak Mahindra Bank. But it's not just that. They also cannot get new customers online or through their banking apps. That means no app, no mobile, no digital onboarding of customers. Now, why is that important? Because about 90% of all the new customers for Kotak Mahindra Bank, like a lot of the industry, do come online. The reason is why? The reason is because of IT issues. The RBI found serious deficiencies in the IT system of Kotak Mahindra Bank and has been dealing with them for 2 years. They failed their IT compliance test that RBI routinely has for all banks. They were asked to fix things. They could not, and hence they had to come and take this action. Now, before we get into the details of implications, etc., and also the NDTV Profit exclusive, there are some big questions that I would like to pose. Number one, should it take a large bank like Kotak Mahindra over 3 years to fix IT issues? The management says they will resolve the issues shortly. My clear question is, why couldn't they do it so far? Why should a company with profits over 15,000 crores be deficient in IT systems? Were the right investments not being made? Was it not being given enough attention? And also, should the RBI have stepped in earlier if customers were being onboarded in large numbers with what the RBI clearly thinks is a deficient IT system? In fact, that seems to be part of the problem. As more and more transactions happen digitally and online, the bank system was not able to handle the load. Should the RBI also clarify if there is a risk to customer data? Because in its communication, it talks about, among other things, concerns with data security. What does that really mean for customers? We're going to get into all of those details, but I want to go across first to my colleague Pragati, who's been tracking this story very, very closely. Pragati, it seems the April 15th outage, which was the latest in a series of outages as far as Kotak Mahindra Bank is concerned, was perhaps the last straw. And that really was the problem, isn't it? The whole system wouldn't work for customers.
Yeah. Right, Tamanna, you're absolutely right. So April 15 was just one of the first or one of the latest instances, but sources told us that these instances were actually very, very common and they were happening frequently over the last 2 or 3 years. And that was one of the reasons or concerns that the RBI had with the bank, apart from 4 others. But before we delve into that, I would like to inform our viewers this latest NDTV Profit exclusive, that because after the RBI imposed curbs on the bank's new CEO, that is Mr. Ashok Vaswani, has also sent an email to the employees, and that's the latest exclusive that we have for you. Sources told us, in fact, we also reviewed a copy of the email that Mr. Vaswani wrote to the employees, and he said that there is a need of a better IT infrastructure because there has been an explosive growth in the business via all these channels, and that is the reason they need a completely different level of tech infra. In fact, he has also acknowledged the efforts of all Kotak employees, but he has said that the bank will work closely in order to find solutions to the latest problem. Now, let me take a step back now. This was the latest update that we had for you. Let me take a step back now and come to what is the core issue or what caused the entire mess at Kotak Mahindra Bank. In the morning as well, we brought this exclusive to our viewers that there were 5 main points or main issues that the RBI faced with Kotak Mahindra Bank. We have that on screen for viewers. One is the scalability. The next is multiple outages. Third is the detail of these outages.
Fourth is the inadequate tech infra. And fifth is an additional contributor to the issues, that is the high volume UPI transactions. If we have to go in depth for all these points, one would be the scalability of the core banking system at the core of this issue. Now, sources told us that while the IT audits or inspections were going on for last 2 to 3 years at Kotak Mahindra Bank, the scalability of the core banking issue or the inability of the core banking system to come to a scale level in order to handle the bulk of these transactions was at the core of this issue.
Understand this is important, and let's understand this point by point and in simple terms. When you say scalability, essentially the rate at which new customers are coming on versus what the system could handle was just a complete mismatch, isn't it?
Yes, that's what sources made us understand in simple terms, that the system was not at least in terms of size or efficiency, was not equipped enough. The customer onboarding or the number of transactions and the volume of transactions was much larger than what the system could actually handle. In fact, we have an instance also here on our screen as an example. Sources told us that about 30 to 40 hours of outages were being reported in a year.
Say outages, that means at that point the customer cannot access their account, apps, etc. Is that the impact of outages?
Yes, in broader terms, yes, we can say that. That would be an umbrella way to put it, because these outages, when we are saying 30 to 40 hours of outages, these outages are a broad umbrella word. Why? It can include inadequate UPI transactions, transaction failure, inability to log into the mobile banking app, and so on and so forth.
You know, you talked about the management's commentary. I'm just wondering if they're saying anything or explaining anything on why they couldn't fix it all of this time. Because that's really the question. It's a large bank.
Yeah. So what we have gathered so far is that they did have multiple action plans in place, and they were submitting those reports to the RBI, and there was a constant conversation happening between the regulator and the bank. In fact, sources also told us, it's a very interesting point, Tamanna, that they said that they were on the verge of completing all the changes that they had planned to introduce, but the clampdown happened right before that. So while we don't have the exact details of the timeline, but they did indicate that to us.
No, I mean that's like saying, you know, I couldn't finish my exam paper before the invigilator took away the paper. I mean, the fact is that when the bell rings, and the RBI has decided to clamp down. We'll come back to you for more Pragati, but meanwhile, let's get our conversation going. We're joined now by Abizar Divanji of EY India Financial Services leader. Abizar, great to have you on the show. And thank you so much for speaking with us today, because we want to begin with understanding the magnitude of action that has been taken against Kotak Mahindra Bank. Remember, the RBI also acted against HDFC Bank in the past for IT issues. Is this action much more than HDFC Bank?
No, well, there's no question of it being larger. There is no evidence to actually prove that it's any larger or lesser than that. I think the larger issue here is that banks are going through a transformation where they are digitizing the whole banking process, especially the retail banking process. And as part of that process, I think procedures are changing quite significantly. Be it HDFC, be it Kotak, I think it's all the same, or be it even IIFL or JM when we saw earlier in the NBFC space. So what's really happening is that there is a new way of getting more and more customers onboarded, more and more transactions being done digitally. Customers are being assessed, approached, and sanctioned or banked with digitally now. And that has changed a whole lot of processes in every bank. And like in every change in process over a period of time, there will be lapses that will happen in the processes, which are a constructive way of moving towards best processes. The best way to look at this is to make sure that every entity which is being audited or governed, every audit entity which is not yet audited but yet to be audited, as well as the regulator, needs to take this as a constructive process of remediating the bad processes and making sure that we move in a continuous path towards making sure that digitization happens. It's happening everywhere in every industry. Banking has taken the lead. And because banking or financial services is a highly regulated industry, we are seeing more and more of regulator intervention in that. But apart from that, I don't see that as one being of a higher magnitude than the other at all.
No, what I mean when I say higher magnitude, I mean in terms and context of the RBI's action. The action the RBI has taken against Kotak Mahindra Bank versus what it took versus HDFC Bank. Is this of a higher magnitude?
That may be, but so there is existing customers who are continue to be serviced, whether it is credit card customers or existing bank customers. Now, all it says is that take a pause in the process that you're doing, try and remediate that, and then move ahead and do it. I think it's a constructive process where the regulator has to understand the bank and the bank has to understand the regulator and arrive at a mid path, which is called the remediation path, which is acceptable to both, and move on. Now, the thing is, what is acceptable to both is a big issue, because normally the enterprise gets more aggressive in terms of moving towards a digital path. The regulator tends to be more conservative, but the path is somewhere in the middle, and that is what the remediation needs to be arrived at. So it's made out that, I can understand what happened to a Paytm bank, which said stop operations. I think that would have been a drasticer measure. But when you talk about saying suspend operations so that you can rationalize and get back on track after consensual recommendations are implemented, that's I think a fair regulatory process in terms of the learning between the regulator and the regulated.
The question though, Abhizar, is how was this taking 2 years? Why should it take 2 years? And those are some of the big questions that we've posed. How do we look at it? Does this mean that the bank was not taking it seriously when the RBI kept saying that this is not working out or this is deficient? Or did the RBI act harshly and decide to make an example of Kotak Mahindra Bank?
No, so what happens here is that because these are all newer processes and digitization, as is everything else, is a very, very discovered or discovery in the process of being discovered process. What's really happened as part of that is that the banks would normally have a particular point of view of what is sufficient for them. The regulator on his part will have a particular view of what is sufficient of them. Now, what happens sometimes is that in a particular situation, the regulator as well as the bank may interpret a situation very differently. It could also be possible that in different situations, the regulator may be interpreting something differently for different banks. So ideally, because this standardization itself is an evolutionary process and takes time, one has to give it that time to happen. To say, oh, I did not follow rules for 2 years is not the answer. The answer is that there was an interpretation which I had, there is an interpretation that you had. I tried to mend it by a particular way which I thought would be sufficient for the regulator, which the regulator possibly did not think was sufficient. So it's going to be a dialogue process between the two of them to resolve it. And I think, frankly, this is like, we are going towards a path where banks and financial institutions who have adopted digitization and are at an advanced stage of adopting are actually paving the way for a smoother highway for the others to come through. So there will be a lot of impediments in between, a lot of remediation to be done in between, and the process has to be taken constructively. That's all I would say.
All right, stay on with us, Abhizar. I'm also inviting Ashwin Parekh, Managing Partner of APAS, to the show. We're speaking with Gurmeet Chadda of Complete Circles PMS today. Welcome to both of you, and thank you so much for joining us as we try to dissect and understand really what the issues are over here. Gurmeet, let me begin with you. And a variety of views, especially in the market, on how much this will impact Kotak Mahindra Bank. Obviously, sentimentally it has, the stock has reacted negatively, etc. But the question is, what is it telling us about the ability of the bank to scale up the way it wants to? And why this extent of deficiency? This is a very core and basic kind of requirement.
It is surprising, Tamanna, and it's not restricted to Kotak alone. If you see HDFC, Axis, leading private banks, there are frequent outages. Most of the time, the servers are down, especially during month ends. And I'm actually surprised. HDFC does 70,000 crores of quarterly PAT. Kotak does 3,500 crores. ICICI has 10,000 crore PAT. So the IT spending has to pick up. And this is not something which is new. And if you see the observations, they have also highlighted the 5 points where they found, the observations. One was inventory management. Second was user access. Then they pointed out to vendor management, and they also pointed out to data security. So there were 5 areas they were, and this is not the first bank. HDFC had a similar issue a couple of years back. Took almost 18 months to fix it. So what this does is that in this new digital world, while the current impact looks limited, the growth gets impacted. So let's say out of the saving accounts they have been opening, 70% of them are being digitally opened, especially with the 811 scheme. Personal loans, most of them are digitally disbursed. Credit cards, 99% are digitally now originated and done. So, and there is a big impact on the liability sides. We are just looking at cards being only 4%. It's not as simple as that. I think the message from RBI to all banks is very clear. This is not just Kotak, I'm just putting all private banks, is that you have to, increase spending on digital infrastructure, make systems more robust.
No, but my question is, Gurmeet, why not? It's not like these banks have no profitability or are doing very badly or are doing very poorly. They are extremely profitable enterprises. I don't understand why they wouldn't spend. It's definitely not a question of budget. Is it a lack of understanding to the extent of which they needed to comply?
No, it's a combination of banks being slow to react and like the explosive growth we are seeing digitally. I don't think so. The kind of for example, look at UPI transactions. This is one of the another area RBI has highlighted. Also, the growth has been very high. And Kotak in particular, the growth has been more digital. Unlike HDFC, which is let's say adding 800 branches a year, Kotak is more like 50 to 80 branches a year. Right? So they've been relying more on digital. So I think it's both the pace of the growth and the bank's ability to catch up with it. And India hasn't seen those fines, Tamanna. I've worked with Citibank. There were billions of dollars of fine on, and Citi never had a issue till now, despite they leaving India. So I think the banks now need to realize that the future is digital, and I think the message is loud and clear. And I agree with you. I am surprised. Had it been a tier 2 bank, it's okay. But the likes of Kotak, which are marquee banks, very high on governance, great leadership, it does come in as a surprise.
Ashwin Parekh, great to have you on the show. Just wanted your take on what the message is from RBI, what it's telling us about Kotak Mahindra Bank and how they will have to really pull up their socks very, very quickly. I mean, we've got that exclusive excerpt from the management on what they plan to do next. They say they will fix it. My question is, what is your takeaway when for over 2 years this problem persists and you don't manage to do anything about it?
So see, let's look at the issue on hand. One, of course, is when you're dealing with whether it's onboarding or whether you're really conducting the transactions, assisting the customers to conduct the transactions. When you're doing it online, one thing becomes very particular. See, if you ever use, let's say, for example, any one of those platforms, payment platforms, one bank, the debit bank, will normally debit your account. And then the other bank has to really complete the transaction by accepting and putting it in the account of the payee. The trouble in case of online banking is that if you make the other leg of transaction wait, then the transaction does not get completed. Customers feel very frustrated. Sometimes you wait, let's say on these platforms, whether you're making an online payment or whether you're making even a QR code or a UPI payment, for instance. If you make the customer wait, it becomes very difficult. And then if you reject the transaction, in the sense on account of technology outages, then it does become very complicated. So that was one part of the whole story. The second is, in this day and age, when we know that we have to handle a large number of transactions, online transactions, and they have to happen on a real-time basis, outages can cause a lot of trouble, not only to the customers, but also to the system. And there are systemic issues that can arise, basically. So, I would certainly say that there are concepts. Like, for example, peak transactions, and then you build your capacity, your scalability is one of the issues we talked about. You build your capacity in keeping with that. You continuously monitor that your scalability is at least 2 to 3 times the peak transactions that you have in a day. And you have to make sure that each and every application that you have with your core banking is well aligned, basically. So I would still believe that 3 years is a little bit of a too long period. All the excuses about the fact that the number of transactions has gone up or whatever can be very valid if you had a situation like this for 3-4 months. and you start paying more attention to it. So 3 years or 2 years, or I think more than that.
Exactly. I think there's a lot to be answered in terms of why Kotak has had this lapse. And what the reason is. We'll take a very short break. When we come back, we talk about the RBI's slew of actions. Remember, Kotak is only the latest in line. What is the message the regulator is giving? We'll come back with that after this break.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Okay, welcome back. We're talking about Kotak Mahindra Bank, and I just want to quickly take you through this timeline of all of the action that the RBI has taken in the recent past in the banking system. Kotak Mahindra Bank is one of the latest. It's not as if the RBI has not taken action previously. December 2020, they asked HDFC Bank to stop all forthcoming digital business generating activities. It took, remember, HDFC Bank over a year to fix this, and assessment is that it's going to take Kotak Mahindra Bank also upward of 12 months to fix the issues that the RBI sees. Remember, HDFC Bank was also asked to stop sourcing new credit card customers in December 2020. Through then and after then, you've seen action on a variety of financial institutions, whether it's Paytm, whether it's Bajaj Finance, and of course, the latest being Kotak Mahindra Bank. Gurmeet Chadda, I want to come to you on, what is the message that the regulator is giving? And does that make investments in banks a bit of a risky proposition, because you never know when this is going to come up?
See, financials will always have a regulatory risk, especially in the digital age. I think the only answer to that is diversification. On if this can happen to Kotak and HDFC, no entity is safe from regulatory supervision. And I believe the entire industry needs to take note of this, that this is a new era. The business has to be done differently. I think also it could lead to a bit of re-rating and de-rating in few counters. You're assigned a 4-5 book value on the growth you do and your pristine asset quality, which Kotak and in general HDFC have also been there. Now, if there's any ban on digital front, will impact growth. I mean, while we are being short-sighted if we are saying that the financial impact is limited now, but in terms of growth, if you're a 4 book value, you have to grow at 20-25%, and digital was forming a large part of growth for most of the private banks. So I think first is the price correction which happens, and then there is a bit of a time correction and maybe a bit of de-rating, because these issues take time to fix. I don't see issue getting fixed so easily. However quick be the response, there is an external audit. So I think the message is clear. There is no compromise on digital ecosystem. You have to spend more on data security. And I think the entire industry probably needs to come up. I am actually a little surprised. I had a look at some of the IT budgets for a lot of the large banks, and I must say that they are very short of what they should be.
Wait 1 minute. I'm interested in that. So what did you find? You went and looked at the IT budgets of these banks, Gurmeet. You think they're not spending enough?
Absolutely not. It's visible, Tamanna. You don't have to put numbers to it. Just go to any branch every week, see the number of times servers are down. The recent was the year end. I mean, from 28th, 29th April, March, when you had a year end, so many outages. There was a couple of days back, message from HDFC Bank that net banking is down. So I think this has become normal. It's like, the call drops in telecom. To be honest, I'm sorry, I'm being a little harsh here. I've worked with Citi. I've never seen this kind of, net banking issues. For almost 4 years, I was with the bank. One-off is fine. I think it's almost becoming a rule. So I think the banks need to take cognizance of this, that regulator, and I think we haven't started fining yet. Look at US, the way they fine. I mean, look at the track record of Citi or Barclays and how much fines they have paid in last 5 years. You get to understand how serious this is.
So fine, at least they've not been fined yet, but the fact is that this is also going to impact Kotak Mahindra Bank quite a bit. In fact, I want Abizar's view on this. Two ways of looking at this, Abizar. Is the RBI giving out a message to others, long overdue, their action, or, is Kotak Mahindra Bank now giving the impression that they didn't really listen to the RBI for 2 years? Do you think the regulator is being too harsh?
So, if I were to wear a regulator's hat, I think there is nothing excessive as long as I'm trying to be conservative. If I take a company's hat, I would say that one needs to innovate faster. See, in every situation, the company would be innovating much faster than you expect the regulator to innovate itself. So there is a gap. Now, what I would do as a regulator is not say that this, I would not interpret this to be excessive. I would say that the regulator is concerned. There is skepticism at the regulator, and the skepticism is always justified because you are entering into newer territory. And to stabilize that territory, there will be 2 steps forward, 1 step backward. It will happen. And I think that is the constructive process in itself. What the banks have to do, or the financial institutions have to do, as well as the regulator has to do, is to take it as a constructive process and make sure that both sides are open to what they hear, and then arrive at a consensual remedial process. Because it's not that the banks are fully correct. It's not that the regulator is fully correct. And somewhere in between is a discovered process that can happen through dialogue.
Yeah.
Because the regulator has a different level of comfort, the bank will obviously have a different level.
Okay, so that was a safe middle path kind of answer, Abizar. But the fact is, in this particular case, you've had quite a bit of skirmishes between Uday Kotak and the regulator on various issues. Just on the stance of the regulator, I want to ask Ashwin Parekh his view. There are 2 ways of looking at it, Mr. Parekh. One is, was the regulator too harsh? One was that, yes, at least in this case, the bank definitely deserved it. What would you say?
Sure. So let's look at it this way. I would certainly say that the regulator is not being harsh at all. And look at the other environments. Let's look at stockbroking, for example. If you look at SEBI regulations and if you look at the way, both the bosses work, each and every broker is expected to report technology glitches on a regular basis on their own to begin with. And if they find that there have been outages more than a certain period, then immediately the bosses as well as SEBI, they put penalties on the companies, on the brokers. Now, RBI does something similar. Each and every bank is expected to report all the outages, all the technology glitches, as it is termed, and they're supposed to report to them. So what may have happened, perhaps, is that the outages which are quoted, let's say, in the communication, may not just be there. It may be more than those outages. And if it took HDFC Bank, let's say, about a year, as you suggested, let's not forget it was during COVID period. Now I'm sure, very confident that Kotak Bank will be able to do it much faster. Maybe they've already put some measures already, because the communication that the CEO has put out does suggest that they may have put some action into this. But to my mind, if you say, was the regulator harsh? I don't think so.
Yeah.
The regulator has to worry about the system.
If anything, they were allowed to continue onboarding customers even when it was apparent for 2 years that your basic systems were not ready or weak, or the infrastructure was weak. And it's no surprise to anyone that the quantum of digital transactions has blown up. We've seen that trend coming. So a lesson here for Kotak Mahindra Bank, but I'm going to wrap up with what Gurmeet said. If HDFC and Kotak Mahindra Bank are found deficient by the regulator, then the others really pull up their socks. These are some of the top banks which have been in the regulator's crosshairs. That's all the time we have on this special show, but stay tuned. A lot more coming up on the other side on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
Thanks for tuning into this conversation with Sinjin. Now, viewers who had viewed, and a lot of you had, and if you had viewed that long format conversation that we did some time back with Jonathan Hunt, he had spoken about how not to quibble not just over quarters but over years as well, and look at a 5-year growth trajectory. However, at the end of FY24, we will be compelled to talk to him about what happened in Q4 and FY24 and what could happen in the next few quarters at the very least, and then maybe the long term too. Jonathan, thanks for taking the time out and speaking to us. At the end of Q3, you had mentioned on the call that the projections for the fourth quarter would mark one of the largest revenue quarters for this year. It is the largest revenue quarter for the year, but is it a bit soft than what you would have anticipated at the start of the year?
Yeah, I think it is. Certainly the largest quarter of the year. So I think second largest quarter ever, but we were hoping for more. And we should really talk about that, take some of the component parts. But let me just reflect before I do on the full year. We came in at 9% growth. Pretty happy with that. Certainly some of the strategic things that we did during the year, building capabilities. We did an acquisition of a new manufacturing site, which we're going to bring online this year. So lots of the strategic agenda went well. The growth was pretty good. Actually, the first, second, third quarter were tracking pretty much in line with what I expected. Hit a bit of a speed bump in the fourth quarter. But to be clear about it, it's the same issue that many of my peers, competitors, other vendors have seen throughout the year. You'll recall we simplistically serve two market segments. There's the Fortune 500 sort of mega cap corporations, global biopharma companies, and then the startup environment, the US biotech as we talk about them. And two very, very different directions panned out in the fourth quarter, and the quarter then really started to look like the average of the two. So let me take them apart. The US biotech funding environment's been a challenging one all year for many of those startup companies. Recall their business model. It's often a small group of entrepreneurial scientists. They've got a really good idea. They go and raise money for it. And that often gives them a funding runway of a year or 2 years. And then they're coming constantly back to the capital markets. As their science evolves, they come back, they refinance. Two or 3 years ago, we had an absolute peak in the amount of funding that went through. So roll forward 2 years, you've got a flood of companies coming back to the market, looking to refinance to extend their funding runway. And not all of them did in the fourth quarter. They may do it later in this year, but there's a timing issue. And of course, if they don't raise the funding, they can't spend it with service providers like us. So that gave us a sort of a bit of a headwind in the fourth quarter. But it's not structural. It's just part of the dynamism that you see in biotech. If you then go to the other segment, Fortune 500 companies, the mega caps, they're strong balance sheet, strong cash flow. What's really focusing their attention at the moment is geopolitics and where in the world they do their science and how they do it. And you've seen things like the Biosecure Act in the US being discussed. You've seen this slow but steady rotation away from an over-reliance on China. And that work is now starting to come into the market. And I think that's a trend not just for the year ahead, positive trend, but actually for the next 5 years. And that's really the opportunity for firms like us, and actually I think for India. The Indian CRO, CDMO space is the next closest by scale and sophistication and size to the Chinese one. And as the work comes out of China, it's going to find a home. And we've really got to take advantage of that opportunity. But it will be steady, but it is real.
Got it. And I'm going to take that up at the very end of this conversation. Let me just get the minutiae out of the way, Jonathan, and the here and now before I come to the longer term. Margins, you would have been happy with the performance. Now, is this a new normal? Is it possible to kind of predict that, or would you still want to be guiding towards a range, because who knows what happens in a particular quarter to costs or supplies or transportation or everything?
Good margin performance in the fourth quarter. Some of it's deep and underlying. It reflects the work that we've done around business efficiency, better procurement, better operating efficiency. But I would temper the enthusiasm. What's the expression? There's only two certainties in life: death and taxation. And of course, the fourth quarter did benefit from a tax rebate. Now, everybody likes to get one of those, whether it's a personal one at a corporate level, but that's some of what was driving that. I wouldn't predict that every quarter in the future we'll have a check coming back from a taxman. So we're happy about it. I don't think it sets a new high.
No, but Jonathan, sorry to come in here, but relative to what was anticipated because of the Stelis integration as well, the belief was independent of the tax, and if I strip that out, the margin performance is better than what my analyst was penciling in because of the Stelis costs, etc. Now, do you reckon if you strip the taxation piece out as well from this number, is that something that you reckon you could maintain? Because you see Stelis coming online in the second half.
I mean, the guidance we've given for the year ahead is margins around our norm. We tend to operate at an EBITDA level around 30 plus or minus a percentage or two. I don't see anything structurally changing around that. By the way, they're pretty good margins by industry normal standards. So it's a stable margin environment. I think the opportunity is more in a bounce back in market demand. We saw a really healthy financing environment in the US in the fourth quarter. So while we had some sort of project cancellations and non-renewals because people hadn't refinanced, actually the new flow funding in was really healthy. If that continues, I think that predicts for a dynamic and a vibrant set of opportunities in biotech. And then back to big pharma, it's geopolitics and it's restructuring, and that opens up opportunities for not just this year, but I think the next 5 years for the CDMO and CRO industry, and India's got a good opportunity there.
Okay, so just before I go to that, just one word on Stelis. You've reiterated now, comes online second half of the current year. What are the expectations?
A beautiful facility, well constructed, state of the art, and it will be available. We'll be showing it to clients in the second half of the year. From a revenue driver, that's a driver for the next 5 and 10 years. I don't see it as a major driver of the year ahead. The guidance we've given assumes that all we really do is bring it online. It's for the year beyond.
Okay, and therefore, when you had told me earlier that look at a 5-year performance or a 5-year trajectory of Syngene, and you would double or you would do what you did in the preceding 5, never mind what happens in a year in between here and there, would FY25, because of the low double-digit or single-digit growth, be that year of consolidation and a bump up because of Stelis and other factors coming in FY26? Fair assessment?
Yeah, we've built that. Actually, we should do the maths and sort of have a look at the revenue guidance that we've given for the year ahead. So last year, full year reported 9% growth. Take it back to constant currency. Remember, Our guidance for the year ahead is on a constant currency basis. So the actual reported for last year was around 6% when you take the currency benefit. The guidance for the year ahead is high single digits to low double digits. Take the two ends of the range, and it tells you it's somewhere between a 50% uplift and maybe a doubling of the growth rate on a constant currency basis. Now, again, I've made comments. I put that in the press release and other sort of statements I've made. It's not all going to be. It's not going to be front half weighted. It will build during the year. The reasons I just gave you, the refinancing in biotech. If they raise money now, it's normally a couple of quarters lag before they start to spend it, which tells you accelerate from the mid-year onwards with a strong exit to the full year is sort of what the implication of the guidance is.
Okay, fair call. Because I have limited time, I'm inclined to ask you about CDMO. You've done very well on that aspect as well, quarter on quarter for the last few. You mentioned about the Biosecure Act, the Biosecure War as some people call it, and what it could mean for Indian CDMO opportunity. Talk to us a bit about that.
Yeah, I mean, I can't get into the inner workings of the facts of the case and the drive behind the legislation, but it is concentrating minds. I mean, I think what I'm starting to see has been a slightly different mindset on the client side is, reasons to choose a particular region of the world or a particular vendor or a particular firm as your partner. In normal times, those reasons are around service, are around price, or around technology, and we compete on who can do the best job. I think where this is a little different once you go up to the geopolitical level is people are now starting to think about risk and geographical risk. You can't have all your eggs in one basket. So even though there are super Chinese firms in terms of their service, their innovation, the value for money that they deliver, we're now seeing boards of directors, audit committees, risk committees at these major PLCs says, well, even if we get great value out of it, we can't have everything in one place. And that's why I think it's a more material shift. Don't think it'll be a rush. I think it'll be a steady rebalancing, and it'll play out this year, next year, and I think over the next 5 years. But once you're making the decisions from that risk point of view, it's a pretty solid driver of change.
So as we wrap up, Jonathan, just one final question. Because India has got the capabilities and the capacities and the talent, of course, and add to that the fact that China for now secures so much of the CDMO spends from the US and some other economies, would it be unthinkable to think of a pure play CDMO business out of India? Maybe Syngene, maybe somebody else, being that large, being $1 billion large purely from the CDMO side over the course of the next 3 to 5 to 10 years?
Yes, we could. That's possible. I like the fact you gave me the option of 3 to 5 to 10. So with, in a decade, yeah, of course. And of course, you're going to look for Syngene as the leading company in our sector, certainly the leading public company in our sector. Let's make sure we continue to lead.
Yeah, I mean, because I was not sure of how fast things move, I gave you the timeline. You were saying it could happen earlier than a decade?
No, you gave me the timelines. No.
Okay, fair call. Okay. Jonathan, thank you so much for taking the time out, and all the best for the quarters ahead. Appreciate your time.
Super, thank you.
All right, and viewers, thanks for tuning in.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit Profit. Profit. And for profit, watch only NDTV Profit. We all love money.
Well, hello and welcome. You're watching the special election coverage on NDTV Profit, and I'm your host, Pallavi Nahata. Now, on to NDTV's special election report. We're focusing today on Darjeeling, where BJP had recorded a victory of 4 lakh votes in 2019. What awaits this year is a triangular battle between BJP's Raju Bista, TMC's Gopal Lama and Congress's Munish Tamang. Will TMC be able to dent BJP's record win in Darjeeling this year? Listen in to this report by my colleague Saurabh Gupta.
The misty cool weather, the breathtaking mountainsides carpeted by tea gardens are no indicator of the political climate of these hills. As the heat and election fervor rise across India, the politics in Darjeeling is no different. This man, a young Gorkha, was given the ticket pretty late as there was confusion over whether the BJP would field him or former Foreign Secretary Harshvardhan Shringla from this seat. Eventually, his margin of 4 lakh votes last time and his grip over regional satraps in the area worked for him. He now has the support of major parties in the hills like the Bimal Gurung-led Gorkha Janmukti Morcha and GNLF or Gorkha National Liberation Front. Parties that propagate the idea of a separate state of Gorkhaland. Raju Bista is, of course, the BJP candidate from the Darjeeling seat, but his ticket announcement came much later, leading to speculation that whether initially the party wanted to go with him or not. But having said that, he is the MP who won with the highest margin for the BJP in 2019. And he has managed to gain the support of several local satraps who have rallied behind him over the Gorkha cause.
मैं जब 19 में चुनाव लड़ने आया तो बोलते आप टूरिस्ट एमपी नहीं हो, इसका क्या प्रमाण है? वो 5 साल में वो प्रमाण दिया मैंने और विश्वास करके पार्टी ने मुझे यहाँ पे भेजा और जनता का इतना प्यार मुझे मिला और जो आप देरी बोल रहे थे वो तो समय पे ही हुआ, लेकिन जनता को लग रहा था कि पहली लिस्ट में आएगी, उनके मन में एक उत्साह था उसको जानने का.
But it's on the issue of Gorkhaland where things get a bit tricky for most parties that have a statewide or national imprint. The BJP has assured a permanent solution, but that is yet to materialize. And with the TMC also fielding a local candidate, the pressure to commit on Gorkhaland is there on all candidates. The BJP camp is aware that the margin will fall this time.
जहाँ मुझे विषय रखना होगा पार्लियामेंट, मैं उसी के लिए जा रहा हूँ और विषय वही रखूंगा.
थोड़ा लीड कम होगा, लेकिन अच्छा होगा.
The Trinamool Congress candidate is confident that he will be able to make up for the margin last time. With the Trinamool organization in the plains and the Bharatiya Gorkha Prajatantrik Morcha in the hills, the TMC believes they have a chance with this seat. But with the Gorkhaland sentiment strong in the hills, it is going to be a very difficult battle.
ये मार्जिन को मेकअप करने के लिए ऐसा है 2019 में जो वोट हुआ था उसमें हम लोग का जितना पार्ट में था सबने बीजेपी को वोट दिया था. 2019 में अलग सिचुएशन था, अभी सिचुएशन पूरा चेंज हो गया. गोरखालैंड इशू ऐसा है कि ये कोई वोट में मांगने का चीज़ नहीं है, हमने क्लियर किया है हमारा वक्तव्य में जहाँ पर भी जा रहा है. ये एक जाति का मुद्दा है, ये जाति ठीक करेगा. जाति तो भारतवर्ष में गोरखा जाति तो सब जगह ही है, गोरखालैंड तो सभी का है, किसी का एक पार्टी का नहीं है. मगर पार्टी से गोरखालैंड नहीं होगा, क्योंकि हमारा यही बोलना है कि इलेक्शन के टाइम में गोरखालैंड उठाने से नहीं होगा.
The Congress's pick of a candidate is someone who's open about his views on Gorkhaland. Delhi University professor Dr. Munish Tamang is originally from Kalimpong, and his candidature is being supported by the Hamro party led by Ajoy Edwards. Munish Tamang is committed to the Gorkhaland cause and he accuses the BJP of not delivering despite having won so many times.
Now, Gorkhaland issue is something that's been a long-standing sentiment and a long-standing demand. It's not something that is new. It's about 100 years old. And every person in the hills, of whichever political persuasion, believes in that sentiment, subscribes to that sentiment. So Congress will engage with the sentiment, and taking all stakeholders on board, we will find a constitutional solution to this.
Both the TMC and the BJP, however, have promised the inclusion of 11 Gorkha sub-communities in the scheduled tribes list, with both Union Home Minister Amit Shah and TMC National General Secretary promising to deliver.
কিন্তু আপনাকে মাথায় রাখতে হবে, আপনাদের ভুল বুঝিয়ে প্রধানমন্ত্রী বড় বড় ভাষণ দিয়েছে 2014, 16, 19-এ, চা বাগানের শ্রমিকদের জন্য অমুক করব, তমুক করব। 11টা গোর্খা জনজাতিকে 2016 সালে বলে গেছিল আমরা তপশিলি উপজাতি তালিকাভুক্ত করব। আমি গত সপ্তাহে শিলিগুড়িতে বসে এদের সাথে সবার সাথে দেখা করেছি, কথা বলেছি। 4 দিন আগে 5 দিন আগে আমাদের ইস্তাহার প্রকাশ হয়েছে।
Darjeeling is a unique constituency in West Bengal for various reasons. One, that it includes constituencies from both the plains and the foothills and also the hills, where the demographics and aspirations are very different. But as the BJP hopes to pull off a win this time too, the Trinamool says the battle is still on, as they too have fielded a local candidate. With camera person GD Shankar in Lebong, Darjeeling, Saurabh Gupta, NDTV.
And in an exclusive interaction with NDTV, P. Chidambaram responds to BJP's allegations of the Congress planning to give quota to Muslims at the expense of SCs, STs and OBCs in Andhra Pradesh. Listen in.
Where is that in the manifesto? That we are diluting the quota for SC, STs and giving it to Muslims. Where is that in the manifesto? Every single statement made by the BJP leaders in the last 4 days is completely imaginary. They must show the page, the passage, the paragraph and the words. I've been challenging them publicly in every interview and every tweet. Show me the page, show me the paragraph. None of them is willing to show me the page and the paragraph. Nor are they willing to ask questions, answer questions of journalists. Why are they hiding from answering questions from journalists? I've told several journalists, go to the BJP leaders and ask them to show me the page. They won't answer any questions from journalists. I am sitting before you, and I am willing to answer questions on our manifesto. Why are they not willing to answer questions?
Right. Mr. Chidambaram, some observers are also saying that you've made huge promises in the manifesto, including income support and also financial support for women. And this wealth, survey or economic mapping is also one way of funding those promises, sir.
Listen, we have done our mathematics. We have done our math. We are absolutely confident that each one of the promises can be implemented over the term of the government. Last time, when we said we will waive agricultural loans, we were ridiculed saying there is no money to waive agricultural loans. But our government waived the agricultural loans to the extent of 60,000 crore. When we started Maganrega, they said of all the people of India volunteer for work under Maganrega, where is the money? We have implemented Maganrega, and the BJP over the last 10 years has also implemented Maganrega. We found the money for Maganrega. The BJP has also been able to find the money for Maganrega. Every program that we announce, the immediate criticism is that there is no money. But we have implemented the programs. So why do you think, having implemented our promises in the past, why we cannot implement the promises in this manifesto?
Mr. Chidambaram, my last question to you, sir. By not talking about the UCC or CAA in the manifesto, it seemed to a lot of us that your party made an attempt to steer clear of being seen as anti-Hindu or pro-Muslim. Do you think that this politicization of wealth redistribution or economic survey or all that is happening, or the alleged transfer of wealth, do you think that this might cost you politically?
All that is not happening. You are repeating your question. Show me, have you read the manifesto? I assume you have. Show me the page and the paragraph where we're talking about redistribution of wealth. I'm appalled by the insensitivity and the utter ignorance of the BJP leaders. We are talking about social justice, bringing justice to different sections of the people, starting from youth, women, farmers, workers, and the neglected sections. We always mention SC, ST, minorities, and farmers. We are bringing justice to each section by making concrete promises. Unfortunately, the BJP's manifesto is not even a manifesto. It's called Modi Ki Guarantee. In fact, the entire document is cult worship.
And that's all we have on the show for now, but do stay tuned to NDTV Profit. We have a lot more coming up.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Wokat will exercise their voting franchise.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target?
Welcome to Earnings Edge. I'm Neeraj Shah, and let's first figure out, there are some flashes on your screen about our earnings for Tata Teleservices, small number. The stock is lying flat as well, but there is an impact that has come into a bunch of stocks because of the numbers that they have put out, notably Axis Bank. Axis Bank has had a good move in the session today. At least for a better part of the trading day, Axis Bank had a reasonably solid show, and currently, while not at the high point of the day, has certainly done really well. ICICI Bank too should come up on your screen next, and I think that stock too has had a decent enough move, about 1% higher, and combined, if you pull up the Bank Nifty winners and losers, you will see Kotak on one side, and Kotak's 9% weightage impacts the Bank Nifty, but and because it's down about 10.81%. But on the flip side, because Axis, SBI, ICICI Bank are in the green, that really helps the Bank Nifty have a little bit of stability, which is why I think the stock, the index is trading in the green. Bring up LTI Mindtree, that's the second one. And that stock is really under pressure, about 2.5%, simply because any kind of growth or margin expansion now gets pushed to FY26 from FY25 earlier, as a result of which a stock which trades at 28 times cannot trade at 28 times, presumably, and which is why we're seeing a little bit of a pullback in LTI Mindtree as well. So that's the second stock on our radar. Then there is a downtick that has come into Macrotech, while the guidance for pre-sales has looked okay. I think the valuations come to the fore again, and maybe, just maybe, that guidance didn't quite help Macrotech stabilize its ship. So 4% lower for Macrotech as well in trade. Aside of that, look at what's happened to 5paisa. The top line was strong, but the operational cost went up for 5paisa, as a result of which the profitability impact was seen. 61% downtick in profitability, and as a result of that, 5paisa capital as well is down in trade rather. Tell you what, let's get up the BSE 500 top gainers and losers on the screen and just show you what's moved at the broader end of the spectrum or market-wide amongst the top 500 names. So on the losing side, Kotak Bank is down. Dalmia Bharat post a very wobbly con call as well, and not the best of numbers, is down about 8%. Spark continues to go lower, and that doesn't surprise anybody, but Indian Hotels is the other one, 4.5% lower for a stock that trades at 50 times or nearly 50 times. I think the street is doubting that because FY25 doesn't have the triggers like a World Cup or India's a large global event that is happening in India, quite unlike what happened in last calendar year. I think all of those factors are playing havoc right now with the Indian Hotels stock. The stock is down though because it is not a cheap stock. On the flip side, MCX on that Motilal Oswal upgrade is up about 7.5%. Mass Financial on results is up about 6%. Aditya Birla has gained yet again about 6% higher. Hitachi is up 11.5%. And then one of the key stocks of the day has to be Vodafone. FPO shares in the market, and at a point of time it was believed that it will correct, but it has not. The stock in focus though is LTI Mindtree, and let's get across to my colleague Agam as he interviews the management of LTI Mindtree.
Client sentiment is actually very similar to what we saw in calendar year 23. We're seeing calendar year 24 on very similar lines. Clients are cautious about the macro environment that they're seeing. The only difference, I think, is that they're getting more used to that this environment is going to be there for some more time, and then they're reprioritizing their spend priorities accordingly.
Right. So I want to talk about margins. There was expectation from the investment community where margins would be around 17-18%, or at least that's the aspiration at the moment. The question really is, how many quarters more would it take? And perhaps what sort of business would it take for LTI Mindtree to move back to that range?
Yeah, 17 to 18% still remains our aspiration. That's what we want to get to. This will come through growth. Essentially, as you can see, we've been consistently talking about investing in growth. And actually, if we look at the overall growth metrics, especially our order inflow, again, this quarter we had $1.4 billion of order inflow. So our total order inflow over the last 12 months has been $5.65 billion. That's 16% up year on year. And that's 1.3x to our revenue. So I think, we've got this healthy order inflow that we know is going to flow into this financial year. And that's really the focus that we have, including generating, obviously, new revenue and new order inflow within the year itself. So we've got, tailwind from this order inflow that we are going to focus on. And growth is the route to delivering, those aspirational margins. So that's going to be our focus.
Right. Sudeep, there's been a lot of chatter around work from home. From what we understand, at least some of your peers are talking about full-time work from home and work from office in comparison. Can you tell us what your current work from office, ratio is, and what are your plans at the moment?
Yeah, so we've embraced a hybrid working model, and we have personas that are defined in terms of where people work, and this is actually working well for us. We have on average, 2 to 3 days a week in the office that people come in, and for that we have over 90% adherence. So we're doing well on that on that parameter. Essentially, that is to drive team working, collaboration, innovation discussions, as well as give people time. And hybrid also allows time because we do find that productivity does go up in the hybrid world, and that's really what we're focused on. So we will continue with the model that we've had. We're also investing significantly in office space in multiple locations. For example, in Hyderabad, in Chennai, in Coimbatore, and this is in Calcutta, and this is to cater for our future growth, so that when people do come to the office, there's enough capacity for us to do that.
Right. So then let's talk about demand at the moment. We want to understand, what sort of incorporation is the company seeing when it comes to discretionary spends. Of course, there's been a lot of focus from the clients when it comes to cutting costs, and that's where a lot of your business is coming from. But what can you tell us in terms of trends for both these areas of your business?
Yeah. So, in fact, let me just refer to our large deal pipeline, because that gives a good indicator of where we are in terms of, how the mix for demand is changing. So our large deal pipeline is just over $4 billion right now. And if I look at that pipeline, 2 quarters ago, that was 80% cost takeout and 20% transformation. This quarter, it is 75% cost takeout and 25% transformation, which means there's a slight uptick in discretionary spending that we're starting to see. But, the vast majority is still cost takeout. What we like about cost takeout is what it has helped us do with this order inflow that we have, is that it has helped us rebalance our portfolio of revenues. So we were skewed a bit towards discretionary spend, and now we've got a good balance between, sticky multi-year spend as well as discretionary. So, but the overall sentiment is still much more on the cost takeout, continues to be in the cost takeout world. And again, our track record there has been good. So, we, as I said, our win track record is good, as exemplified by our order intake, and the balance that we have between, dependence on discretionary and multi-year is also much better than it was last year.
All right. Another question on everyone's mind is about the CEO's term nearing its expiry in late 2025. If you could have any comments on, the extension or any plans of succession, can you give us some sort of an idea around here?
Yeah, DC is a very inspiring leader. He has led us through the merger process, and it is I work very closely with him. So these are board matters, and the L&T board always takes decisions in the long-term interest of the companies and the shareholders. So they will make sure that that is a board decision that the LTIMindtree board, I should say, will take. As I said, for us, succession planning is just a usual part of every company's endeavors as they look to talent. So I would say there is absolutely nothing to read into that. What we are focused on as a leadership team, DC, Nachiket, and me, is ensuring that we come back to the growth rates that we used to have, and that's really going to come through conversion of the deal pipeline. So huge focus really on execution. We talked about this yesterday as well when we made our remarks that we'll focus on execution on all fronts, especially on the revenue front.
So, Dina, final question then. What are the factors that you're watching out for that could potentially lead to a meaningful improvement in, the business performance for the entire industry as a whole as we move into new year? I know you're not going to be talking about the economy, but there's all sorts of questions about rate cuts being pushed by another year in the US. Of course, we do have a lot of other, economic challenges in not just US, but the European economies as well. My question really is a little bit more broad-based about the factors that you would want to watch out for, which would perhaps indicate a genuine improvement in the environment going forward.
Yeah, I think, the macro is uncertain, and it will continue to be so, especially the geopolitical tensions. It's also an election year in multiple countries, actually, not just in the US and India, but there are several other countries where it is. I think what we have assumed that, this year, as I said, from a overall economy perspective, will be similar to last year in terms of its and what we've learned, essentially the things that we've learned in the previous year, the best practices, I think we're much better positioned to navigate the year. So frankly, we're looking internally. We're looking, we're not going to use the economy as an excuse. We are going to work internally on all the levers that we have to drive growth. We've got a very impressive, client roster, and I personally am looking at our Focus 100 accounts as well in depth. DC is driving a program for growth, profitable growth across the company himself. So our endeavors are really to focus on all the internal levers that we have, the cross-sell, upsell kind of potential that we have. Those are the things that we are focused on, and we're, as I said, even in the existing economic conditions, our endeavor would be to come back to, the growth that we used to have or that we aspire to have in going forward in FY25.
Well, that's LTI Mindtree, a weak Q4, and never mind what they've said, I think the street would still believe that it will not be a year, it will be a year of consolidation at best. Difficult to see a margin uptick coming in a meaningful way. If a margin uptick comes in, difficult to see growth come in. It's a bit of a tactical issue, which is why, remember, Persistent Systems was also punished, and which is why I reckon that LTI Mindtree has been punished the way it is. Nevertheless, so that's on Earnings Watch. Let me take a quick break on that note. We come back and get you a slightly truncated version of the Mutual Fund Show. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit.
Hello Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah, and over the next 10-12 minutes of the show, we'll try and talk about one key topic and maybe try and answer a couple of queries from our guests as well. I thought the topic for today, based on all the conversations that we've had around banking, should be around BFSI funds. And when you think out and you take a step back and think about what is it that should be on the minds of people, I think the one thing that definitely comes on the minds of people is whether the argument of rate cuts that was so pronounced at the start of the calendar, whether that argument getting diluted means that you should recalibrate your investments in banking and financial services funds. There are a few of them out there. And I think it's a pertinent question to ask to our guests. I believe Nikhil Kothari of Etika is our guest, and he joins us right now on the show. Nikhil, great having you as always. Thanks for taking the time out, and good afternoon to you. And Nikhil, it's a pertinent argument because at the start of the year, the belief was of rate cuts, which now has gotten diluted. We're talking to 2-3 economists who are saying that they foresee that there'll probably not be any rate cut this year. So my question therefore is, do you think the BFSI funds are well positioned to navigate through that, or is it prudent to recalibrate investments that investors may have in BFSI funds because of the change in rate cut trajectory?
Okay. So specifically on the rate cut, so what happens is that when there is a rate cut, banking makes benefit on the treasury side of it. And as a result, they show higher profits. So that's on the rate cut side of it, what leads to the banking as a sector. Okay, apart from obviously the rates comes down, so they can have a more great offtake and so on and so forth. But on the other side of it, I'll say that if you look at all the sectors in the industry right now, in the markets right now, only banking and financial is primarily one sector which is not run up as compared to all other sectors. So from a valuation standpoint of view, this sector still looks reasonable as compared to many other sectors, since again, there are a lot of large players and private banks has not performed that great. Second thing is that banking and financial services as a fund, from a fund house perspective, the universe has increased quite a lot. Earlier, we only had banking companies. Now we have mutual fund companies listed in the stock market. We have fintech companies listed in the stock market. We have insurance companies listed in the stock market. So the universe of banking financial services as a fund house has increased quite a lot, and those sectors are not impacted by rate cut as such. Those are more structural story for India, and since the financial savings is increasing, all these sectors going to benefit. So I will say from a valuation standpoint of view, banking and financial services at the current junction looks reasonable, but yeah, obviously it can the performance may get derailed by a couple of months because of the rate cut scenario not playing out exactly what was planned out. But over a long-term perspective, the sector looks good. But I'll say more from an investor perspective, lot of diversified funds have 20 to 25% of their money in banking and financial services fund. So it can be a tactical play, but most of the fund houses do have huge amount of exposure in banking and financial. So going over out and only banking and financial services may not be that wise call, because you already have exposure to those sector. You can take a tactical call, depends on when you believe the valuations are reasonable and not beaten down. That is the point of time you can increase exposure, but not a long-term thing, because you already have a 25% in banking and financial if you invest into most of the diversified funds.
But the rate trajectory doesn't alter your view, or the change in the expectation of rate cuts doesn't alter your view around BFSI funds. It is mainly the undervalued banking names that is leading you to say this.
That's right. So I think from a valuation perspective, that's already factored in the market, and that's why they've not run up. So, and since you have all other sectors, like you can participate in mutual fund companies, insurance companies, fintech companies, and those companies are structurally going to benefit once more and more Indians start investing in markets. More and more Indians comes to a financialization of savings. So that is anyway structure is going to increase this exposure, this component. And second thing is that we have not seen the great offtake happening till now. Once the great offtake start happening, when the private capex start coming in, then you'll also see good amount of increase in the banking and financial services as a profitability for them as a long-term story.
Okay, and either as a recommendation or maybe not as a recommendation, but which would be some of the prominent BFSI funds, Nikhil, that you would believe an investor will hold it in good stead. This will not be an exhaustive list and need not be particular recommendations. So viewers, if Nikhil mentions names, please do your own due diligence as well.
So I'm just giving you a few of the banking financial services fund which are available in the market. Like you have a Bandhan Banking and Financial Services Fund, you have Nippon Banking and Financial Services Fund. So those are few funds which you can look at it. But as I said, you already have 25% exposure to it. If you're looking at diversified fund, they have a 25% exposure to banking financial services fund. But from a technical play, if you believe they're undervalued, in that case, you can look at few of the banking financial dedicated funds as such.
Got it. Okay. So, well, so that's some answer. And viewers, please do your own due diligence if you indeed think of going into any of the BFSI funds. But you heard Nikhil's argument. He believes that this change in trajectory, according to him, is priced in as well, and which is why from a valuation perspective, some of the BFSI funds might actually be a good play according to Etika. Now, a couple of queries, in fact 3 or 4 queries. We'll try and take as many as we can, but let's start with 2 at least. The first one is from Suraj Kumar. His age 30 years, goal is lump sum returns. Okay, Suraj is saying, Nikhil, that he has invested 3 lakh rupees in Parag Parikh Flexi Cap Fund and is planning to invest 50,000 rupees via an SIP in the same fund. How long will it take for him to garner a corpus of 1 crore rupees? Any thoughts?
Okay, so from a fund perspective, this is a very good fund and you should continue to invest in that fund and you should continue the SIP. I'll just give you a ballpark number. So this fund has over the last, since 10 years has given 19% year-on-year return, but that should not be your anchor thought that this fund will continue to make 19% year-on-year return. Even if I assume 2 scenarios, if you make 12% incrementally year-on-year return from today onwards, with your current investments and your SIP, you should be able to reach a mark of 1 crore in 9 years. And if market gives you 15% return and the fund delivers 15% return, you can achieve this target in 7.5 years. So I think 12 to 15 is what you can expect, and in 7.5 years to 9 years is what you can expect to reach your milestone of 1 crore.
Nikhil, I've been asking this question to a few people. Parag Parikh and some of the other successful flexi cap funds have a larger corpus now, larger AUM. Could it become difficult to outperform or perform as well as they've done in the past? And therefore, while normally tried and tested funds always work better, but there are a few newer funds that have come in the flexi cap category, which are managed by very experienced fund managers with a track record. Like Old Bridge now is a flexi cap fund, if I'm not wrong. Trust Mutual Fund has just launched and it's managed by Mihir Vora, who's a very experienced man. There is Helios, which has got a flexi cap fund with a Samir Arora vintage out there too. And these are smaller funds. Could they be more agile and more amenable, or for somebody who's willing to take a risk, could they give better returns than a large AUM fund like a Parag Parikh or an HDFC?
Okay, so from a flexi cap categories, obviously as the AUM increases, your flexibility to change between sectors will be very limited now. Okay, the good part in Parag Parikh is that they have some international exposure, they have a large cap exposure, and they have small amount of mid and small cap exposure. But as you rightly said, what has happened in the past, the ability to move around sectors and stocks may not be that easy now. So from a portfolio perspective, this fund is more like now will be slightly biased towards large cap stocks. So if someone is looking from that exposure, it's a good fund. And since the fund buyer continues, and from the fund house perspective, they don't find too much of problem in terms of changing the sectors and stocks. But still, what I'll say, the flexibility will reduce. Incrementally, see from a portfolio perspective, clients should have both types of fund. They should have funds, some with a reasonable AUM or slightly small size AUM, so that they get the fund gets the flexibility to change across the sectors and stocks. And some you can have a legacy portfolios long term, which have been proven over a period of time. So you can have a portfolio which is diversified of 4 or 5 funds, where you can have some fund which can be large cap biased and have a long history, and some fund you should have also in a medium size AUM or smaller size AUM, where the fund will have a flexibility to outperform over a period of time.
Okay. Nikhil, one more query, and we'll have to make it quick out of time, but Ganesh Gomu, age 57 years, goal is retirement, wants to invest 25 lakh rupees in mutual funds. Can you recommend a few schemes?
Yeah. So in this case, I'll say you have to follow a bucket strategy. What you need to do is that since you're closer to retirement, you need to divide the money in 4 different buckets. The first bucket will be like an equity savings fund, where you invest for because since you're retiring next 3 years, you will have some corpus which you can withdraw from initial years, which is from 60 to 64, 65. The second set of money you need to invest in a hybrid fund, which has got 65 to 70% in equity and 25% in debt. So which gives you exposure for next 7-8 years. And beyond money which you require after 10 years, that should be in a flexi cap fund or a multi-cap fund, which can also beat inflation and grow the corpus over a period of time, which can fund you money for later years. So I'd say that divide your money in 4 different buckets: equity savings fund, hybrid funds, multi-cap fund, and a flexi cap fund.
Okay. Great. And Ganesh, I would urge you to consult a financial advisor who's good in your mind to try and design this for you, because it's for a very crucial part of your life, which is the retirement, wherein the incomes may not be there, but you will certainly have the expenditure. And this will be your bucket from where you will get the money to be able to live your life. So please try and do that. But Nikhil, thanks for joining in this truncated version of the Mutual Fund Show. Really appreciate your time.
Thank you. Thanks a lot.
With that, it's a wrap on the show. Viewers, thanks so much for watching.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in Vocard will exercise their voting franchise.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Hello and welcome. You're watching Large Trades. In this show, we take you through all the stocks which are buzzing on the back of Balti's block deals as well as, well, volumes. But before I move on, let's very quickly take a look at the markets, which are at the moment looking strong. It seems like the Nifty has moved back or rather has tested the mark of 22,500 at the moment, which is always a positive as far as the bulls are concerned. And the question really is that where can we go from here at the moment? Things are looking pretty good for at least the banks, and this is despite the weakness in Kotak Mahindra Bank. We have seen a substantial up move coming through for that particular index because, well, largely on account of Axis Bank. So Axis Bank is actually countering a lot of that weakness that's seen in Kotak Mahindra Bank, and along with that, we have the support of SBI, ICICI Bank in terms of weightage, of course, Bank of Baroda and Punjab National Bank all along, all of them also advancing in trade. If that's as far as the benchmarks are concerned, but let's pull up the constituents of the Nifty and let's look beyond the bank Nifty. And besides the banks, we do have likes of perhaps ITC in focus. What's also weighing down on the index by just a tad bit is Hindustan Unilever and Titan, and of course, we're going to talk about Hindustan Unilever and the sector related there as well. But moving on to the broader markets, again, it's been a fairly mixed day of trade. So when it comes to the mid-cap 150, we do have a 0.3% advance. It's done well. It is moving largely in tandem with the benchmarks, but let's move on and talk about the small cap index, and that's where we're actually seeing a good amount of outperformance, up 0.8%, currently at around 15,733, and it continues to do well. In fact, the small cap index has outperformed all the other key indices, and it continues to do so with good amount of strength, and it's showing a lot of difference in the returns with respect to perhaps a key benchmark like the Nifty 50. That said, let's talk about all the stocks that we are going to address in today's day of trade. So we want to talk about Jupiter Wagons. We're going to revisit Jupiter Wagons because of the back of volumes, and also another important revisitation in Bharat Forge, which is also up and about, this time on account of a broking note. Besides that, we're considering Neogen Chemicals. It's actually a show of revisitation because this is something that we have spoken about in the past, but it is buzzing in trade. And Jyoti Labs, the stock is not up as much, but it certainly is looking at a lot of volumes, and this will be in focus since now that we've had a little bit of an understanding of how the sector can perform based on Hindustan Unilever's earnings. So, let's get off the bat and take a look at Jupiter Wagons and see whether or not there is something new in here. Of course, we do know about the strong quarterly update that's come through over the last 3 to 4 quarters, but I'm going to say no more and get in my colleague Anushi to tell us a little more. Anushi.
Hey Agam, so if you're looking at Jupiter Wagons today, an intraday high of about 13% have cooled off from some of those levels that we are looking at right now, where the volumes, it's the volumes that is in focus, about 11 times the volumes compared to its 30-day average. Now again, just to give us short context on what the company does, is it's in the mobility solutions business in the rail, roads and marine transportation. Now in the recent developments, the company was in focus after its acquisition of Bonatrans India for a consideration of up to 271 crore and becoming the first Indian rolling stock manufacturer with its own wheel plant. Now this was its strategy to reduce the dependence on the imported wheels going forward. Again, if you're looking at the capex that the company has outlined in the Make in India initiative, about 1,000 crores of in capex initiative over here lined up for over the next course of 2 years. This will enhance its production also going forward. Now coming to the order book, so no recent orders as such in the coming times, but the last time, again, so this is just a brief revisitation on what has happened. An order book of about 7,000 crore as of the December period, and if you have to look at the Q4 order inflows, that stand at about 1,056 crore. Now if you have to look at the Q3 earnings, strong set of results over here. The revenue was about 39% of an uptick, while the margins also shifted from 12% range to almost about 14% of a range here. But when we had the management, he had given some interesting insights on the company for the outlook going forward for the business. First is on the wagon business, which is their core, wherein they are looking to at least produce more than 10,000 wagons going forward. Also, after just breaking up from the wagon business. They're aiming 40 to 50% of its revenue to come outside of the wagon business going forward and execute the majority of the order book that has been outlined by FY25 itself. What should be the focus also going forward is the company's aim to completely localize its manufacturing capabilities over the course of next 12 to 18 months. So these are all the key highlights that have been happening. We have to watch for fundamental drivers as of recent to see this kind of a stock surge that we are seeing today.
Right, Anushi, thank you so much for getting us those updates with regards to Jupiter Wagons. This is one of those stocks which has had a spectacular run over the last 12 to 15 odd months. Of course, a huge amount of order flows with the government's focus on Atmanirbhar Bharat, but more importantly, the railway segment, it continues to move from strength to strength, and it continues to add on to its order flows. At this point in time, as Anushi has already mentioned, it has a good amount of visibility as well looking forward. And, this is something that a lot of investors will take in but that's something that we're going to continue to keep in focus. But let's move on and talk about Bharat Forge then. Now, we have another positive broking note. Let's get in my colleague Puneet to tell us more about this one. Puneet.
Yeah, thanks for that, Agam. So stock is buzzing on the back of this brokerage note by Bank of America. Volumes are roughly 3.7 times and it hit an intraday high of roughly 8%. Very close to its all-time high of roughly 1,330 rupees. Now the brokerages is saying that they have upgraded it from an underperform to a buy with a target price of roughly 1,450 rupees per share, which is a 20% upside. Now what they are saying is this is that the upgrade is widely on the back of an expected downturn in the truck market to be remaining elusive, which means the truck market won't be as affected as they had estimated before. They say that the truck down cycle, if any, would be seen in the second half, would also be very short-lived and recovery would be quicker than expected. They are saying that the large global truck OEMs has pointed out to a steady demand in fundamentals, while the two main triggers that they see, which are basically spot truck rentals as well as used truck values, have all gone up, which is very significant in this particular truck industry. Finally, they see that the upcoming EPA emission norms, which are expected to come in by 2027 in America, will be a key trigger for the pre-buying of the stock between 2024 and 2026. They see that the company's underperformance versus truck makers such as Daimler has been a key risk reward for the company. They have estimated and upped their estimates by roughly 7 to 15% and have raised the multiple to 18 times going forward. The management has also given good commentary in its Q3. They had said that the pre-buying of this before the EPA emission norms come in would be a key significant driver between 2024 and 26, while they estimate that for these 3 years, the volumes of trucks sold would be a 1 million total. And this all is reported in the conference call that the company has said. The other business verticals such as defense as well as industrials are seeing good growth. They had seen roughly 1,000 crores of revenues in FY24, and going forward they have an order book of roughly 2,000 crores in the defense vertical. Finally, the other street views, there are 19 buy calls on the company, while only roughly 2 hold calls and 8 sell calls along with this. So really positive brokerage note coming in for Bharat Forge, and the stock price is reflecting the same at the moment. Back to you.
Right, Puneet, thank you so much for getting us those updates on Bharat Forge. Let's pull up the last 12-month chart for Bharat Forge, because this one is another interesting one. And of course, currently at around 1,300 rupees per share. What we really need to actually understand Bharat Forge is it's gone through its own share of the lot of challenges. Now, look at the period between February of last year through now. It's not without its own fair share of chop and churn. It does seem like it's moving back to the level of life highs at the moment, considering the sharp up move today. But it has struggled over the last 5 to 6 months specifically, and a lot of volatility coming in. Of course, notwithstanding, there is also a domestic feud which is going on, which is why we saw a lot of volatility. Certain other operational challenges as well. It seems to have shrugged that off. But along with that, from there on, we move on and talk about the next counter which is on our list, and that's Neogen Chemicals. This one has also, seen quite the spark today. Let's get in Varsha to tell us more about what could potentially have happened behind this one. Varsha.
Thanks, Agam, for that. So yes, Neogen Chemical is in focus. If you see, volumes are up 8x its 30-day average, while stock has seen intraday high of almost 13%. Now, Neogen, this is on the back of Kotak Institutional Equities, which has initiated buy with a target price of 1,840. Now, Neogen Chemical manufactures bromine and lithium-based products, which is used in pharma and agrochemicals. Now, let's see what Kotak has to say. So, the company is according to Kotak, company is highly qualified, experienced, and well-regarded promoters supported by PI's executive director Anurag Surana. So well-defined management and promoters is one of the reasons wherein Kotak has initiated this buy. Also, Neogen is entering into battery chemicals, wherein they are on track to become the first mover in battery chemical segment, owing to the extensive work it has done in the space over the past few years. Also, this is further validated by the technology partnership it has managed to strike with MUIS Japan. Now, Neogen is targeting 30% market share within battery electrolytes in India by 2030. Battery electrolytes are nothing but component of lithium-ion battery. Now, management has stated in the past that the company has a strong pipeline of products in advanced intermediates and CSM. Advanced intermediates nothing but products used in the process of making a medicine, and CSM is customized synthesis manufacturing, which we produce products exclusive for our customer. Now, Bewley Chemicals acquisition is a key enabler for growth, and Bewley Chemicals own the technology to manufacture orgolithium products, which is used in lithium metal. Now, Kotak expects Neogen to sustain 18 to 20% EBITDA margins, and ROC is likely to remain under pressure for next few years, but should thereafter recover to 20% given a healthy underlying economics. Now, the guidance given by company in FY26 from base business, that is intermediates and CSM, is almost 900 to 1,000 crores, while they are expecting battery chemical business to clock almost 2,500 to 2,900 crores by FY28 and 29. The key risk that Kotak sees is aggressive capex plan will further put pressure on balance sheet, and delay in project commissioning and ramp up can be more risks that Kotak sees. So this is all we have on Neogen today. Back to you.
All right, Varsha, thank you so much for getting us that update on Neogen Chemicals. Again, of course, one of those counters which stands to benefit from the big changes that await the entire EV space, and Neogen Chemicals, along with its standard catering of your regular industries, is looking at ambitions when it comes to the EV space as well. This one is also up as much as 12%. And the final counter that we have on our list today is Jyoti Laboratories. Let's get in Mahima to tell us a little more about this, perhaps also draw some parallels here. Mahima.
Right, Agam. So, as you rightly mentioned, the stock is buzzing in trade today. It did touch an intraday high of 10.5% at 465.95, and volumes around 8 times its 30-day average. Now, if you try to, draw some parallel towards this, as you rightly said, where big giants like HUL are not doing well in terms of volume growth, something like Jyoti Labs is given a volume and value growth of around 11% in the past quarter. The net sales were up around 10.6% in terms of value and volume growth, and fabric care was up around 12%, dishwash was up around 7%, and household insecticides category was around 5.4%. Their personal care category also grew by around 22%. So all of these segments of Jyoti Labs have been doing pretty well in the past quarters. Now, in terms of margins and efficiencies, where input prices have normalized, and which is why their margins have sustained, and gross profit margins are basically now driven by SKU mix, their favorable product mix, and their introduction of higher margin products. In terms of future outlook, the company has said that sales growth trajectory for FY23 and 24 will be in double digits. For liquid detergents, will become the largest have the largest percentage share in terms of revenue of overall wash portfolio, and they are focusing on decreasing their ad spends, and new product developments is something that will drive the future growth of the company. So this is the overall view of Jyoti Labs for the day.
All right, Mahima, thank you so much for getting us that update on Jyoti Laboratories. A bunch of pointers to keep an eye on and pay attention to even as we start seeing more numbers from the FMCG space. But, well, on that note, it's time to slip into a short break. But do stay tuned. We have lots more lined up. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
Good afternoon. Welcome to this very special show where we're going to take you through the earnings of Mass Financial Services, Q4 FY24 numbers, of course. A strong steady set coming in from Mass Financial. And to break that down, we have with us Mr. Kamlesh Gandhi, who's the CMD at Mass Financial, Chairman Managing Director. Welcome to NDTV Profit, sir. It's good connecting again.
Nice to connect again. And as you rightly remarked, was a good quarter for us in terms of growth and in terms of a consistent growth. So this was our 116th quarter of consistent growth. And it also witnessed a very important milestone of we being upgraded to AA- from our current rating of A+. So all in all, a satisfying year to having crossed 10,000 crores, mark having crossed a profitability of 250 crores plus on consolidated basis and being upgraded.
Absolutely, sir. So take us through the journey maybe a year from now as well as maybe 3 to 4 years from now. Will this consistency continue just in terms of growth? Any tailwind you see, and what's the strategy? Is it to go deeper?
See, if you see, we are a 28 years old company, and as I shared with you earlier, this is 116th quarter of consistent growth. And during this time, we have seen a lot of cycles. So as a company, we believe in prioritizing asset quality, profitability over just growth. So we believe in dictum of not only just determining growth, but also discovering growth from time to times. So as I look now, and as if I can preempt now, I think we are well poised for a very steady 20 to 25% growth for at least coming 3 to 5 years and beyond. And that is what we have demonstrated over all these years.
Understood, sir. And so what component of your book is unsecured? Is it just the personal loans? Because there are some pockets of loans which have grown very, very sharply. One is your CV loans, second is your salaried personal loans, and your SME loans is fine, pretty much at par, 25%, which is largely where you've grown at.
So if I take you through the asset breakup, we are predominantly MSME financing company. Whereby close to 80% of our portfolio comes from MSME. But having said that, it is a conscious effort on the part of the company to diversify its asset base. So in an endeavor in that direction, we are growing our two-wheeler portfolio, CV portfolio, and also to a limited extent our salaried personal loans. The percentage what it looks higher is on the very lower base, but on a substantial base, once we achieve, it will be in lines with our 20 to 25% growth. In terms of secured and unsecured, I think majority of the part is secured either through current assets hypothecation or through properties or through vehicles we finance. And of course, salaried personal loan is an unsecured loan, and certain portion of our micro enterprise loan stands at unsecured.
Sure. So what would that component be as part of the total loan mix?
I think we are at around 65 to 70% in secured and around 35 to 30 in unsecured.
Sure. And with regard to these two, so you're a seasoned player where it comes to MSME and the like, but your larger growth kicker is coming from your new businesses. So any concerns with regard to asset quality there? Is it to existing customers, or are you finding new customers there? What's the kind of comfort level on asset quality do you have over there?
So just to share with you, we have been one of the oldest two-wheeler and commercial vehicle financer in the country on that products too. It is only the renewed focus now with the market giving a positive risk-adjusted return in this product, and hence more allocation of capital and that towards those products. So number one, we are not new to this product. And number two, as I told you, that we will be very cautious on how we get the risk-adjusted return, how we maintain the asset quality before we really decide our growth targets.
Understood. So around 20% of your loan book of 10,000 odd crore is off book. So how does the revenue model work here for you? Is there something unique that plays out?
No, so when we talk about off-book, it is a bilateral assignment done with the banks, and we service the portfolio throughout the tenure, and we get the excess interest spread, and just like that, we get the spread while taking any conventional liability. So it has nothing to do with a different revenue model here when we do off-book.
Understood, sir. Sir, with regard to OPEX and growth plans, OPEX continues to remain elevated. You currently have a presence you have almost 200 branches in terms of presence, and you have over 180 NBFC partners. What's the growth plan from here, both in terms of partners, in terms of geography?
I think in terms of geography, we are already present in almost 12 states, including some of the union territories. So in terms of our direct distribution, we would like to consolidate our base in the existing area of operation by penetrating deep once we have the demographic understanding and the right set of human resources over there. In terms of our NBFC partners, I think there are many more smaller NBFCs coming with a wealth of demographic understanding. So I think we'll be in a position to add on marginally over there. We are already working with 180 of them. So I don't see a major jump in our NBFC partners, but whereas our penetration in our direct distribution will increase. On a standalone basis, we have around 189 branches. We will be adding another 25 to 30 branches this year. On a consolidated basis, we will be at around 250 branches plus.
Sure. That is by FY25, 250 branches plus?
On a consolidated basis, yes.
Understood. So that would include the housing finance consolidated basis? Sorry, yeah. Maybe. Yeah, okay. Understood. And how many branches does housing finance have as of now?
Currently, housing finance has around 60 branches.
Okay.
And this is standard 189. So we'll be adding, so we'll be anywhere between 250 to 300 branches after the addition.
Understood. Fine. Okay. I'll come to housing finance because that is also very interesting. But on the OPEX side itself, where should that put your OPEX ratios? Because this year we saw a spike with regard to your OPEX ratio. Do you 2.24% OPEX to assets, not too bad, just in terms of operational and the kind of growth that you're clocking. But would you expect some efficiencies to start to kick in? How should one look at some of these numbers?
So as we consolidate on our direct distribution, the OPEX will increase. But the right way to look at it, the ROA tree is that what are the ROAs left after the yields, after the credit cost, and after the interest we pay. So we generate NIMs of around 7%. And if the OPEX increases, our NIM will also increase. So it should suffice to say that irrespective of the OPEX cost, we'll be in a position to maintain our ROA is anywhere between 2.75 to 3%, and hence after the NIM of around 7%, and that the NIMs and the OPEX cost will correspondingly increase or decrease depending upon our distribution model. But as I see right now, our OPEX should settle anywhere between 2.25 to 2.75% going forward, with a constant ROA of around 2.75 to 3%.
Sure, understood. Yeah, so that makes a lot of sense. Let me switch over with regard to mass housing finance, any or rural housing finance, which is your housing finance subsidiary. Any any possibility of value unlocking over there in terms of one funding to a separate listing? Are there any plans on the table?
Not immediately, but definitely in the medium term to long term. Once we get scale, if you see our housing finance company is at 600 odd crores right now, and presuming that we are in a position to grow at around 30-35%, our first target is to cross 1,000 crores and then double it every 2.5 to 3 years. So I think value unlocking can happen anywhere within next 3 to 5 years.
Understood, got it. And with regard to your capital raise, you're well capitalized, 24% plus ROA. Now, capital adequacy. Now, when it comes to just your fundraise of 2,000 crore of debt, where you've taken an enabling provision for that, how long do you think that this kind of 24% kind of capital adequacy, how long will this capital last you? So when will you actually have to dilute, in your view, as of now, given the 20 to 25% growth that you're expecting?
So if you see historically, we have demonstrated a non-dilutive growth. Even at this stage, as promoters, we hold around 73.7% of the company. We went to IPO in 2017, and post 2017 to 2024, from 3,000 crores to almost 10,700 crores on a consolidated basis, we have grown through internal accruals. So we have a self-capital propelling model whereby we generate around 16% of ROAs, and we de-risk to the tune of 20 to 25%, and around 3 to 4% of Tier 2 capital. To grow at 20 to 25%, we don't actually need an external capital. But to strengthen the capital base, we already have an enabling resolution of 700 crores, which can be raised in tranches over some time, say over a year or so.
Understood. So per se, no real expectation of an equity capital raise. Is that how one should conclude?
So we are not in a hurry or requirement to raise the capital. Depending upon the valuations and the right set of investor during a year or so, we might raise some tranche of capital from the enabling resolution what we already have in place.
Understood. Okay, very interesting. Again, as always, my conversation with you. And thank you so much for this quick interaction and for giving us an understanding of Mass Financial.
Thank you so much. Thank you.
Well, that was Mr. Kamlesh Gandhi, who's the Chairman Managing Director at Mass Financial Services. Stock up and away in trade after a solid set of numbers. Good understanding that he's given us with regard to the numbers as well as what one can expect going forward.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Well, thanks so much for tuning into India Market Close, and it's turning out to be a really strong day of trade. This morning we were talking about how the cues are not necessarily that bad, but for the fact that the global markets were a bit soft, where the Bank Nifty had support from an axis and from others, and I think that is something that has also played a small part, though this market is anything but only banks, because the Bank Nifty is actually underperforming the Nifty right now by a whisker, but underperforming. Bring up the heat map and show you what's moving on the Nifty. And yes, Kotak Bank will be sulking and still at the lowest point of the day. Other result boys like LTIM and HUL are sulking and still down there. And Kotak, of course, is now currently at the lowest point of the day. So there is problem here. But aside of that, the gains that have come in on some of the other banks, far outstripping the losses because of Kotak. And yes, Axis and Kotak have equal weightage, so that kind of nullifies it. But SBI, piling on the gains that it has, 4.5% is a very strong move out there as well. Metal names have done well. There is strength in JSW Steel, as we see. Coal India is up about 1.5%, so that's also done okay. Tata Steel is up close to 1%. Hindalco is up close to 1%. That's done well. Reliance about 0.93% in the green. Largely, aside of a Kotak Bank sulking in trade, and to an extent, I mean, LTM entry hardly has weightage, but HUL maybe slightly. There aren't too many losers worth talking about on the Nifty, which is a great sign. And sectorally as well, if you see, even despite Kotak Bank, the Bank Nifty is not underperforming. The only basket led by Macrotech and some of the others is real estate, which is down. But otherwise, almost everything else is doing well. And led by SBI, PSU banks are a space to reckon with on this expiry day. Sure, we may, I don't know if we'll see a bit of profit booking in the last half an hour of trade or no. But for now, the market trending higher and staying at the high point of the day, which is actually a really good sign. Good afternoon, Tamanna.
Yeah, hi, Neeraj. What's interesting to me also is look at Nestle's move and ITC's move. And their numbers were okay, sure, but I haven't seen FMCG moving so smartly in a while. Dr. Reddy is another exciting one today.
And the JV.
And yeah, absolutely. So in the broader markets as well, you've seen quite a bit of an up move. Let's pull up the indices before we start. Not as much as what you're seeing on the Nifty, because you have the big boys there really pulling up the market. Small caps doing okay. All right, specific stocks. Let's talk about Dalmia Bharat. Some of the losers. Cement Pack is having a rough afternoon. Dalmia Bharat, Ramco, JK Cement, all of them down. Dalmia Bharat more than anything else because of its numbers. Numbers weren't exciting. And one of the reasons and what is really giving it pain in terms of realizations is the unexpected sharp drop in cement prices that we saw a few months ago. Macrotech is the other one I want to pull up and see how the street has seen the numbers post the con call. A bit of disappointment there, 3% down, although the numbers on the face of it look pretty good. But profit booking on in Macrotech. Indian Hotels is the other one. They did not give an ARR guidance for Q1 of FY25. We spoke to the management that has said that a lot of their properties are new, which is why it takes time to scale up. So they haven't given that guidance. Stock is 5% down today. So pain over there. Just want to talk about Bharat Forge though, on the other side of things, where you are seeing an upswing of about 8%. There's a BOFA note out on Bharat Forge. They've set a target price of 1450 for the counter, and you're seeing Bharat Forge doing pretty well this afternoon. MCX is the other one that numbers were okay. Numbers were not bad at all, and Motilal Oswal has maintained a buy and raised the target to 4,400. That stock 7.5%. So some smart moves there. Mass Financials, the other one. We spoke to the management today as well, and they've had a good set of numbers that have been rewarded by the street. Neogen, we saw how chemicals are in focus, and we talked about it earlier today as well. Their volumes are pretty high, and there's a Kotak Institutional Equities buy on it as well. I just want to put up Vodafone if we can, because what a seesaw on that stock that we've been seeing all through the last 1 week or so. Pre-FPO, post-FPO, so post-FPO, that stock up 4% in trade. Overall, I think I would say, Neeraj, a good recovery. Also, mid-morning and holding fairly strong. Apart from the blips of a Kotak, etc., everything else is looking pretty decent.
Yeah, very, very strong and a remarkable pullback by Vodafone. A lot of people are extremely bullish on this stock. Be careful and be mindful of the risks associated with a turnaround company. But we've spoken it all along about how this one, by virtue of some fundamental factors like 2G customers, and there are a few, one or two that I know very well who swear by Vodafone, and once they move to 4G, the automatic revenue uptake that comes into the company. So to be watched out for. Okay, let's try and put this market move into perspective. Rajesh Palvia of Axis Securities joins us to talk about the tech and the derivative end of the market. And on the fundamental side, Hemang Jani, market expert, with us as well. Gentlemen, both of you, good afternoon and thanks for joining in. Rajesh, is this move taking you by surprise? And on the back of this, on a monthly expiry day, what are the kind of trades on the index that you would recommend?
Good afternoon, Neeraj. Good afternoon, everyone. No, it's not a surprise for us, as we have seen the kind of data which we were seeing since last couple of days on the Nifty as well as on the Bank Nifty. That was giving us sign that this rally can give breakout of consolidation, and especially on expiry day we have broken out the consolidation range. Now we are trading comfortably above 22,500. So that clearly giving us sign that now we are again going to register a new all-time high very soon. Maybe next couple of trading session we could see a new all-time high trajectory for Nifty also, and as well as for Bank Nifty, a very strong recovery despite Kotak Bank is down more than 10%, but the way PSU Bank as well as the other private banks have moved up, we believe that this rally can extend for Bank Nifty also, and as we are now comfortably holding above 48,500, so this level is important to watch for next couple of days. If we hold 48,500, then possible rally can extend to 49,000, 49,200 for Bank Nifty also. So both indices, the data is shaping up on the bullish side only. I think at this moment one should ride this rally, trail your stop loss at higher side. For Nifty, your stop loss now should be at 22,500. Upside target is 22,750 to 22,800 in the continuation of this up move.
All right, Hemang, let's come to you as well on what you see as the big movers. Just a view on Kotak Mahindra Bank at this point. We've seen sharp downturn over there. The question is there an opportunity to accumulate at these levels? Would you look at this at all? Because at the end of the day, it's one of the large private banks in India. It has a pedigree. They've said they'll fix whatever problems it is that the RBI has foreseen. The experts we've been speaking to say it'll still take about 12 months to come back on board. But would you look at this as an accumulation opportunity, Hemang, or stay away from a Kotak right now?
So the move definitely has come as a big setback. I think, for any entity, if you're not able to acquire onboard clients, it will have, major repercussions, both in terms of reputation, business, so on and so forth, and which is what is reflected in the correction that we are witnessing. I think, at least near term, may be possible that the stock will go through a little bit of, underperformance, but market tends to kind of, discount it very quickly. And we think that, with this kind of a correction, if let's say, if it corrects by another 3, 4, 5%, it will surely provide a great entry point. I think, it requires a little bit of patience to be able to, buy and hold this kind of, stories. Because just to give you a perspective, IIFL Finance and some companies also had a similar kind of an issue. The stock corrected very sharply, 30, 35%. But we saw a very good smart pullback, after some point of time. So Similar thing could possibly happen in Kotak also because the stock has not performed for an extended period of time, more than 12 to 15 months.
Interesting point that you're making, and actually we have seen that the kind of sharp rebound from some of these counters post regulatory action. Rajesh, do you see the potential of that on the charts for a Kotak Mahindra Bank?
So, Tamanna, Kotak, after this fall, Kotak is now trading near to its, trading below to its, important support area, which was placed on, multi-year support area that was at around 1650. And in last, 5-10 minutes, we have seen, again, extended supply pressure below those level. So if it remains below to 1650, then yes, there could be another, supply pressure we can see towards the 1600, even 1580 kind of zone. That's the next level on the downside. Though long-term structure is still not destroyed, but still on the short to medium-term perspective, yes, some pain is likely to be there in the stock prices. Looking at the near-term, short-term structure, 1720, 1730 are the key important supply zone on the higher side. So until the Kotak not manages to cross above 1720, 1730 level, it may remain under pressure, and maybe we could see furthermore supply pressure towards 1600 to 1580 kind of zone for the Kotak on the near term perspective.
So, let's get a view from Harsh as well. He's been tracking that story very, very closely on RBI's crackdown of Kotak Mahindra Bank. It is, of course, the stock of the day. Harsh, what struck me is that brokerages are not that negative on Kotak Mahindra Bank vis-a-vis what the impact of this will be, isn't it?
Yeah, you're right, Tamanna. So when I'm going through pretty much all the brokerage notes, you have maybe a couple of brokerages. One, Jefferies, they've reduced the target price on Kotak Mahindra Bank. MK is probably the only one who has reduced their rating on Kotak Mahindra Bank. But outside of that, a lot of the larger houses, including the likes of a Citi, likes of a JP Morgan, they've not really done anything with regard to changing their stance on Kotak Mahindra Bank. They've suggested some concerns, definitely, possibly in the shorter term more than the longer term, and they've also suggested that EPS may be impacted 1 to 2% odd as a result of the credit card business going out. With regard to customers, I think is the key, and that's probably why the reaction on the stock. Customer count has gone up from 3.9 crore Q3 FY23 to 4.8 crore Q3 FY24. That's sharp growth. And how much of that is digitally acquired customers will be one of the key factors which will probably determine as to whether that growth rate that Kotak clocks of 20% plus can continue. And that will probably hold the key, because outside of that, in terms of asset quality, in terms of growth, it's a great bank. It's always been a phenomenal franchise. In terms of just relative valuations, just want to cap this point off. 2.6 times trailing 12 months book price to book, maybe 2.3, 2.2 times is the consensus 1 year forward price to book. Never traded at these valuations, Kotak Mahindra Bank, at least not in the last 2 decades. So clearly at an attractive price point currently from a fundamental perspective.
We had a conversation today with Complete Circle's Gurmeet Chadda. We also spoke with Bernstein's Pranav Gundlapalli on how this move impacts the stock price and the bank. Listen in.
It is surprising, Tamanna, and it's not restricted to Kotak alone. If you see HDFC, Axis, leading private banks, there are frequent outages. Most of the time, the servers are down, especially during month ends. And I'm actually surprised. HDFC does 70,000 crores of quarterly PAT. Kotak does 3,500 crores. ICICI has 10,000 crore PAT. So the IT spending has to pick up, and this is not something which is new. And if you see the observations, they have also highlighted the 5 points where they found, the observations. One was inventory management. Second was user access. Then they pointed out to vendor management. And they also pointed out to data security. So there were 5 areas and this is not the first bank. HDFC had a similar issue a couple of years back. Took almost 18 months to fix it. So what this does is that in this new digital world, while the current impact looks limited, the growth gets impacted.
early to estimate the exact impact until we get some more clarity on what exactly is the true digital sourcing for this bank, right? Because if you go by the numbers that they put out in the presentation and take it at face value, then it would seem like a large part of new customer acquisition is going to be stalled. I mean, that could pretty much wipe out growth until this ban remains. But what you've seen in reality is that a lot of these are, based on stretched definitions of what I would call digitally sourced customers. So in that case, they could be replaced with, say, telecallers or some of the other channels which are still permitted. So I think it would be early to put down a number on the final impact, but it would be significant. Because this is unlike, say, HDFC, which had a similar action a few years ago. This is across product segments. So this is not just for credit cards. Well, credit cards is a complete product ban. Banning acquisition of all products through online and mobile channels does lead to a big impact on the growth for this bank.
All right, ACC numbers on your screen, and we have to take the stock ideas of Rajesh as well, but ACC numbers on your screen, let's address them for a moment. I'm looking at the console numbers. You can look at standalone as well, but just looking at the console numbers, revenues at 5,400 crores versus 4,790, which is fine. But I think operationally, they seem to have done something remarkable because the EBITDA numbers seem pretty healthy, really. Just trying to get the math going, but revenues up 13%, yes, consolidated. PAT is at 944 crores versus 235. And yes, there is some tax write-backs that they have gotten, but even profit before tax is at 885 crores versus 331 crores. And if I look at above the operational line items, and even if I add back the depreciation and the finance costs, I think the numbers are rock solid. They have done remarkably well, ACC. Yes, the numbers look better on the bottom line front, the PBT and the PAT front versus EBITDA. But on the EBITDA front as well, they've done okay. And remember, this is coming on the day when Dalmia Bharat has come out and disappointed. ACC was up 4% yesterday, so bear that in mind as well. But the numbers on the face of it look very, very strong. And I wonder, I dare say, if this also has some implications for Ambuja. We should try and pull up Ambuja as well, because the group, and standard disclaimer, of course, ACC and Ambuja are owned by the Adani Group, which also owns NDTV, and you're watching NDTV Profit. So keep that in mind. But with that disclaimer out, I think these numbers look very solid. 79% uptick in EBITDA as well. They've spoken about internal efficiencies coming into play. A lot of efficiencies which were not previously tapped. The Adani Group has said that they will tap into it and gradually up this game. And I think these numbers stand testimony to that.
Margins have expanded as well.
Yes, 79% uptick in EBITDA, Tamanna.
Yeah,
pretty stunning, really.
So from 10% to 15% expansion in margins as well. And if you look at it comparative to what other cement counters are doing today, not just the Dalmia Bharat Cement, which of course had poor numbers, and that was the reason you saw the downtick, but even a Ramco, Star, all of them were having a fairly tough time. We should pull up more of those cement counters and see what's happening there. Very quick call from Hemang on ACC. First cut of the numbers, and we're relaying it as we're getting it. But if you were to bet on the cement play, how would you rate an ACC, Hemang?
So clearly, I think the numbers look better. I have not had a detailed look at it, but the EBITDA that we were looking at was about 835 crore. So I think the numbers that they've reported are, slightly better than this. And I think when you look at the valuations vis-a-vis an Ultratech or a Ambuja, ACC is still at about 12 to 15% kind of a discount with much better quality of earnings and EBITDA margins both. So we have a positive view on ACC. We think that the stock can give another maybe 10-12% kind of an upside. We have a target price of 27.50 for a 12-month third time frame.
Okay, that's ACC for you, and of course the flash is now on SJVN, but watch out for ACC. Rajesh, strong stock because it was up 4% earlier this week, up 1.5%. The charts of the derivatives?
Yeah, clearly in uptrend, and now stock is approaching to its multiple supply zone that is placed at around 26 or 20 kind of zone. If stock manages to take out this 2620 level, then possible rally can extend towards 2700 to 2750 also in short period of time. So overall structure is bullish. So those who are already bought this stock can hold on the position with the stop loss of 2550. And we believe that that breakout is likely to be there in near term perspective. So 2620 needs to keep watch on it closely for next couple of trading session. If it gives the breakout, one can add more position for short term rally in the stock.
All right, so that's the story with ACC. We saw a sharp up move there coming off just for a bit since there, but intraday you can see ACC up after those numbers have come in. Very quick break, but stick around, a lot more coming up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit.
Back with India market close right here on NDTV Profit, and the markets are looking stable and looking good. So bear that in mind. Most businesses and most companies which are in news are seemingly doing okay for themselves. Rajesh, we didn't get a chance to talk about your stock recommendations. Can we start with that?
Yeah, surely. So first stock is from metal space. The whole metal space is moving up, and in today's session, we have seen a fresh breakout on JSW Steel. The way stock has managed to give breakout of its previous swing high of January 2024, we believe that this momentum can extend further, and we expect a target towards 935 to 940 for trading perspective. Keep your stop loss at around 895. The second stock that we like at this moment is Container Corp. Again, if we analyze the overall structure for the stock, now stock is approaching towards its previous swing high of 1027. Looking at the overall structure, the way stock has recovered in last couple of weeks, we believe that this Container Corp can have a potential to scale up to the new all-time high trajectory very soon. Possible target we could see towards 1045 to 1050 for short-term perspective. Keep your stop loss now at 985. And the third stock that we like is Kaveri Seeds KSCL. That stocks managed to give breakout of long consolidation on a daily, weekly, as well as on the monthly chart. The way stock has shown a breakout and the volume action in last couple of trading session, that clearly shows that Kaveri Seed can continue furthermore upside, and possible upside target on a short-term perspective could be around 880 to 900. One can keep stop loss at around 805.
All right, Rajesh, those are his top picks, Concor and Kaveri Seeds there as well. Let's talk about Supreme Petrochem now. Numbers are out in Q4. Rakesh Nair, the ED, is with us now on the show talking about the quarterly numbers. Now, revenue, as I see it, is an increase of about 12.5%, 13%. EBITDA, though, has shrunk about 16% to 175 crores. Margins also down about 381 pips, and net profits down about 17.5% to 131.5 crores. Mr. Nair, welcome and thank you for speaking with us at NDTV Profit. Can you give us a sense of what have been the headwinds this quarter?
No, there have not been any headwinds, barring that there was this West Asia crisis issue. And generally, the global deltas have also shrunk over the year, and as compared to the previous year in the same quarter. So that has all come in our bottom line. The exports were doing very well, but in the last quarter, our exports are a little down because of the West Asia crisis there, the Red Sea crisis particularly. Otherwise, there have been no headwinds. The domestic market has been good, and the total sales volume of IC on a year-on-year basis in the quarter, we have done 17.6% more than the corresponding quarter in the previous year. So generally, the quarter has been good.
The West Asia crisis, but I was just looking at your 3-year EBITDA, Mr. Nair, and just help me understand. So I'm seeing 904 crores in FY22, 658 crores in FY23, and then 467 crores in FY24. Is this a realignment, or can you explain to us what's happening here?
See, in the year 22-23, the global deltas are very high because of the freight rates. The freight rates generally of all the container cargo was very, very high, which have now come down to a normal level. And also that during the current year, the deltas between the styrene and the end products have come down or have shrunk marginally globally. So that all has come down and resulted in these numbers here for us.
And likewise with EBITDA margins, I'm assuming the same reason you've had great margins in FY22 because of the freight rates.
Yeah. The FY21, 22, there were all this COVID, after effects of the COVID. There were global plants which were shut. So all that had increased the global margins, and that has also reflected in the Indian market.
Okay. So what is the sort of steady state EBITDA margin that can be guided to or expected? Now we're sitting in FY24 looking at an 8.9% figure. What do you reckon it could be for FY25?
See, the margins are a play of many things, the raw material prices, the global events, the global deltas. So it's very difficult to predict the margins. I can only say that yes, our volume growth would be there. We did almost 325,000 tons of volumes last year. And going forward in this year, we should be doing 8 to 10% more than that.
Mr. Nair, but because the margins are a factor of many things, one love to understand what could a reasonable expectation be? Because you may do volumes, but if the margins contract, then it doesn't quite bring about the earnings growth. So is there some assessment that you can give to your shareholders and viewers?
If everything is static, everything is the same, then we would be doing the same kind of margins as we have done this year.
Okay.
And for the increased quantity, the volume absolute numbers would go up.
Okay. What about expansion plans, if any? Anything on the anvil which might aid volume growth, or newer plants that you might be setting up elsewhere?
No, our expansion plans are on, our capex is on, but that all would be completed by the end of this financial year. So the impact of that would start coming in from the next financial year, and the main impact would come in the financial year of the end March 27.
Okay, I'm just trying to understand. So if you have steady state growth, I heard you speak about some volume growth for FY25, which is fine. What's the kind of growth that comes in for FY26 or 27 because of the added capacities?
See, we are setting up with 70,000 tons of mass ABS project, which would be ready by the fourth quarter of this year. So the part of that quantity would come in the next year. And it is the first time that product is being introduced in the Indian market. So we expect that in the year 26-27, we should be able to do almost the same 70,000 tons would get added, apart from the regular volume growth in our existing product lines.
And just trying to understand, what is that addition amount to in terms of, let's say, a percentage over what your normal growth would be?
The 70,000 tons additional quantities, today we are doing 325, or this year we'll do more than 350,000. So that 70,000 brings in another 20% volume growth for us.
Okay.
Mr. Nair, you talked about geopolitical issues in West Asia being a bit of an a challenge this quarter. Now, how do you see that playing out? Because once again, this is, in the realm of uncertainty. And if we do continue to have conflagrations, can you just give us a sense of how the impact would play out for you and how it hits you?
The West Asia issue, the Red Sea issue, that had an impact on our exports because now the Suez Canal is not available to us for exporting our cargo. So we have to go through the other longer route, which takes almost 3 weeks more, and the freight rates are higher. So the aligning the whole thing with the customers and the getting new orders on the new rates with the new freight rates and all that has taken time. But now every customer in the European market, in the Turkey market has understood that is the reality. So they all have, they kind of going to live with it. And we hope that our volumes in the export market would not be impacted going forward now.
Okay. And do you see the first signs of those volumes stabilizing, or do you have an outlook where you see?
Yeah, this is what we are seeing now, that the orders are coming in now at the new rates and the new freight rates. So, and now we are also exploring new markets and new customers. So we expect that our total export volumes would be better than the previous year.
Okay. Thank you so much, Mr. Nair, for speaking with us today of Supreme Petro there, talking about their quarterly numbers. Very quick break. On the other side, we talk about Nestle, what their Q4 look like. The stock is up today. There's a FSSAI statement saying that they're going to look at all of samples of their baby food across the country. It's made no impact on Nestle at all. The stock is up 2.5%. More on Nestle, ITC, HUL, and what's happening in the F&O space. All of that on the other side. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. Let's just look at what's happening. The story of the day continues to be Kotak, but apart from that, some very sharp moves coming in on the broader market side as well. I'm looking at an MCX today up 8%. There's a Motilal Oswal note on them. Bharat Forge also doing very well, and we will get my colleague Puneet up in a second to talk about the UBS note on Bharat Forge and why Bharat Forge is looking good. But even apart from that, Mazgaon Docks doing great. Axis Bank, fantastic today. Dilip Bhatt is joining us now. He's the founder of Pedigree. Mr. Bhatt, good afternoon. I hope I said that correctly. How are you doing, and what would you do with an Axis Bank and a Kotak Mahindra Bank today? All right, I'll try and get Dilip back in just a bit from now, but Rajesh Palvia is also with us. Rajesh, can you hear me?
Yeah.
Okay. Chalo. MCX. Tell me your take on an MCX up 8% today.
Very strong really in today's session, and the way stock managed to give breakout of last 5-6 days consolidation range, it clearly shows that this rally can extend further, and possible target on the high side we could see towards 4400 to 4500. So a stock is bullish across all time frames. So I think buy on dip should be your strategy in the MCX. In the previous day, we have seen a dip of around 4 to 5%, and again the kind of buying interest in today's session, that clearly shows that there is a confidence on a street for the stock, and the way stock is moving across all time frame, that clearly shows this rally can extend. 4,400 to 4,500 could be the positional target on the stock. Your stop loss should be placed at around 39.50 to keep accumulating this stock for positional perspective.
I'm just also, since we're talking about an MCX, look at a Motilal Oswal, pull up a CRISIL. Everything capital markets related, 361, up another 5% today. All of these stocks having a great day. AB Capital also not bad at all, 6% up. Now, another area that we should focus on is FMCG. Nestle just came out with a strong set of Q4 numbers, with Nespresso and a JV with Dr. Reddy's in the pipeline. That's why the excitement perhaps on a Nestle. The future quarters also look interesting for the company. Mahima joins in to tell us more. Mahima, I'm very excited about Nespresso. I would love to see what happens there. But apart from that, Nestle seems to have shrugged off this baby food concern quite strongly, isn't it? Was there any mention at all in their statements after?
No, Tamanna, there is no mention about sugar in their baby food, and the stock is doing pretty well, considering the results that have come out, the strong results that have come out with. The domestic sales have grown around 9%. Now, this is on the back of strategic pricing and their favorable product mix. Their export sales have grown around 19% year on year, and this is because there was strong demand in places like Canada, US, Australia, New Zealand, etc. Now, in terms of gross margin expanded around 300 basis points, and their EBITDA margins also grew by around 220 basis points. This is because their cost of raw material consumed decreased from 46% to 43%. Now, in terms of their segments, beverages segment witnessed a double-digit growth. Confectionery delivered a strong performance with fueled by KitKat. Milk products and nutrition witnessed a strong growth despite the inflationary pressures. And now talking about the business updates that they've given in JV with Dr. Reddy's. Now, this will be a JV between the two companies, and where 51% will be held by Dr. Reddy's and 49% by Nestle. And this will be for manufacturing and production and marketing of nutraceuticals. And they've also they've also launched Nespresso, which you're excited about, where they'll be selling coffee machines and coffee across India, and they'll also be launching a boutique in Delhi soon. Now, in terms of commodity outlook, the company has given some kind of commodity outlook in their results. They've said that they're seeing unprecedented headwinds in coffee and cocoa. They're also expecting milk prices to rise on account of harsh summers, and they're also said that cereals and grains are going through structural cost increase backed by MSC. So in near future, we might see some kind of pressure on margins if they do not pass the increase of price to the customers. Otherwise, their margins will be maintained. So this is the overall view of Nestle's results.
So no clarity, I suppose, on whether they will pass on their prices on coffee and cocoa, etc. But Nestle doing well at this point. All right, let's look at what's happening on the F&O side of things. Today is expiry day, monthly expiry. In fact, Agam, has it been largely smooth sailing?
If you don't ask me about call writers, then it's been an excellent day for a lot of these traders on the futures and options space. But like I mentioned, we've seen a fair bit of volatility throughout the course of the session, and to be honest, in the first 1 hour of trade was extremely hard to trade, because we saw a very sharp up move, and then we saw a very sharp down move, and then eventually, while things started moving out and smoothing out, that actually led to a very sharp up move once again. The big positive, of course, is that the Nifty is now above the mark of 22,500. The rollover standing at around 55%. This number specifically is not a very high number. You usually tend to have about 65 to 70% in terms of rollovers. So I reckon that at this point in time, we still have a lot of hesitancy from the trader community. But I can understand that because we are in election season at the moment, and I reckon that a lot of traders would wait and want to watch out for several more factors, several more feelers, as we move into the next few weeks. That said, this is your May increase in open interest, about 22%, but I reckon the rollover gives you a fair enough picture of how positions are panning out. The Bank Nifty, let's pull that up. Let's see how the May futures are coming through. So we are looking at a 20% increase there as well, on expected lines perhaps. And, all the weakness in Kotak Mahindra Bank has been absorbed by Axis Bank as well as SBI. So that's, of course, another big positive. Let's pull up the Nifty options market and see, how things have panned out there as well. And naturally, considering we are going to see the expiry somewhere around 22,600, that's exactly where we are starting to see a little bit more writing in terms of calls and puts as well. Moving on, I want to talk about stocks. And in terms of stocks, I reckon Kotak Mahindra Bank will stand out in terms of the kind of change in open interest that we've seen. We must remember that today being the final day of the weekly expiry, actually, I did want to talk about stocks since we've covered this bit. Let's talk about all the stocks which are in fact seeing an increase in OI. And of course, this is April futures. Surprisingly, even in April futures, considering it's the last day, we're seeing some amount of traction here in terms of ITC, Shriram Finance, Bajaj Finserv, Dr. Reddy's Marico. And in terms of unwinding, not too much to speak for, but naturally, this is once again on expected lines. We will see some very large numbers coming through. It doesn't necessarily mean that all these stocks are seeing unwinding. All in all, it's turned out to be a good day of trade for the bulls, for those who are playing directionally on the upside, because we once again moved above the mark of 22,500. And for the Bank Nifty as well, the weakness in Kotak Bank has been bought into in other private sector names, and that is also perhaps a positive going forward.
Thanks for that, Agam. Well, Laurus Labs numbers on your screen as well, and that should be watched out for just before we get to our guests. And the street would understandably be disappointed because ahead of the numbers, murmurs of margins closer to 21 or 22% had started to come. There was an antique note, if I'm not wrong, or one of the brokerage notes which said that there could well be a number which might be closer to 21 or 22%. Remember, in the quarter 3, the management had said that they will move towards 20%. I think the street thought that it will essentially be 20%. Brokerages estimated that, and the margin number is still below 17%, and that is the disappointment. Now, the question is only that on the con call or in the interview that he does with us tomorrow, does he talk about what could happen in quarter 1 in terms of margins being high, because that could help the stock. But otherwise, must say, yes, relative to the previous 3 quarters, the margin performance is strong. But otherwise, a bit of a disappointment, if you will, that the street anticipated 20-21%, and that the margins have come in at sub 17%. So 2.5% lower for Laurus Labs in the session today.
Yeah, but just Neeraj, net profits also down about 28%, EBITDA down as well about 15%. So yes, margin pressure is there, but something seems to have not worked too well for Laurus Labs this time, because revenues are up only 4%. That was in line with expectations? Yeah, actually, well, on the revenue front, because of the base quarter going away. So now what will happen is that starting quarter 1, FY24, it's 3 quarters of very low base, both on the margin and the revenue front. So suddenly you will start seeing pretty decent performance on the revenue and the margin front. But the problem, Tamanna, I think is this, that somehow the street believed that they will do closer to 20% in quarter 4. They haven't quite done that. Is it a case of a delayed gratification coming in because of the CDMO business turning around? Because Jonathan Hunt of Syngene was talking about the same thing. And Laurus has a large CDMO division now. Can it show its magic in quarter 1 is the key question. Yeah, and that thing about base effect, waiting for the base effect magic to kick in. So Dilip Bhatt is joining with us. We finally got you on. Dilip, can you hear me?
Loud and clear.
All right, superb. Great to have you here this afternoon and to speak with you as we wind down closing. The big stories of the day, I wanted to ask you about Kotak and Axis and how you would play both of these, how you see both these counters with future potential right now.
I think the price of Kotak Bank has behaved on the expected line. I think the knee-jerk reaction, which was expected, and that has really played out. Now, do I see a further fall from these levels? I don't think so, and I would certainly think of an opportunity to buy this kind of a company around these kind of falls, and possibly for a longer time horizon. At the same time, I know that these kind of problems which the RBI has specified, it doesn't go overnight. It may take a couple of quarters before it settles down and before the RBI gives a green signal, is what broadly I would think. And in the intervening period, maybe some compression in terms of NIMs and some scaling down of the loans. All those things will play out. But from the current levels, I think, yes, I will still look to buy the stock from the current levels, or maybe another 5 to 7% lower. But yes, it looks good. Coming to Axis Bank, I think the profits have not been all that great. The more important thing is the gross NPA and the net NPA. I think they have played out much better than the expectation on an overall basis. So I would say that Axis Bank still continues to look pretty good because it has not done anything big in terms of the price movement. Of course, it has moved up, but not done anything big as compared to if you take ICICI Bank and others. So on a relative basis, yes, Axis Bank in the private sector does look good because it's not even over-owned stock, unlike your HDFC Bank and ICICI Bank.
Okay. Dilip bhai, good afternoon. Neeraj here. There is a lot of traction that we are seeing in FMCG, despite the fact that the numbers or the commentary from the two large companies that have come out thus far doesn't seem to be too exciting. Yes, there is a development about Nestle and one more company, Dr. Reddy's in particular, but even the others are kind of doing okay. What do you make of investing in some of these FMCG names, particularly the staple companies?
Good afternoon, Neeraj. It's always great to interact with you.
Likewise.
Neeraj, I think the FMCG space has still to see the volume growth kicking in from the other than urban areas. So other than urban areas, I think the volume growth still continues to be muted. Now, I think Hindustan Lever was very loud and clear as far as this particular aspect was concerned. And I think this issue has been the chronic issue now for almost about 18 months. And we have yet to see the revival in demand, especially in terms of the volumes in other than the urban areas. So what I would say is that there are 3-4 factors have probably loaded in favor of the FMCGs. One is, a lot of things have the lack of volume growth. Everything is there in the price. Now, what can really benefit them is maybe the cooling of inflationary pressures. But as what we can see, that inflation keeps on rearing its head time and again and disturbs the equation. But I think the cooling of inflation is certainly going to be a lot more beneficial for them. They've already taken a price increase. So somewhere I think there could be a momentum play in this particular sector, which I think if one is ready to hold on for 3 to 6 months, one can get some kind of momentum play across FMCG, and more so in a company like, I would say, Levers. I will say something like even Dabur, and I would say even something like Marico. All these companies probably will stand out in some way. Even Godrej Consumer also looks pretty good and interesting from the current levels. So I think some of these, it should be there on the watch list for 6 to 9 months play.
All right. Let's quickly get in Puneet, my colleague who's tracking Bharat Forge. Now look at Bharat Forge has had a very smart move today on the back of a double upgrade by BofA. What is BofA liking so much about Bharat Forge, Puneet? The stock is up 8%, of course, but what is their rationale?
Well, yeah, rightly said, Tamanna. So a double upgrade with a target price of 1450, which is roughly an 18 to 19% upside. Now, do know that the stock is very close to its 52-week high of 1330 rupees per share. Now, what is driving the optimism is the brokerage note is saying that the widely expected downturn in the truck market might be elusive, is what the brokerage is saying. They are saying that the expectations of the truck market to do very, very poorly might not be as bad as they thought so. They've said that the truck down cycle, if anything, is expected in the H2 of 2025, and they are saying that this might be short-lived. Now, they have spoken to a few large global OEMs and truck makers. They are pointing to steady fundamental demand, while a couple of parameters that they track, basically like the spot truck rentals or the used truck vehicles, the prices of all those have been inching up, which is a positive for the company. Now, one of the key triggers here is the upcoming emission norms in 2027. Now, the management had guided that there will be pre-buying in 2024 to 26, and the brokerages have affirmed the same. They are very, very positive on this pre-buying. Finally, what they are saying is that the other verticals such as defense as well as industrials are scaling up very, very well, and they have upped their estimates by 7 to 15% and raising the multiple to 18 times EV by EBITDA. Now, what the management had said on this pre-buying was that from 2024 to 2026, they are expecting 1 million vehicles to get sold, and someone like a Bharat Forge will be a key beneficiary of this. They've also said that the defense business is expected to have 1,000 crores of revenue, and they already have another 2,000 crore of order book currently. Finally, the next milestone is roughly 2,500 crores of revenue from this defense vertical in the next 2 to 3 years. And apart from BOFA, there are roughly 19 buy calls on the stock. So really positive commentary on the truck market as well as on Bharat Forge specifically, leading to the biggest such an up move today, biggest move in the year to date after the Q3 results. Back to you.
Biggest move in the year today after the Q3 results. Thank you so much for that, Puneet. Dilip Bhatt is with us, Rajesh Palvia is with us. Dilip Bhatt, do you like Bharat Forge? Mr. Bhatt, can you hear me? Can you hear me? Okay, some issue with that audio with Dilip today. Rajesh, your view on a Bharat Forge already run up about 7.5–8% today?
Yeah, so definitely the stock, the way stock is moving up, and now stock is approaching to its previous swing high of Feb 2024. Looking at the overall structure, we are holding our bullish view, and we expect this rally may extend further, and possible upside target we could see towards 1380 to 1400 kind of zone for Bharat Forge. So overall structure is bullish. Those who are already holding the position or willing to buy at current level, they can hold and buy at current level also with stop loss of 1270. And we believe that in short term we could see target towards 1400 for Bharat Forge.
All right, so it's been a day of big results and a lot of good conversations on NDTV Profit with managements of these companies. Remember, if you want to see those full interviews, please go to our social media platforms. Of course, you get all the information on our website as well. But let's just take a look at some of those conversations we had today.
Ours is a bit of a seasonal business. So Q3 is always the best quarter and will remain in the foreseeable future. Q4 is the second best quarter. And as the base keeps increasing, the percentage rise will start declining, because just imagine coming out of COVID, where we had almost nothing. We started showing growth in like triple digits. And then it went to high double digits. And at some point of time, it has to come back to single digit. Important is to look at the CAGR of last 5-6 years. And if we looked at that, then we are showing and demonstrating, both as a sector as well as our company, a very high and a very healthy growth.
Good margin performance in the fourth quarter. Some of it's deep and underlying. It reflects the work that we've done around business efficiency, better procurement, better operating efficiency. But I would temper the enthusiasm. What's the expression? There's only two certainties in life: death and taxation. And of course, the fourth quarter did benefit from a tax rebate. Now, everybody likes to get one of those, whether it's a personal one at a corporate level, but that's some of what was driving that. I wouldn't predict that every quarter in the future we'll have a check coming back from the taxman. So we're happy about it. I don't think it sets a new high for us.
So last year, we had to raise a higher level of deposit because that's the way we could decrease our CD ratio. But that is not a major, requirement going forward. We should be looking at about a 25% growth in advances for FY25. And to support a 25% growth, we need a deposit growth of anywhere in the range of 32 to 34%, which will help take care of the SLR CRR requirements and keep the CD ratio steady. So somewhere around 32, 33% deposit growth is what we would be looking for in FY25.
Client sentiment is actually very similar to what we saw in calendar year 23. We're seeing calendar year 24 on very similar lines. Clients are cautious about the macro environment that they're seeing. The only difference, I think, is that they're getting more used to that this environment is going to be there for some more time, and then they're reprioritizing their spend priorities accordingly.
Okay, that's the word from some of the managements who spoke to us earlier. Before we wrap up or start wrapping up the markets, I don't know if we have Dilip Bhatt still and whether he can hear us or no. But Rajesh, maybe you gave us your closing strategies, but a set of stocks that have had a really good run in the last few days, the Inox Twins. Today, they have declared a bonus 3-1 for Inox Wind. That stock is up 7%. Inox Wind Energy is up 5%. At highs, I believe, both of these. Can Inox Wind do more?
The way stock is moving in last couple of months, we believe that, the way stock is moving up, stock is moving in up-sloping channel on monthly as well as on the weekly chart. That clearly shows sustained buying is taking place. Yes, there is a high possibility that the stock may continue furthermore upside. A possible target we could see towards 700 to 720 on the higher side. So yes, one can buy this stock at current level also. Even if you get any chance in decline, you can add furthermore. Your stop loss should be placed at around 605.
05 is the stop loss. Okay. And Rajesh, before we thank you, we've spoken about a lot of individual names within the banking space, yes, including Kotak and Axis. But I was just wondering if we had to get a view on either the top stock losing out in the session today or amongst the top gainers. So Glenmark Life down 8%. How is that on the charts? And on the flip side, MCX, which is up 8%.
So definitely the sentiment and the trend of market is on the bullish side. So I think one should look for buying opportunity. And I think MCX is a stock where we are seeing the kind of rally. That stock clearly showing the sign that we could see the continuation of rally towards 4400, 4500 kind of zone for MCX. So that stock is a buy with stop loss of even in the decline also you can add 39702 should be your stop loss to buy and hold the MCX at the current level.
What would be your top two BTST calls, Rajesh?
So first one is from PSU Bank, that is Canara Bank, very strong buying action in the PSU space, PSU banking space. So Canara Bank could be a stock where we can see target towards 630 to 635. Keep your stop loss at around 609. And the second stock that we like is Raymond. That stock is also showing good traction, and the way stock is holding the ground at higher level, we believe that Raymond can show uptick in tomorrow's opening and possible target towards 2180 to 2200 we can see, and one can keep a stop loss of 20902 by Raymond also.
Rajesh, really appreciate you taking the time out and being with us as always. Thanks for your time today. That's the view from Rajesh Palvia. Let's start wrapping up the markets. A minute and a half left for the markets to shut shop. Not a bad close, you have to admit, really. I mean, for the markets to do what they've done. Support from banks, PSU banks in particular, but a lot of others as well. And just quickly, the mid cap and the small cap indices on your screen, just to check whether the market breadth is positive. And yes, it is. I mean, 0.5%, so nothing rara, but the small caps have done well, 0.8%. Let's get the heat map up on the screen and look at the gainers. We know the losers are punctuated by Kotak, LTI and HUL, oh, even Titan. But the gaining list, Axis is up 6%. SBI is up 5%. For State Bank of India to move 5% is quite stunning. But there is also gains for Dr. Reddy's and Nestle on the back of, presumably on the back of this JV. I see no other reason why for nutraceuticals that they have done. It's possibly a win-win for both. Hero MotoCorp does well. Adani Enterprises does well today. So that's a good one. ITC is up about a couple of percentage points. So that's not done badly. And JSW Steel from amongst the metal names doing okay. Essentially a rising tide which has carried almost all boats along with it. But the real action in today's session as well. Actually, you would say that small caps have had as good a day as the large caps have had.
Absolutely, and it's all about the numbers, I would say, Neeraj. You just pull up the BSE 500 topics and you see about how it very clearly reflects what's happening with the numbers, and if there are positive notes. Supreme Petrochem, we spoke to them, what an up move there. Nearly 9% up. Stock was up about 2-3% when we were talking to the management. MCX positive note there coming in from Motilal Oswal. Bharat Forge positive note there coming in from UBS, and that's why perhaps you're seeing some of those moves over here. Dalmia Bharat, poor numbers. Spark, I told you, permanent residents in the bottom 5% list one more day. Indian hotels, also the numbers left a bit to be desired. I would say cement overall had a poor day, apart from an ACC. I want to see how an ACC has closed up. Their numbers came in and they've paired off their gains, but not too bad at the end of it. Vodafone is another stock that we should pull up as we wrap up the market post the FPO. And I don't know if you can pull up a week's chart, because what gyrations on Vodafone, down 9% one day, up 5% the other day. If anyone's really punted on this, they would be having sleepless nights, I suppose. Net in a week up about 4%, but sharp moves here, very difficult to catch those tides, I suppose. But Vodafone has been another interesting play that you could mention today.
Wonder what Loris is closing with the slightly actually a disappointment numbers. Yep, 2.5% lower. So this one is also in the red today.
The management's just put out another press release on their outlook saying that they expect margins to improve. Let's pull up the the chart, the intraday of Loris, and see if they tempered off their losses towards the end. That statement came in just a short while before market close. No, not too much of a relief there as far as Loris is concerned. But yes, buy and buy, not a bad day for the markets, one would reckon. Bang in the middle of the thick of results season.
On expiry day.
And on expiry day. Actually, expiry day went much quieter than what was expected. So no real complaints here. But I think that's all the time we have on India Market Close. So from Neeraj, me and the team who put the show together, thank you so much for watching.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, today the company that we're focusing on SMID show is Imagica World Entertainment, and to discuss more about the newly acquired parks and amusement parks, we have with us Mr. Jay Malpani, Managing Director of Imagica World Entertainment, joining us now. Welcome to the show, sir.
Thank you for having me on show. The acquisitions, the synergies are playing out well. So we have recently finished and executed all the documents with regards to our transfer. So from 1st of April, all the revenues and EBITDAs and all the operations of the 4 parks which were operational are in the books of Imagica. And this will considerably make our P&L and balance sheet much stronger. We will double our footfalls. It will increase our revenue by 1.5x and EBITDA by 1.7x based on the FY23 numbers. And on the combined level, our profitability of the company will increase as well because of these additions of these high margin properties. And we expect that we will increase the market penetration, enhance the marketing effectiveness, and even from pricing point of view, we will have a better pricing in this region. And we'll have multiple synergies because of the consolidation with regards to purchasing power, marketing, retail, F&B, and cross-selling opportunities like combos across all our parks. And we have always wanted Imagica to grow across India. So this deal facilitates that and accelerates our geographical expansion as well.
I take your point, Jay. Well, Mahima, this side, can you quantify as to how much will this impact your margins and your bottom line? How much will your margins and bottom line increase by then?
Sure. So currently we are at around 38% of EBITDA margins, and the new parks which we are adding are about 57% margins at EBITDA level. We expect our combined margins to go in the range of between 45 to 49% in this next 2-3 years at a consolidated basis.
Sure. And just with regard to what the expectations or what the type of synergies are that you are likely to see from some of these acquisitions, as well as more importantly, let me actually switch it over to funding. I want to try and understand from a funding perspective, how have these parks been funded and what's the plan like with regard to cash flows and where you will utilize them?
Sure. So the way this deal is structured is that Malpani Group has given Imagica a timeline of 30 months to pay the whole consideration. So Imagica has it's a deferred payment. So because of that, since the cash flows are in the books of Imagica from 1st of April, 60% of the cash flows will be funded through internal accruals itself. And then the balance 40% will be a mix of debt and equity, through which we will fund these acquisitions. And at the portfolio level at Imagica, we have a threshold of 2.5x of debt to EBITDA is the maximum we'll raise, the amount of debt we'll raise. So this is how the acquisition will be funded.
Okay, understood, Jay. So also, you've been taking a lot of cost control measure when it comes to Imagica. Now, getting these acquisitions into place, where do you think your cost will go to, and will you be applying the same cost measures to these acquisitions as well?
So we'll be putting the same cost measures to the acquisitions as well. When we are acquiring those 4 parks, they are already at 57-58% EBITDA margin, which is one of the highest in the country. And even with regards to Imagica, since our parks will merge, a lot of our common teams will be set up to manage the back of the house, even our operations. Even at the senior level, a lot of the teams will get merged because when we were operating these parks separately, the teams were double. But since we are all in the same entity now, we will see that these teams will be similar and we will see a good cost reduction on that part. Even with regards to purchasing power and marketing efforts, we'll see a good amount of synergies. And since we are in the same region, even with regards to pricing, we will see a good amount of pricing levers which will improve. And Imagica has a very strong non-ticketing business, which is F&B and merchandise. And we expect that both these things will be replicated across all our 4 parks. And we expect to see good margin improvement coming from there as well.
Understood. And where should the borrowing number be at in terms of your cumulative borrowing for FY25?
So cumulatively, we are still open to a mix of debt and equity. And with a threshold of 2.5x of that number is something which we will have. on a consolidated basis, on the FY23 number, our EBITDA is around 170 odd crores. So we have a good cushion to borrow, but we'll have a good mix of debt and equity to fund these acquisitions.
Okay, understood. Jay, I also want to understand, with respect to your other income, from what I've seen is that, in March 23, it was negative 490 crores and then it went to positive 570 crores. Then in September, it was around negative 50 crores and now it's, in December, it was around 0.5 crores only. So what is happening exactly there with respect to your other income, because it's pretty volatile there?
So actually the other income are mainly accounting entries which have been there because of the resolution plan which the group had concluded in 2022. So there are multiple legs to the resolution plan, and one leg was with regards to land and the other leg was with regards to the promoter OCRPS conversion which we just finished in April. So these are those entries which are more accounting entries which have been part of the resolution plan. So going ahead, you won't see any big fluctuation in that number, and the number will be pretty stable going ahead.
What does this other income comprise of currently, Jay?
So currently, I think the one of the thing was with regards to OCRPS conversion, which was there. Part of it is converted and other is written off. So I think that was the number which was there in the other income this time.
All right, and with regard to just return on capital, large amount of capital which is expected to be deployed. What's the ROC that you're really expecting on some of these numbers, ROEs, ROCs? What's the kind of return ratio that one can expect?
So we are, so the parks are of different size and scales. Even going ahead, we are planning on putting up different parks in various different tier 1 and tier 2 towns across India. So based on the demographic and location we choose, these ratios are expected to vary between 15 to 18%. And in some cases, if the park is a mid-size with a very good location like Sabarmati, which we were just awarded, so the ROCs are expected to be in the range of 18 to 20% as well. But the range is 15 to 18% is what we are considering for these parks.
Okay, Jay. And going forward, let's say in the next 4 to 5 years, how many parks do you wish to, build, acquire, organic, inorganic expansion? What are the plans?
So we have a good pipeline in place right now. We have 2 projects on the way. A water park in Indore, which should start this year, and a Sabarmati Riverfront Entertainment Hub, which is a downtown project, which will start next year. So our plan is to have 1 park at least every year, which will get added to Imagica. And so that's the plan going ahead. So 2 parks in pipeline, and our plan is to add 1 park every year going ahead.
Okay, and just with regard to as you scale, what's the kind of revenue potential? So you spoke about 1.5x revenue FY25. That would be compared to FY24. Is that the correct number to take? And therefore, when I'm looking at your overall numbers, broadly trailing 12 months at 250 crore, so you'll roughly be doing around maybe 400 crore in FY25. Is that the correct way to look at it?
Yeah, so we have just combined the FY23 numbers for all our parks together, and that number comes out to around 400 odd crores. So that's the number we are hoping to do this year, and some growth with regards to that as well.
Okay, and Jay, what are the capex plans going ahead for FY25?
So from capex point of view, Malpani Group had invested almost 25 odd crores in the existing 4 parks which were transferred. So there's no new capex which will be done on those 4 parks. And even Imagica just added 6 new water slides, a beautiful water fountain show last year. So for 25, in the current parks, we don't expect major capex to happen. It's already been incurred last year. The only capex which will happen is for the Indore park, which is already accounted for. So other than that, no major capex as such for the existing parks.
Got it. And equity dilution, Jay, what's the sense?
So to raise the money, we are looking at a mix of debt and equity. So some bit of, we are still exploring multiple options with regards to how to raise the equity as well. So as and when the plans get consolidated, we'll get back and update to you on the same.
The promoter will continue to hold 74%? Sorry, very, very quickly.
We want to hold 74% and if we raise some bit of preferential allotment or we do some QIP, then there might be some dilution with regards to that. But our aim is to hold as much as possible.
Sure, understood. Okay. Thank you so much for that perspective, Jay. Of course, we'll wait Q4 numbers and FY24 numbers, and we'll call you back and get some more perspective. Very, very interesting with regard to the growth plans of Imagica World. Thanks, Jay.
Thank you so much.
Right. So, time to slip into a very short break. We'll continue, post the break with a very special conversation we've had with Tata Consumers to try and break down some of their numbers. Mind you, top loser on the Nifty 50 yesterday. So stay tuned to NDTV Profit. We'll give you that perspective on the other side of this very, very short break.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the
Hello and welcome to NDTV Profit. We have with us a very special guest, Sunil D'Souza, CEO of Tata Consumers, now joining in. Mr. D'Souza, thank you very much. Thanks a ton for joining us today on the show. Firstly, congratulations. FY25 is behind us. You've managed to pull out quite a good quarter. A couple of areas that we'd like you to start with. Firstly, of course, comment on the quarter behind us. Revenue was largely in line with street expectations. Margins have seen an uptick. International business is finally picking up. And you've got those substantial acquisitions as well now behind you.
Yeah, so thanks for having me on the show. And yes, we had a pretty decent quarter and a good end to the year. 9% top line, 22% EBITDA, profit before tax, before exceptionals, plus 46. I think what the reported numbers would be net of we had a stamp duty on account of the merger with Tata Coffee and some prudent provisions that we took for underutilized assets as well as a financial instrument. Other than that, like you said, I mean, all businesses on growth. That's pleasing to see. We've had 2 months of Capital Foods. With that, the foods business is powering ahead with the 20% top line growth. International, we've always said it should be margin should be accretive to the India business, and they've come to the party now. Very strong numbers. Canada was always strong. UK, very strong numbers. US is also turning around the corner. Strong growth in our growth businesses in India. Most importantly, our EBITDA margins for the quarter came in at 16.1%, which was pleasing. We've always, last quarter we said our new benchmark is 15 plus, and this quarter we delivered more than that. The good part was we've reduced working capital. Cash has grown at 27% versus last year.
Cash as a percentage of EBITDA is 101%. So we reduced working capital substantially. ROC 280 bips ahead of last year. Strategically, shares more or less on track. Outlets now 4 million. Innovation firing well, 5% plus. Costs well within control. Distribution expansion on track. So all in all, a pretty decent quarter.
Do you think, do you expect an upside risk to margins in the next few quarters or the next financial year?
Upside, I wouldn't call it a risk. I said upside is
it's a pleasure.
Happy surprise. Correct.
Yeah,
happy
it's
surprise.
a happy surprise.
So, while we've delivered 16.1% this quarter, but if you look at the full year gone by, we're at a 15.3. So that's why we said 15 is the base, and we will deliver above 15%. That's for sure. But we're setting the base at 15%, and we feel quite confident that as we go through the year, we drive top line and scale, keep costs within control, take out synergies. We're sure we can beat our numbers.
And you've also improved enormously on operational efficiency. Let's talk about Capital Foods and organic. Going into the next couple of quarters, because I'm assuming by then you'll be completely integrated and available at all sort of through your distribution chain, what is the revenue target that you're expecting or working with in terms of contribution from organic and Capital Foods?
So, like I said, Capital Foods was distributed in about 250,000 outlets. I am directly distributed in 1.6 million. So that's a huge headroom. We said we will complete the integration in 100 days. We are on track. We did the acquisition early February, and by end of this month, we should be done and dusted with the entire integration piece. Organic India, we've just started. It was middle of April by the time we finished. So that will take 3 months from there. And for both these businesses, like I said, now they're part of our growth portfolio. So the growth portfolio itself, 20% of the portfolio was growing 30. Now we're adding this 10% and say we'll grow at 30. So broadly, both Capital Foods and organic will continue to grow at a 30% plus, at least for this year.
I want to talk about NourishCo because that's what you also referred to in the con call earlier. The guidance set out for that was close to about 1,000. You've closed in at about 825 crores. Seasonal issues, I believe. When do you see that shortfall getting filled in? Do you think by next quarter we will see a sharper uptake on NourishCo?
Yeah, so NourishCo
target for FY25. What are you working with internally?
So NourishCo actually has been firing on strong cylinders with a combination of distribution expansion, powering up the portfolio, and innovation to sales in NourishCo is close to 20%. In NourishCo, from 650,000 outlets, we've gone to 950. We've already built the supply chain and the distribution to take advantage of this season. And I said last quarter, actually, right up to January, we were quite confident of hitting the 900 to 1,000 crore number. Middle of February onward, we started seeing unseasonal weather patterns. And more importantly, I think Holi this year was shifted by 20 days. And I still remember from my old beverage days that Holi is the onset. It doesn't matter what the outside room temperature is. Holi is the onset of summer for most parts of India. So I think that's what has happened. Summer has come in very, very strongly. So we feel quite confident that we will come back to the same, I would say 25 to 35% growth rate for NourishCo in this quarter itself.
I want to talk to you about Tata Sampann. Great growth there as well. And interestingly, there's so much happening in that part of the industry with everything we're hearing about the regulator, with the Singaporean authorities, Hong Kong authorities cracking on your competition. Now, if I call it a risk, you might question me again, but have you seen that impacting your business? Tata as a brand is associated with quality. And imagine in the Everest of the world, other masala companies are losing market share. This could be a big gain for you, and we might potentially see an impact of that in the next quarter.
See, I wouldn't comment about the other companies, but I would say as an economy develops, as products proliferate, as consumers become more aware, I would start to expect that regulations, the standards will continue to go up. And I think the FSSAI is doing a fantastic job in bringing up the standards overall in the country. That said, I think for us specifically as a Tata Group, we are very, very mindful of the value that the Indian consumer places, the trust that the Indian consumer places in the Tata brand name. And therefore, I mean, irrespective of what it is, we will be following regulations very closely. We will make sure our products are of the highest standard. So Sampan, for example, right? Very simply put, I'll give you a very, very simple example. Just by going to the border on moisture content, I could improve my profitability. But no, I want to make sure that I'm well within the range of the moisture content. We've got internal standards on brokens, type of grains, etc. I know that by moving a little bit, there's a little bit of money to be made. But as a Tata Group company, we value the consumer trust in our product and our quality more than anything else. And we are here for the long term, right? So therefore, I wouldn't be too worried about what's happening. The good part is we just need to double down and make sure we execute properly.
Double down and execute properly. So while, of course, top line will be focused, quality, I think, is what the Tata brand is synopsis with. I want to ask you about Starbucks. Growth was slightly tepid for Starbucks. But of course, I mean, in the bigger picture, it's very clear that Tata is serious about this. Starbucks has become a name, a household name for most. How is that sort of doing? What is the sort of expectation you're setting out for yourself there? FY25 target on Starbucks. Do you think the pickup will be more front-loaded over the next few quarters?
So Starbucks, yes. I mean, we are playing the long game. Number one, so we made a commitment saying that we'll have 1,000 stores by FY28. Now, just to put that in perspective, I think for the first 8 years of the business, from FY12 when we started to about FY20, we added about 200 stores. And last year we added 95. So in 1 year, we added almost half of what we did in the previous 8 years, and we'll continue at that rate for a long time to come. Now, last quarter itself, I think Q3 and Q4 overall were a bit stressed for the QSR industry itself, primarily driven by lack of traffic. I mean, in Q3, a lot of people talked about the World Cup and that happening, but that continued a bit into Q4. The good news is that March came in at better than February, and April right now is trending better than March. So we remain quite confident of the traffic coming up. But apart from that, right now we are at 421 stores, 60 cities, and as we expand, as we populate the bigger cities with more Starbucks, and as we go down, we are making sure that we are tweaking the business models to make sure that it is stronger and better even in face of slightly lower traffic itself. Average ticket per store has not been the issue, it's only traffic. Like I said, it's improving, and at the same time, we are making sure we're making the right tweaks to the business to drive traffic.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj.
Market extends gains for the fifth straight session led by Axis Bank and SBI. Benchmarks end more than 0.5% higher. PSU banks shine, most sectors in the green. Kotak Mahindra Bank CEO Ashok Vaswani writes to employees after the RBI clampdown. Sources tell NDTV Profit. But what's prompted RBI action? Exclusive details coming up. Vodafone's 18,000 crore rupee FPO lists on the NSE. Kumar Mangalam Birla calls it a fresh lease of life for the company. Nestle reports strong March quarter earnings. Profits top estimates, rises 27% on reporting an exceptional gain of 10 crore rupees. Swiggy gets shareholder approval for a 10,400 crore rupee IPO, plans around 6,600 crore rupees via offer for sale and 3,750 crore through a fresh issue of shares. Phase 2 of the Lok Sabha polls will be held tomorrow in 88 constituencies in 13 states such as Uttar Pradesh, Assam, Karnataka, Kerala and Chhattisgarh. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the show aims to bring to you market headlines along with national and international news. Before we move on, let's have a quick look at how the markets have performed today. My colleague Neeraj joins us for a quick market wrap to share with us all of the intraday action. Neeraj, over to you.
Strong sessions yet again. The Bank Nifty up for the fifth consecutive session. The market's doing an encore too. So not a bad day of trade, you have to admit. And the small caps did as well as the large caps did. About 0.8% for the small cap index. So good going really. Pull up the heat map. A splattering of green, very little red, confined to maybe Kotak and LTI and HUL and Titan. Those are the 3 or 4 stocks that stood out. And Kotak, clearly the stock of the day, of the week, most certainly, by virtue of the action that has been taken and the resulting reaction on Kotak. You know, the interesting thing about Kotak was not once in the day did it show any signs of a bounce back. It just went down, stayed down. The only thing is a lot of people say that the damage done today is pretty much the damage that will be done. Sure, another 2-3% can't be ruled out, but it won't have too much of a problem really, Kotak Bank. What did well and thwarting the losses of Kotak were stocks like Axis and SBI. 6% for Axis, 5% for SBI, strong showing there. There was strength in Dr. Reddy's as well as Nestle because of the JV that they've did. In between that, JSW Steel showing that metals too had a spunk. The index was up about 1%, so strong show for metals too. But essentially, Adani Enterprises, Hero, Sun Pharma, essentially a rising tide carried all boats. The BSE 500 list will come up on your screen next, the winners and losers. Some brokerage notes, some result reactions, the likes of Supreme Petro up 8.5% on strong results. Hitachi and Godfrey Phillips had a good day. MCX and Bharat Forge because of brokerage notes from Motilal Oswal and BofA respectively. Mazagon Docks had a good move as well. What didn't do well? Kotak Bank, of course, we know, but Dalmia Bharat on the back of results and poorer commentary down about 7%. Spark continues to languish 5% yet again. Indian Hotels, a result reaction coming in. Weakness for JK Cement and some of the other cement names in the session today. Just want to wrap up with the 1 month chart of Sun Pharma Advanced Research if we can. But even if we cannot, the point I'm trying to make is this stock has been on a lower circuit now for at least 10 days. You get caught in some illiquid names, it becomes very, very difficult to move out. Look at what's happened to Sun Pharma Advanced Research. From the price here all the way to where it's gone, it's been locked on a lower circuit. Sometimes betting on illiquid stocks in hope of gains could actually lead to very strong losses. So you got to be careful about that.
And moving on to some RBI action, the regulatory body has barred Kotak Mahindra Bank from onboarding new customers through online and mobile channels and from issuing fresh credit cards. Now, after this, how are things looking for Kotak Mahindra Bank? And what is consumer sentiment? My colleague Pragati joins us with a quick wrap-up on that. Pragati?
Well, you're right. Kotak Mahindra Bank has definitely been the big story of the day, and NDTV Profit has been trying to bring the exclusive details to our viewers as and when they're happening. In the latest update that we have for our viewers is that the bank CEO, Mr. Ashok Vaswani, has written an email to the employees in which he has acknowledged the need for a robust IT infrastructure. In fact, he has said that the explosive growth in business through digital channels has warranted a need for a completely different level of tech infra. He has also assured the employees that the system or the IT infrastructure of the bank is right in shape, and the bank will try to deploy all the changes that are needed in order to resolve this issue in a short order with the RBI. Now, let us try to bring in some context for our viewers here of what exactly has happened and why Mr. Vaswani's email to the employees is extremely significant. We previously reported, which were also exclusive details shared by us, by me and my colleague Mimansa, that RBI's clampdown on Kotak Mahindra Bank, which happened on Wednesday, was primarily warranted due to problems in the scalability of the core banking issue. Now, the RBI, in its official order, asked the bank to stop the issuance of fresh credit cards and to also stop the onboarding of customers via its online and mobile banking channels. But the entire problem lay in the fact, and that's what sources told us, that multiple outages and the consequent downtime of the online banking system was one of the primary reasons that prompted an action by the regulator on the bank. In fact, sources also told us that about 30 to 40 hours of outages in a year were being reported by the bank, which was way above any tolerance level for a bank's online banking channel. And another factor that contributed to the stress on the bank's IT infrastructure was the high value of UPI transactions. So clearly, there were multiple problems on various fronts where the bank was asked to call for remedial action, but in the event of it failing to do so, RBI had to clamp down and impose these business curbs. For latest news and updates, we'll bring back to you all that is happening at Kotak Mahindra Bank.
And moving on to a stock that did have better luck in today's day of trade, Vodafone Idea closed over 5.5% higher after its 18,000 crore rupee FPO listed on the NSE. Aditya Birla Group chairman called it a new lease of life for Vodafone Idea. My colleague Smriti Chaudhary joins us with more details on this. Smriti?
Well, it's a good day for Vodafone Idea. It's after its 18,000 crore follow-on public offer, the shares were listed today and we saw gains in the share as well. Now, FPO saw strong institutional demand, and on top of that, Aditya Birla Group had also infused about 2,075 crore rupees. So essentially an equity raise of over 20,000 crore rupees. Now Kumar Mangalam Birla, the chairman of Aditya Birla Group, spoke at this listing ceremony this morning, and he said that the conclusion of this FPO marks a turning point in the telecom industry. He also pointed out that Vodafone Idea is now set to stage a smart comeback. Now, just to remind you, Vodafone Idea has been struggling with its huge debt. It has a debt of over 2 lakh crore rupees, and most of that debt is owed towards the government. Now, KM Birla also thanked the government for the relief package. Vodafone Idea is the only telecom company that has converted its dues, its AGR dues, into equity before, and they still have an option to do it again, because they will have their payments, AGR payments, due from the second half of FY26, and we're looking at payments of about 28,000 crores from FY26 itself. So KM Birla also pointed out how important it is to have 3 private players in the telecom industry, and the cycle of investment, this investment that the company has gotten, will trigger a cycle of growth for the company. So essentially tariff hikes and subscribers coming back to the company is going to be a huge plus point for Vodafone Idea if they can manage to do that. But listen in to what KM Birla spoke at the ceremony today.
I think the big one now is to spend the money on capex. The 3 big parts of that is to increase the size of the network. The second is to densify the network in areas that we are present. And third, of course, is implementing 5G selectively across the network. So that's a task cut out for us. I think that we're very happy. This is a new life for Vodafone Idea. And we look forward to being an outstanding service provider to our customers.
And on to the day's earnings. Nestle India's profit for the March quarter rose 27% and topped estimates. The company reported an exceptional gain of 10 crore rupees during the quarter. Let's go across to my colleague Sesha Sen for a breakup of the numbers. Sesha?
Right, so a good set of numbers from Nestle in the fourth quarter. Net profit was up 27%, clearly beating the street expectation. Revenue is up 9% at about 5,268 crore. EBITDA is up 23% at 1,349 crore, while margin has also expanded to 25.6% versus 22.7% a year ago. Now, some of the key business updates from the company were that confectionery, particularly the Kit Kat brand, has propelled India to become the second largest market globally. Milk products and nutrition witnessed strong growth despite inflationary pressures. India has also emerged as the largest market worldwide for Maggi. The beverage business for Nestle has also recorded a robust performance. Now, some other key important highlights from Nestle was that they have formed a JV with Dr. Reddy's. The purpose of the JV is to sell nutritional supplements leveraging Dr. Reddy's distribution network. Now, in this JV, Dr. Reddy will hold 51%, while Nestle will hold the remaining 49%. This JV is expected to be operational in the second quarter. Now, Nestle has overall sustained a strong growth in a tough environment due to lower product penetration in key categories. However, there are 2 key major headwinds. One is, of course, the high prices of cocoa, coffee and milk that may weigh on margins in the near term. And the other is the FSSAI's clampdown on Nestle Cerelac to assess any violation with regards to high sugar levels. This might cloud returns in the near term. What we know so far is that a scientific committee has been formed to examine the issue, and a detailed report on this will be out in the next 15 to 20 days.
Thank you so much for that, Sesha. And with that, let's quickly cut into the press conference for Tech Mahindra that's currently underway.
March against a 2.3 billion quarter ending December. This is the mark-to-market accounting policy. We had 23 million gain because of the revaluation of these hedges. out of which 7 million is taken to the P&L, and the residual 16 million is taken to balance sheet as future reserves. Our cash and cash equivalent was very healthy at 949 million ending March, which was an increase on a year-on-year basis, where we were close to 900 million the last year. Moving to a full year performance, we ended the year at $6,277 million, which is a constant currency decline of 4.7%. In rupee terms, it's 520 billion rupees with a decline of 2.4%. When you look at it from a sectoral perspective or vertical perspective, our communication business declined year on year by 12.4%, driven by the macro trends and some one-time revenue we saw last year. But on the other side, on key verticals, manufacturing and technology both grew year on year, respectively at 7.3% and 1%. In terms of large deal TCV wins for the year, we aggregated at 1.9 billion, which was an increase as we moved towards the fourth quarter. And some of it is driven by some conscious decision we've taken to selectively look at deals as we move forward, which aligns with our portfolio strategy. We ended the year with an EBITDA of 599 million and a EBITDA margin of 9.6%. The EBIT for the full year was 380 million, and the EBIT margin stood at 6.1%. The decline year-on-year basis is predominantly driven by the revenue pressure that we saw. Some of the one-time client actions where they reduced their business as a part of alignment at their end. And then from our perspective, we took some actions on de-risking the portfolio, which resulted in a reduction in revenue. Free cash flow for the year was very healthy at 676 million. And as Mohit mentioned, the board has approved a final dividend of 28 rupees per share, which coupled with the interim dividend of 12 adds to a 40 rupee per share payout. Thank you. We'll now take it to Q&A. Abhilasha. Thank you, Rohit. Thank you.
Thank you, Mohit and Rohit. We will now conclude this stream for those who have joined us on social media. Thank you, everyone, for joining us.
Sort of a mixed set of numbers currently coming in on Kotak Mahindra, but moving on to an update on the re-KYC rules for mutual funds. Sources have told NDTV Profit that AMFI is in talks with SEBI on the issue. We also understand that the asset management companies are exploring options to make an industry of fund-wise KYC. My colleague Saloni Kothari joins us with more. Saloni, what are you picking up?
Right, Pallavi. So before we get into the details, let me first help the viewers understand what exactly is the re-KYC issues. Now, the mutual fund investors were asked to update their KYC and redo it, especially with Aadhaar by April 1st to meet the regulatory requirements, which was initiated by the regulator last year. Now, many investors were unaware of this update, and now they are unable to make fresh investments on the mutual funds front, and they will have to redo the KYC process based on the KYC validation category that they fall into, and then submit the official documents, especially Aadhaar. Now, based on that, this has created a lot of confusion and controversy on the same, as it's impacting investors as well as the mutual funds industry on the basis of inflows, because that's been stopped as well. So we reached out to a few industry sources who told us that AMFI is in continuous discussion with SEBI for the whole re-KYC issue and exactly how to go about it. Now, because inflows are getting getting impacted as many of the fund houses have stopped taking fresh investments, as many of the investors are unable to do so. And also, however, the redemptions of the verified KYCs are happening normally, but what is happening for the non-verified ones is something that we have to look at. And also now, based on all this, the industry is exploring options on how to make an industry-wise KYC, which at the moment looks very difficult, as you know, many of the distributors work with the different bank accounts. You know, when you actually do an investment, a mutual fund investment and the KYC, it will be very hard for you to remember which distributor did you do it through and which was the first fund house that you did it through. So that looks difficult at the moment, but that's an possibility. And also the fund house-wise KYC, which happens currently, but also a detailed version on that. So now SEBI is looking into the ways of doing this. However, this has to do more from the industry front. However, both the parties are involved in the discussions, and they are expecting a digital solution on the matter soon, as it's impacting investors and the industries in a very a drastic manner. So we will be updating our viewers based on the story, as and when it unfolds.
Thank you so much for that, Saloni. And with that, it's time to slip into a short break. But do stay tuned. We have some election coverage coming up for you on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Swiggy shareholders have given approval to raise 10,400 crore rupees via an IPO. My colleague Rishabh Bhatnagar joins us to give us more details on this. Rishabh, what's the structure of Swiggy's IPO broadly going to be like?
That's right, Pallavi. What we have access today are the ROC filings that Swiggy has posted with the Ministry of Corporate Affairs today. What we're seeing is that it can potentially be a 10,400 crore rupee IPO. That means Swiggy could be in the market to raise as much as 10,400 crore rupees. Now, how that is broken down is about 6,664 crore rupees of that would be via the offer for sale route, and the rest, about 3,750 crore rupees, will be via a fresh issue of shares. What it has also mentioned in the resolution is that the anchor round or the pre-IPO, the last funding round that companies usually take pre-IPO, they could mop up about 750 crore rupees in that round as well. These details are very, very recent. The resolution was passed at an extraordinary general meeting on April 23rd. But what we are also seeing is that Swiggy has not filed any of its IPO papers yet with the markets regulator. So it is expected to do that very, very soon. NDTV Profit had earlier reported that it will be doing that by the end of April. Earlier it was reported that it would do it by the end of the financial year, but that has been delayed a bit now. In the run-up to its IPO, Swiggy has also appointed about 4 members to its board, 4 independent directors to its board, and it has also converted to a public company from a private limited company. So we're seeing the process teaming up by Swiggy to get listed on the public markets and actually become a listed rival to Zomato Limited. So we will keep tracking that very, very keenly.
Okay, thanks a lot for that, Rishabh. And phase 2 of the Lok Sabha polls will be held tomorrow in 88 constituencies in 13 states, including Uttar Pradesh, Assam, Karnataka, Kerala and Chhattisgarh. Now, as a part of our election coverage, we're bringing to you an exclusive interaction with P. Chidambaram as he responds to BJP's allegations of the Congress planning to give a quota to Muslims at the expense of SCs, STs and OBCs. Listen in.
Where is that in the manifesto? That we are diluting the quota for SC, STs and giving it to Muslims. Where is that in the manifesto? Every single statement made by the BJP leaders in the last 4 days is completely imaginary. They must show the page, the passage, the paragraph and the words. I've been challenging them publicly in every interview and every tweet. Show me the page, show me the paragraph. None of them is willing to show me the page and the paragraph. Nor are they willing to ask questions, answer questions of journalists. Why are they hiding from answering questions from journalists? I've told several journalists, go to the BJP leaders and ask them to show me the page. They won't answer any questions from journalists. I am sitting before you, and I'm willing to answer questions on our manifesto. Why are they not willing to answer questions?
Right. Mr. Chidambaram, some observers are also saying that you've made huge promises in the manifesto, including income support and also financial support for women. And this wealth, survey or economic mapping is also one way of funding those promises, sir.
Listen, we have done our mathematics. We have done our math. We are absolutely confident that each one of the promises can be implemented over the term of the government. Last time, when we said we will waive agricultural loans, we were ridiculed saying there is no money to waive agricultural loans. But our government waived the agricultural loans to the extent of 60,000 crore. When we started Maganrega, they said if all the people of India volunteer for work under Maganrega, where is the money? We have implemented Maganrega, and the BJP over the last 10 years has also implemented Maganrega. We found the money for Maganrega. The BJP has also been able to find the money for Maganrega. Every program that we announce, the immediate criticism is that there is no money. But we have implemented the programs. So why do you think, having implemented our promises in the past, why we cannot implement the promises in this manifesto?
Mr. Chidambaram, my last question to you, sir. By not talking about the UCC or CAA in the manifesto, it seemed to a lot of us that your party made an attempt to steer clear of being seen as anti-Hindu or pro-Muslim. Do you think that this, politicization of wealth redistribution or economic survey or all that is happening, or the alleged transfer of wealth, do you think that this might cost you politically?
All that is not happening. You are repeating your question. Show me, have you read the manifesto? I assume you have. Show me the page and the paragraph where we're talking about redistribution of wealth. I'm appalled by the insensitivity and the utter ignorance of the BJP leaders. We are talking about social justice, bringing justice to different sections of the people, starting from youth, women, farmers, workers, and the neglected sections. We always mention SC, ST, minorities and farmers. We are bringing justice to each section by making concrete promises. Unfortunately, the BJP's manifesto is not even a manifesto. It's called Modi Ki Guarantee. In fact, the entire document is cult worship.
And in more news on the Lok Sabha polls, the Election Commission has sent notices to Prime Minister Modi and to Rahul Gandhi for alleged violation of the Model Code of Conduct. These notices were sent in connection to the political speeches made by them. The poll panel has sought a response by 11 a.m. on the 29th of April. That's all we have on this edition of The Reporter, but do stay tuned to NDTV Profit for more news and updates, and of course our coverage of the general elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it...
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about your stock-related queries. So write to us any of your short-term questions or the long-term investment strategy, and we'll get them answered by our guests. But before we do that, let me quickly take you through the markets and see what's happening there. You look at the Nifty 50 index, it's pretty much flattish right now, not too much happening there, but with a positive bias nonetheless. You have among the sectors, you have the sectors that are doing well include pharma. However, PSU Bank is on a trot today, up about 1.7%. Again, that was the case yesterday as well. However, on the other end, you have realty that's not doing too well. It's down about 1%. Consumption not doing well. Metals, FMCG, all in the red today. But let's also look at the broader markets and see what's happening there. Definitely, okay, mid-cap has turned to, it's flat, but with a negative bias there. So a bit of a change there that has happened in the last couple of minutes. You have the Nifty small cap index up about 0.6%. So nothing to complain there. Let's look at some of the stock-specific action as well. You have Axis Bank doing quite well in trade today. It's up about 5%. And you look at the Nifty Bank index also. It's not as bad as you'd expect considering what's happening with Kotak. And we'll come to that in just a minute. So it seems like there's a balancing act that's happening on the Nifty Bank index with Axis gaining and Kotak falling. So not too bad there. You look at some of the names that are moving on the back of results. There you have HUL that's down 1.7%. There's LTI Mindtree down 2.7%. Oracle also down about 2.5%. All on the back of not as good of results as you'd expect. Your Vodafone that's turned a little positive now, up about 2%. Started off on a negative note, but after the FPO listing, we're seeing some gains there. However, the focus for today, Alex, is Kotak Mahindra Bank. Can't be ignored. Too big of an action by the RBI.
Yeah, certainly. And if anything, the move on the Nifty Bank, you can, not Nifty Bank actually, the move on the Nifty 50, you can look at it in terms of a tale of two banks, because If you look at the contribution for the Nifty 50, you'll see that the biggest contributor on the upside is Axis Bank. But single-handedly, Kotak Mahindra Bank is causing the Nifty 50 to be flat at this juncture and is contributing about 60 points to the downside right now. In fact, let's talk about the reason for this. And Kotak Mahindra Bank down about 10% even as we speak. Harsh is joining in to talk about why this regulatory action by the Reserve Bank of India is significant and why there is such a big move in the stock price. Harsh, what can you tell us?
Well, thank you for that, Alex. When I'm looking at just the ballpark numbers and the impact, around 3.7% of the portfolio is credit cards. That will definitely struggle to grow because you won't be, or rather Kotak won't be issuing any new credit cards, at least for the 9th to 15th month kind of period for sure. This portfolio has grown at 52% year over year, at least ended Q3 FY24. Q4 numbers yet to come out. So it's low base but very, very high growth. Outside of that, you have their BNPL products which they sell through Kotak 811 and through online channels predominantly. 90 to 95% of them are sold through online channels. And that too has grown significantly quickly, roughly 33% on a year-on-year basis, 8% sequential is how that portfolio is growing. And that will also likely see a bit of a tempering or a slowing down. But I think the largest impact will be on new customers. New customers added over the last 1 year till Q3 FY24 was roughly 1 crore. Which is a 25% growth from 3.9 to 4.9. So that growth might just taper, and that number one would have to wait and watch out for as to where that number is. Because if new customers continue to get added, then likely some of the other products they can continue to do should not be a problem. So some commentary around that will help. But currently we have most brokerages maintaining or just about reducing the target price, not the rating on the stock. So that's the first piece. Now, stock down 10%, 3.3 lakh crore in terms of market cap, 90,000 odd crore in terms of standalone book value, cumulative, and therefore the stock on a consol basis is trading at roughly 2.6 times price to book. Well below its long-term as well as short-term as well as medium-term averages, right. Well below it. Yeah. So definitely something to look out for because the stock has taken a bit of a beating in comparative terms to itself, trading at quite a low in terms of book value.
Absolutely. In fact, that is the story that we're focusing on. Thanks, Harsh, for summing that up. In fact, it's a great time to get on our experts. We've got Shaina Mukaddam as well as Ajit Pishra joining in. Shaina, the first question to you. Kotak Mahindra Bank, a disappointment, not just today, but if I look back from COVID lows, it's not done very much either. Even over the last 5 years, at this juncture, if you're talking about 18% gains, then a shareholder might just have received more if they'd put it in a 5-year fixed deposit. And that's saying something for one of the largest private sector banks in India. What is your understanding of what will happen from this point? Because some are talking about the potential for a buying opportunity with a stock like this down about 10%. Is it that?
Well, actually, if you see even valuations at this